interested in issuing such bonds. Now again, this is something that is making the entire process more streamlined and making the regulations more optimum in terms of entities which are issuing bonds to achieve sustainable and environmental goals.
Well, thank you for that, Charu. But with that, it's a wrap on this edition of Markets Today. India Market Open comes up next. Thanks so much for watching.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters?
good morning. You're watching India Market Open, and what a day. It's all about this individual on your screen, Governor Malhotra. 25 basis points is going to cheer the street, but what will really cheer the street is maybe 50, maybe dial it up 35, like you've been saying, and good commentary.
Yeah, I mean, there are a few people who have said 35, right? That could he do that just to pacify the people who are saying that, hey, more than 25? Or maybe he believes that, no, there is a case for doing it, but the global pieces tie his hands. But Tamanna, I mean, I know we're going to be all over the policy, and we rightly should be, but I couldn't get my eyes off all the posts that have happened between Donald Trump and Elon Musk. What happened to the bromance?
The Elon Trump show was the only show to watch. I don't know what you were watching last night, but there's nothing on any Netflix, nothing which could beat what was happening between Elon Musk and Donald Trump. Whose side are you on, Neeraj?
No, I'm not taking sides, but like I was saying before the show, maybe we should have worn face masks. You, either of the two, I, either of the two, and just kind of showing the hands and saying that, hey, this is what it's come down to. It's just unreal to think that 5 months ago or 6 months ago, Elon Musk posted that game, set and match.
Can I tell you, but if you recall, and we should actually pull out that bite, Ramesh Damani sat here with us and said that it's not going to last. He said it, he called it. He said the way these two individuals are and such volatile characters, it's just not going to last. So,
yeah, but quite something. What posts have been traded? It's unreal. But it's out of a movie, and well, maybe that is what it is.
Yeah, oh wow, that wipe was really good. Let's see it again. There's a very interesting wipe with that's what it all is about this morning. All right, meanwhile, US markets have ended with modest gains. All eyes on the crucial jobs data out on Friday. Maybe all eyes were on what's happening with Trump and Musk instead. But, it was just muted kind of a scene largely. Tesla stock has tumbled 14% as Musk spars with US President Donald Trump on social media, and just some of those posts of what they're saying, and let's see if we can just play out some of those posts. Trump says, I took away his EV mandate that forced everyone to buy electric cars that nobody else wanted, that he knew for months I was going to do, and he just went crazy. That's just some of the things that they've said. Then they've talked about, Trump has come out and said that he's probably going to completely take away all of the government grants that were given to his companies. He comes and says, I'm waiting for it, and that fight is just going on and on. So that was the big story there. Meanwhile, weekly unemployment claims were higher than expected at 247,000 versus an estimate of 236,000. Bond yields have softened ahead of jobs data, 10-year at 4.39%. Crude prices have steadied as US-China trade talk processes bring post-Trump Xi call. Brent was above $65 mark. Let's pull up Asia if we can and see what Asian markets are doing at this point. Very, very muted. India implied also mildly in the red because really the expectation is that we will see something very positive coming from Governor Malhotra, and maybe there is going to be absolutely no great movement before that 10 o'clock session. Now, let's just talk about what else is happening overnight. President Trump has called Chinese President Xi Jinping. Xi has also urged the US and China to avoid conflict over Taiwan and stressed the importance of handling the issue carefully to prevent tensions. President Trump said that President Xi has invited him to China and described the call as positive results. So we don't know what's really going to happen at that point. But meanwhile, let's go across to Richard Harris, Chief Executive, Port Shelter Investment Management. Richard, great to have you on the show. And I know everyone's, been absorbed in the Trump-Elon show, but in real terms, I don't know if it has too much impact. What's more important, perhaps, is, the kind of data we're seeing and the jobs data that we'll see later today, isn't it, from a U.S. market perspective?
Well, I think it's all important. I mean, the Trump-Musk spat, two teenagers fighting with each other, is enormously entertaining. But I think the important thing there is that it's likely to take a lot of Trump's attention. He's dealing with Ukraine, he's dealing with the Middle East, he's dealing with President Xi, and all of a sudden he's having a fight with his best bro. I think we're in a situation where this is a man whose attention span is very limited, and he's likely to be more consumed by the spat than he is by some of these big global political issues. So I think it is important, and I think what we saw yesterday was two key pieces of news. One is that, yes, maybe trade negotiations are starting again with China, and that's a very positive thing. And secondly, the spat, which is going to distract Trump from what he should be doing, which is running the country and doing it properly. So I think those pieces of news really came together to cause a relatively muted rise in the market last night. The jobs numbers, I think, were already in the market, and it is a sign perhaps that things are turning, which I think is likely to be the case from this month onwards.
Richard, sorry, could you just elaborate on that a bit, because it does seem that the labor market is seriously weakening in the US now, but the FOMC has come out and shown its hand enough number of times, saying that maybe it is an inflation targeting Fed and therefore rate cuts are not on the anvil. Would it take a monetary policy resolve to ensure that the jobs seen in the US improves, or is it a cyclical downtick right now and will improve again?
Well, I think if growth looks as if it's going to be affected, then of course the Fed will start reducing rates. The reason they haven't is they have been concerned about inflation. And the job numbers, although my personal view is that they're likely to fall further, weren't quite as bad, I think, as people thought. And I was looking at the Beige Book yesterday, which is what the Fed brings out on what they think the economy is doing. And they were basically saying that, yes, although the job market was slightly weaker, in many areas it hadn't really moved at all. My feeling is that it's likely to do that maybe we're in a little bit of a phony war at the moment in between are the tariffs on, are the tariffs off, are people pre-ordering and boosting economic growth as a result of that. But we're probably going to start coming to the end. So I think you're right in terms of looking at the job numbers. They are important. They're not showing a very serious situation at the moment, but my feeling is that they probably will. And then the Fed is going to be focused more on what's happening on the inflation side.
Richard, how are you looking at emerging markets? Is there any sort of silver lining for emerging markets while all of this is blowing up globally?
Well, I think on the plus side, the weakening of the dollar, which, let's face it, has been very strong, is generally seen to be better for emerging markets, especially those that have a strong dollar link. On the other hand, if growth slows, it has to affect those markets as well. Yes, we have seen some growth as a result of people moving their key supply routes from China to elsewhere. But I think that it's very difficult for these markets really to hold up if the rest of the world has got a period of slowing growth. Now, of course, big markets like India may well be different to smaller markets like Malaysia and Vietnam, because they have a big domestic economy as well. But clearly, it's not going to be particularly good for emerging markets if we're seeing global markets have a slowdown themselves.
That's fair enough. Fair enough. In terms of where you see oil prices going as well, Richard, do you see any kind of instability there, because you have a global recession as the big concern, and that's going to be negative for crude prices?
I think so. I think crude prices have already priced a lot of this in, but there is talk that Saudi Arabia may want to increase their flow. And of course, being the swing producer, that could cause more pressure on the oil price yet again. So I'm not particularly bullish on oil, but I think it's fair to say that there's quite a lot of bad news in the market, just as there's a similar in the gold market, which gold has obviously done very well recently. And it's an indicator, if you like, of stress in the markets too. So I think they're moving in different directions to each other, because generally investors are concerned about growth. They are concerned about potential recession down the road. The numbers haven't quite shown that to be happening just yet, but in a sense, we're just waiting to see when everybody twigs that this is likely to happen.
All right, Richard, we'll leave it at that. Thanks much for taking the time out and being with us. Really
Thank you,
appreciate
guys.
your time. Okay. So lots of news flow from there, right? I mean, there is a bromance ending and maybe the rekindling of a relationship if indeed Trump and Xi manage to do that.
Wow.
My selfish reason out here, Tamanna, is only that if indeed there is some end of the impasse of this rare earth ban and it's happening at the US end as well, does it help other countries? Is it become a stated China policy that they let go of this ban that they've put in place?
I think they're utilizing something that they have very well as a weapon, which is terrible. We have a breaking story coming up on the rare earth magnet shortage as we speak. But just let's quickly look at what yesterday's markets were like before we get to your trade setup and the factors to watch. Nifty saw a good recovery yesterday. We closed about 0.5% up, not half bad at all. What was really firing in yesterday's market was Realty. Nifty Realty was one of the top performers, up ahead of the policy that was expected. The winners of the day included Dr. Reddy's, and a lot of it was driven by positive commentary coming in from brokerages. That was one big move as well. Eternal also on top of the charts. We are going to see a lot of movement on block deals today. Going forward, there are some huge blocks coming up. The other theme that we saw was defense. A Cochin Shipyard, a data pattern, all of them continued moving up yesterday as well. Welspun Living, Welspun Corp, other stocks that really stood out. I would watch out for Hind Zinc once again. Silver at all-time highs, good for Hindustan Zinc. The stock was up yesterday as well. So these were some clear movers yesterday, but today the picture changes because it's all about what happens post-10.
Yeah, I mean, entirely, and nothing more important than that. But, I just thought that our markets, I don't know if you get that sense, but I think I get that sense that our markets are looking very strong. And if you just look at the ease with which the block deals are getting absorbed, 5-10,000 crores a given day, the deals are getting absorbed. There is not too much of damage, sustained damage on the tape as well. So I think that continues, that the markets are looking strong, even if a trending uptick is unlikely. I mean, sure could happen that if Governor Das move and commentary surprises positively, yes, there are rate sensitives which could get a big leg up in the event of this. In fact, I think there was a common theme across the Morgan conference, across the Nirmal Bang conference, across the BOFA conference, that all of them seem to be betting on rate sensitives. In fact, if I'm not wrong, there is a CLSA note today which speaks about real estate, which we'll talk about a bit later on as well. So rate sensitives could get a leg up in the event of a policy surprise. I thought what is looking very weak though is consumption, and data after data is showing that, and by consumption I mean FMCG. So data after data is showing that that pan-India staple companies or manufacturers are either losing market share to regional players or are losing margins or doing both, and therefore that expensive bucket of FMCG stocks, 45 times, etc., will probably not come back. If you compare it to the yesteryears and say that they were trading at 90 times or 80 times or 70 times, and therefore should they go back, I suspect that will not happen. So that's one bucket, independent of which way the policy move is looking slightly tepid, but rate sensitives certainly out there, and markets per se just somehow looking like very, very strong. Sector rotation, institutional belief in India, all of that looking very strong.
Completely. Now, since we were having debate earlier whether you're Elon and I'm Trump or vice versa, I think we should also have a quick bet here on whether we'll see 25 or more. 25 basis points or more.
You're betting on?
I'm betting on more.
You're betting on more?
Yeah.
Okay, I'm betting on 25.
Okay.
No, and not just in order to counter.
No, but it's a sensible one. Yours is the sensible one. Mine is the far outreach one, because the consensus is 25.
Yeah.
The consensus across all polls, our own poll, the Bloomberg poll, is 25 basis points. There are one or two outliers who say there's a case for 50, but I have a feeling that you might see a little more. I don't know, let's see. But, well, that's one of the key factors to watch, isn't it? 25 basis points or a bonanza. Will Governor Malhotra announce a higher than expected rate cut? Growth commentary from the RBI is also key to watch. Do they downtick the GDP outlook for India? keeping in consideration everything that's happening globally. It's also a good time and opportunity for us to figure out whether there has been any kind of an impact of the tariffs so far. So I echo Neeraj completely. I think rate sensitives will be in focus, realty, auto, NBFCs as well. I would add in the financials bucket, positive for NBFCs, not so much for banks if there is a sharp interest rate cut, because it's going to hit their margins. As far as Nifty is concerned, of course, gained second day in a row. It's now looking at, it's closed at key levels of 24,750 and above a key support of 14 and 21-day EMAs. That's exponential moving averages. They've closed below the 14 DMA. For the upcoming session, 24,900 to 25,000 zone will be critical resistance for the Nifty. The zone of 24,600 to 24,500 provides a near-term support to the index. Resistance is at 25,000, support at 24,500. In fact, the Bank Nifty gains a second day in a row and has closed above key supports of 10 and 14 DMAs. Resistance at 56,000 and support at 55,400. But what are the positions on the F&O space being built up ahead of the policy? Puneet is joining us with more.
Well, thank you for that. So what's going to be interesting is a couple of things. First, for the Nifty, Bajaj Finserv is part of the Nifty, and we're going to see the huge block deal of 5,800 crores. So we might see some contribution possibly on the negative side because of such a large deal happening on the Nifty. Apart from that, of course, as you guys have rightly mentioned, the RBI policy meet, the Nifty Bank will again be in focus. And in terms of support levels, 56,000 has been one of the key ones that's giving strength to this particular index, while 55,500 remains one of the positive ones. In terms of long and short positions by foreign investors, we've seen yesterday that there was a turn towards the long side across options as well as Nifty Bank futures for the FIs. When you look at the long short ratio as well, and that's been something that we've been vocally talking about for a while, that it's been largely in the 16 to 17% range and has fallen from roughly about 34% over the last couple of weeks. So FI is largely maintaining the short position and continuing to do so over a period of time. That will be one of the key trends. In terms of the FI data for the month and year to date, and we've been speaking about it, the DIs have given their strength, while FIs have continued to largely remain net sellers over this particular period of time. Finally, in terms of the open interest distribution positions as well, again, not too many surprises here. The 25,000 and 24,800 remain one of the key levels, and that's going to be one of the key supports for the Nifty as well, while the put writing has been seen at that similar level of 24,700 to 800, and that band being largely formed as a key support. Finally, in terms of stocks, both on the open interest distribution gainers and losers, we've seen long build-ups across a bunch of stocks yesterday. Hindustan Zinc getting that positive pivot because of silver prices, so that's one. Largely from the pharma and the healthcare space as well, we've seen some positive long build-up, and a material one to say the least in Piramal Pharma and Fortis Health. While on the open interest loser side, we have seen largely long unwindings actually happen in a couple of banking names. AU Small Finance Bank is one, while ABFRL is the other one, and some short coverings in stocks like SAIL. So again, RBI policy meet being one of the key notices, as well as the Bajaj Finserv deal, that could be some pivot on the Nifty on the downside today.
Okay, so Bajaj Finserv that you talked about, that's my first stock actually on my watch list, because that's where all the action is going to be, isn't it? Promoter entities are planning to sell shares worth 5,800 crores. So it's a big block via open market transactions on Friday. So that's a downtick very clearly. It's a thumbs down for today. Not necessarily a long-term view, but for today this will be a thumbs down, because if you see that much of supply of stock coming in, you are going to have pressure on the price. Bajaj Holdings and Investments and Jamna Lal Sons are offering as many as 3.1 crore shares, or up to 1.94% stake via those block deals. The floor price has been set at 1880 per share, which is at a discount, a hefty discount actually, to the stock's last close according to the term sheet. Bajaj Holdings owns about 39% equity of Bajaj Finserv as of March, while Jamna Lal Sons has a 9.7% stake in Bajaj. So that's the big one. I think what's important to understand, and we'll get a detailed piece on it, is why exactly they're doing this and what they're doing this for. Part of it is for expansion for their alliance deal. So that's something that the street will take into consideration as well. For Praj Industries, the other stock on my radar, it's a thumbs up. The company has signed an agreement with Paraguay-based Enersur SA, that's the name of the company, for a large-scale biorefinery project in Paraguay. The facility will produce ethanol along with co-products such as distillers, dried grains with soluble corn oil, SAF, biogas, and biobitumen. The biorefinery will utilize corn as feedstock with a 600 M3 per day ethanol plant targeted for completion by October 2026. And this is, of course, will also offer comprehensive services including tech licensing, plant design, equipment supply, etc. So it's a big order that they have got, which is why a thumbs up for them. So is it for Bajaj Auto? So Bajaj Group in focus today, at least on my list. This is because of the CLSA note, which has given it an outperform. And they're coming away from the management meet. So they've maintained an outperform rating, target price at 10,149. That's a 19% upside. They say it remains the preferred pick in the two-wheeler space on steady margins and export recovery. They aim to gain market share in 125cc segment led by model refresh in Pulsar. Plans launching Chetak in the 3 kilowatt battery capacity to gain further market share, and management is confident of growing export volumes by 15 to 20% in FY26. What's key to watch is the turnaround in KTM by 2026 post the recent plant restructuring. So those are the three on my radar, and I reckon Bajaj Auto or any of the two-wheelers, even as an outcome of interest rate cuts, would be in focus.
Yeah, most certainly. I mean, like we discussed, I mean, almost everybody is saying that rate sensitives it is. So keep an eye out for that. But I must say, if it is rate sensitives, it's also blocks. And you know, one more block in addition to Bajaj Finserv is ZF Commercial, right? Promoter of APCO is going to sell 3.13% stake at worth about 720 crore rupees. At the floor price, though, is at a discount to the about a 10% odd discount, right? So 13,323 is the current price. The floor price is 12,000, which is at about 10% discount. So that's a sharp one. So keep an eye out for ZF Commercial. IREDA is the other one. The fundraise of a 5,000 crore through a QIP route. They are not intent on giving a discount higher than 5%. So the floor price 173.83. That's about the discount that IREDA is giving. If it gets absorbed well, then maybe, just maybe, there could be some upticks, who knows. Inox Green Energy is the third one. I highlighted this yesterday, but the promoter entity is keeping on buying. At a point of time when promoters are selling stakes, here's a promoter entity which is buying the stock at lower levels after the numbers came out. So another 10,000 shares, it was 12,000 day before yesterday, and more before that as well. So interesting one there. I'm just highlighting, taking the liberty of highlighting a fourth one to keep an eye out for. And we mentioned about DB or Valor Estate so many times yesterday on open and close, but there's an NCLT hearing on the hotel demerger today. So we'll of course give the news out when it comes out on NDTV Profit, but it's something you want to keep an eye out for. Tamanna, there's one more thing here. I mean, yesterday the capital market index, the NSE capital market index was so active. And one of the reasons could be this, right? The number of blocks that are happening. Oof. You see activity out there, right? Broking activity, block activity, investment banking activity. Maybe that is one reason why the fees that these guys will earn, and all of these guys participate in the blocks,
will be massive.
Yeah, so it could be a good quarter for them.
Yeah, gravy train for the capital markets play. And another idea to look at, I mean, the whole block deals in itself is an interesting story, because why are promoters selling at these prices? Now, let's talk about the big story this morning, which is RBI. RBI's 6-member Monetary Policy Committee will announce the outcome today. Experts believe that a 25 basis point cut seems most likely as the central bank looks to further support credit growth and economic momentum. If approved, it will be the third straight rate cut by the RBI. Vishwanath Nair joining us live from RBI on Mint Street this morning. Vishy, what's the mood looking like?
Right, Damana. So I'm actually standing with a different background today. This is the rupee symbol that the RBI had launched, had inaugurated a few months ago. But interestingly, that new, fresh background is probably what is happening up there as well. The broader discussion points are happening in a completely different economic scenario than what was happening in the last monetary policy and the one before that also, the one in April and then the one in February as well. Remember that broadly the liquidity scenario seems to have improved significantly. You're sitting at a surplus of about 1.6 lakh crore. about 0.7, 0.8%. Yesterday, briefly, it went up to 1% excess liquidity in the system. And alongside that, you've got the Q4 GDP reading at about 7.4%, which broke all expectations and went ahead with a strong economic growth momentum, at least for FY25. Now, FY26 is a different story. The broad uncertainties that the RBI governor spoke about in the last policy seems to have changed. Currently, the things don't look as uncertain as they were maybe even 2 months ago. So therefore, there is going to be that playing on the MPC's mind as well. Having said that, inflation is currently way below the 4% target, close to about 3.2%. So obviously, that is going to aid any discussions around a rate cut conversation. 25 basis points seems to be given. 50, as you said earlier, SBI research seems to suggest, SK Ghosh believes that that's a better signaling tool for the RBI to the market than a 25 basis point rate cut, which is sort of a regimented number now. So will he deliver that bumper jumbo rate cut and surprise the market? Something that's interesting. I also heard you guys talking about foreign investors in the equity markets. That's actually a topic of discussion at the RBI as well. Basically, there's going to be some amount of conversation about news reports coming out that the RBI is becoming more comfortable allowing foreign investors to come and own Indian banks. So that we will see whether the RBI governor makes any comments about it or not. My bet is that he won't actually specify what he's going to say, but of course we'll watch out for the 10 a.m. statement and then the 12 p.m. press conference.
Yeah. Vishy, if you can just pan the camera, I want to actually see that new installation which is behind you. It's looking very interesting, and you know what RBI has.
Okay, let me show it to you.
Yeah, it would be nice to see it. If we can just pull out and look at that big rupee sign.
Interestingly, this is just one. This is just one. There's another one which is the tiger in the RBI logo. So they have another one there, just a few steps away, and that would also be an interesting monument. I mean, so one of the thought processes, what I heard from insiders is that this is a good selfie point for a lot of people, because otherwise it's only the RBI tower. So the symbol, the rupee symbol, and the tiger just a few steps away makes for an interesting sort of Instagram post, I guess.
Wow, fantastic!
Vishy, are you taking the selfie?
No, I'm dead against putting my face on Instagram. People don't want to see that. So,
for a public figure,
I know. I think people are seeing enough of you, Vishy. Don't be shy. All right. So the new spot for selfie spot on Main Street.
I love my RBI.
It's a good idea. It's a great idea to get better outreach. Okay, Lakshmi Iyer joining us this morning, CEO Investments and Strategy at Kotak Alternate Asset Managers. Lakshmi, very good morning to you. The real outreach would be if rates are cut, and rates are cut significantly. We have a bet going on. I know I might lose, but I'm on the side of more than 25 basis points. Neeraj is sticking to 25 basis points.
Hi, good morning, Tamanna. Yes, if it has to be, in market expectation parlance, will RBI do a jigra to do 50 basis points? Stars are aligned, the stage is set, vegetable prices are cooling off. So I would say that you have all the ingredients for the perfect recipe of a 50 basis rate cut today. However, will they want to be more predictable and do a 25 in line with consensus and market view? It's a very close call, honestly, if you ask. But who knows? Outer chance of 50 still remains, but 25 it is for now.
Yeah, Lakshmi, the reason I thought that it would be 25, right? And I laid the bet with Tamanna. Although she's never paid up on the previous losses, so I don't know what I'll get in return. But
my good wishes.
See, again, but now you know the person you're dealing with, yeah, Lakshmi. Remember when you place a bet with Tamanna. But here's the question. The reason I thought it would be only 25 is because, one, yes, vegetable price is cooling off, but not quite cooled off. Does he wait for the print to show up? Part one. And does the MPC wait for the print to show up? Part one. And part two, because the US Fed is still on the path of not wanting to cut rates. So that differential, etc., comes into play. And hence I thought maybe 25 with the dovish commentary might be the template.
For sure, Neeraj, so I'd say 25 with dovish commentary is not good enough for markets to move either direction today, because that's pretty much priced in. But let me give you two things to ponder about. If you look at ECB, they have cut rates the 8th time, and they are cutting rates despite the fact that inflation was higher than their target. Eventually it's kind of got to there. And even if you look at, and I'm in Sydney today, so I can tell you how the minutes of the RBA panned out. There also they contemplated a 50 basis points rate cut, and of course got vetoed in favor of a 25 basis. So it's not that the rest of the world is not thinking in that direction. So I won't be surprised, though the base case vote is still for 25. I'd not be overtly surprised if we actually, the wager actually falls in favor of Tamanna today.
Okay, I will definitely collect, whether you will or not.
No, I mean, if that sounded harsh, she's given me a coffee a couple of times, so
and
I'll give it to them.
I'm only asking for a coffee, so that's fine. But Lakshmi, I think the commentary on growth is something you reckon we should watch very, very closely, because that's where things are not looking as certain. Yes, India will be the fastest growing economy this year as well. But the fact is that there are a lot of global headwinds that we don't yet know how they will turn out.
If you look at Q4 earnings, it's not been that bad. If you look at the last quarter GDP growth numbers, which got released last week, that was also not that bad. So I'd say that given, let's take the rate action out of the way for now. And what will the market focus on? Is there going to be a small bump up in growth? See, any small steps taken in that direction is definitely a welcome positive. Will they revise inflation assumptions a tad on the lower side? And of course, liquidity markets are not expecting as much. So I'd say we're still the fastest growing economy in the world, but how are we going to retain that? And given that we have incipient signs of consumption picking up, they wouldn't want to, probably distort the apple cart too much. So I think these are going to be the bigger watch factors for the markets today, just not the rate action per se.
Lakshmi, Vishy made an interesting point about how the RBI is probably getting a bit more comfortable with foreigners owning banks and banking stocks, etc. Forever a point of conversation, right? About what's the limit, how much is exercised, what is the direct, indirect implication of this. Is this a positive, or are you net neutral on this?
No, I'd say it is a positive while we are not completely dependent on foreign flows in the country, whether it's stock, whether it's owning the basket, or whether it's owning a particular sector. I think the recent standpoints that we have seen from policymakers are incrementally demonstrating their openness and their willingness to have some of these. So I think it's definitely any form of capital which finds its way into the system, if it is of durable nature. Of course, between FPI and FDI will be the more preferred route, but certainly it's always with respect to capital, it's Atiti Devo Bhava.
Okay, so Lakshmi, but you didn't tell us your thing, right? Last, and you said it may fall onto what Tamanna is saying, but very likely it'll be 25. So you're kind of wagering both ways. So next time we'll have you in the studios. So let's lay a bet with you as well. It's a three-way bet. What are you penciling?
No, I would still go for a 25 with a dovish kind of a tilt, which can leave the room open for further rate cuts. Some sections of the market are wagering on a pause, probably in the next policy. It's going to be incrementally data-driven for sure. But yeah, 25 with a dovish outcome for now should work.
So, Tamanna, Lakshmi will be in the studios the next time at the policy, right? Because we used to have her in the past. She's right now in Sydney. And Lakshmi, on your behalf, I'm taking this bet as well, that if it's 25, then Tamanna gives a coffee to both of us on that day. And if it's more than 25, then two of us over coffee to Tamanna. How's that?
That's perfectly fine. We will do it in the Mumbai studios. For sure.
Done. Looking forward to that. Thank you, Lakshmi. Always a pleasure to have you on. Lakshmi Iyer there talking about, but she did take kind of both sides. She's
but which is why I asked her. Which is why I asked her, what is it that you're finally doing? So she said 25.
So, matlab, dil mange more, but hone wala hai 25. Let's see. Well, time for a very short break, but before we get into that break, we just have to recap for you all of the social media insanity, I think I have no other word for it, of what we have seen overnight, where, okay, so we've put this out beautifully. Take a look at some of those graphics on the fights that have taken place overnight, where you have Donald Trump saying at a press meet, look, Elon and I had a great relationship. I don't know if he will anymore. He knew the inner workings of the bill better than anybody sitting here. He had no problem with it. Just for context, all of this has started because Elon Musk, after he's left Doge and the government, has started criticizing the budget bill, the one big beautiful bill, and that's something which Trump is not liking. So he's basically saying that we're going to cut EVs, the EV mandate, and that's what is bothering Elon. I'm very disappointed in him. He actually calls him crazy at some point. Elon responds saying, false. This bill was never shown to me even once and was passed in the dead of night so fast that almost no one in Congress could even read it. Then Trump comes back and says, time to drop the really big bomb. That's what Elon says. Donald Trump is in the Epstein files, and that's the reason they've not made it public. But have a nice day, DJT. So they've just been going on and on. In fact, Elon didn't stop over there. He said it's time to create a new political party in America that represents the 80% in the middle. So you've had then Trump come and say the easiest way to save money in our budget, billions and billions of dollars, is to terminate Elon's governmental subsidies and contracts. I was always surprised that Biden didn't do it. Donald Trump is now directly attacking subsidies that Elon's companies get. That's why the stock was plummeting. And he goes on to say, in light of the president's statements about cancellation of my government contracts, SpaceX will begin decommissioning its Dragon spacecraft immediately, says Elon. So this is getting serious. And he also says that Trump tariffs will cause a recession in the second half of this year. So it's an ugly situation which is developing. We'll take a very short break. On the other side, happier things and not so many fights, because we're hoping for consensus in the MPC, and hopefully for a bonanza coming from the RBI. What is the stock pick that you should have? What is the play in the markets in the first couple of hours of trade? All of that when we come back.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company. Powered.
Welcome back. You're going to see a bit of a downtick on open, but remember, you had a good closing yesterday. Key levels were maintained by the Nifty. Maybe about a 12-point downtick is what the implied is showing. But I wouldn't take it too seriously at this point, because we'll see how the markets move forward. Kush Bora joining us now of kushbora.com, and Aditya Shah of Hercules Advisors also with us on the show. Welcome to both of you, and thank you so much for speaking with us today. Kush, let me start with you. You're very formally dressed for a Friday. I mean, we always have to, but I think you have some interesting meetings or important meetings after this.
No, not that. In fact, the viewers wouldn't know this, but they think everyone in front of the camera calls the shots. I can promise you the guys behind the camera do. Every time I come, hoping to wear just the tie and the shirt, and then someone behind the camera tells me, "Nahi sir, shirt to pehenna, blazer to pehenna padega," and I end up with a combination of all three. Okay. So that. But rather than any other joke or anecdote, today I've come with a very serious proposition for the both of you. Correct? I have come up with a very brilliant scheme. It's very safe, and it'll double your money in the next 1 month. Are you guys taking it?
Is this AI Kush or real Kush?
I realize I might have just given some input to whoever's making those AI videos from a very real me.
Yeah.
So, any takers? No. I took a dipstick survey in the studio, and I found that there were some takers, at least behind the camera. Okay.
Really?
No, the reason I say that, and if you didn't catch the drift, this is kudos to your campaign on the deep fake that you've done. It is absolutely brilliant. It is the need of the hour. Let me also add something to that. Markets चलना शुरू हुए नहीं कि आपको वो free वाले SMSs आने शुरू हो जाते हैं. You know those ये वाला stock ले लो, it is going to fly, it is going to double, it is a multi-bagger. So just adding on to whatever you and your team have already put out in the deep fake campaign. Don't do that. It's your hard-earned money. The lure I can understand is too high. It's very tempting, but stick to reliable sources, and by that I mean channels like NDTV Profit. Everyone who's a SEBI-registered entity, stick to those. And if I want to turn the heat really up, and if you want to see an instant reaction, let me also add one more modus operandi to that. Whatever comments you get, even on these YouTube channels, especially on the business channels, where the lure or the mention of a stock which is about to run very fast is very high. Just be a little mindful of those. Free mein kuch nahi milta.
We see it a lot on our YouTube comments as well. People trying to lure our viewers into some of their schemes. But that's really, thank you for pointing that out. And that's something that we want to do on this channel. Tell people to not fall for fake AI generated, get-rich schemes. Because if it's too good to be true, it probably is too good to be true. But having said that, Kush, let's get your levels this morning.
Yes, this is not a quick, get-rich-quick scheme, the markets, right? And certainly not in the current scenario where the markets are consolidating at the moment. Now, what's happened is it's a very interesting setup where Nifty is hovering around the 20 DMA, and the FII short positioning is continuing to rise. From about 16 or rather about 82 odd percent, it's now up to 83%. That's not a healthy sign. That is keeping the lid on the upside for the markets. The PCR is at 0.8, and we know from about 0.7 typically oversold territories, you do get a rebound. So you could read the FII short in both ways, which is one, it's keeping a lid on the upside, but on the other hand, if it does slip a little, you might see a short covering rally. I fall in the more optimistic camp where, if there is any pullback, and as we've seen in the recent past also, that, if the Nifty dips towards 24,500 or thereabouts, you do get a pullback, you do get a bounce. From there, the risk-reward ratio becomes very exciting. So from that perspective, I still remain bullish on the Nifty. However, I want to see some key resistance levels taken out, which is 24,800 on a closing basis, 25,000 thereabouts, and then you will see a meaningful uptick. That said, even if that does not happen, as we've seen for the mid and the small cap space, as long as the Nifty consolidates within a range and does not give up, you will see stock-specific action continue. I've heard a lot of conversation today about the RBI policy outcome and how markets could react. I just have a feeling that if the outcome is in line, which is about 25 basis point and maybe more of a neutral commentary, then I think there could be some profit booking that could set in. Let me just give you an example. Yesterday, the bank Nifty was up. But that is only on the back of two stocks, which is ICICI and HDFC Bank. 10 other stocks, the constituents were actually, they actually closed in the red. So be a little mindful. Unless 56,000 is taken out, you could see a range play continue on Bank Nifty as well. 54,800 on the downside and 56,000 on the upside. So bias remains positive. Pullback should be taken as an opportunity to go long.
Okay. So in light of that view, Kush, what are the stock recommendations for this morning?
Still,
and sorry, just to repeat that, are you initiating these trades on open or would you do it after the policy decision is out?
Great. So what I've done is very consciously, I've not picked stocks which are per se rate sensitive.
Okay.
So Jindal Stainless and PCBL, just to name the stocks out. And I'm still going long because the long stock-specific approach is playing very well while the index is consolidating. So on both of them, Jindal Stainless for targets of 695, 715 and a stop loss around the 655 mark is a long. We've seen traction in metals. This one also kind of starts to stand out now. And PCBL has also started to come up when 200-day moving average conquered. So for levels of 442 and 460 with a stop loss around the 410 mark, PCBL is a long.
So PCBL is one of the picks that Kushpora has. But let me go across to Aditya Shah as well, who's also with us today. Aditya, would you look at the rate sensitives more closely? We already saw realty buzzing. Do you expect more action there?
Definitely. So I think the real estate sector, for that matter, the banks also, they will continue to do well as interest rates continue to keep moving down. I think banks or NBFCs, all these companies would do exceptionally well. Autos and banks will also do, autos and real estate companies will also start to do really well. So they have been on my radar, companies like Godrej Properties or some auto ancillaries. Exactly the reason why I wanted to invest in the auto ancillaries, not only in India, but across the world as we embark on an interest rate cut cycle, all of these companies will continue to benefit. So I am positive the interest rate sensitive over a period of 6 to 12 months as the interest rate easing of cycle continues in India as well as in the US in the coming 6 to 12 months. The slowdown that we have seen across sectors will start to ease off a little bit over a period of time.
Okay. Now, the other big story of the day, and I'll be keen to know Aditya's view on that as well, but let me first go across to Harsh. One of the biggest stake sales, promoter sales, whatever you want to call it, of the season is Bajaj Finserv. Two promoter entities of the financial services company are set to sell nearly 2% of the company via block deals. Now, if you hear 2%, you'll be thinking, why am I saying it's one of the biggest stake sales? It's because look at the size of it. It's 5,800 crores. Harsh joining in with all the details. What do we know, Harsh?
Well, so it's two entities of the Bajaj Group which are going to be selling stake in Bajaj Finserv, as you correctly said. It's going to be, the floor price for this is going to be 1,880 rupees a share, which is roughly a 3.3% discount to yesterday's close, reflecting on your screen of 1,944 rupees per share. The full deal size, as you correctly said, was 5,828 crore. In terms of how much both of these entities own currently, Bajaj Holding, which is the listed holding company of Bajaj Group, holds 39% in Bajaj Finserv. And then you have Jamnalal Sons Private Limited, which is a private limited company, of course, as the name suggests, holds around 9.7% stake in Bajaj Finserv as of today. Why are they doing this? It's to fund the acquisition of Bajaj Allianz General and Bajaj Allianz Life. Allianz is exiting. As part of that, there are going to be group entities who are going to be coming in and purchasing the stake. First entity which will be buying stake is a Bajaj Finserv, which will be buying only 1%, taking its holding to 75+%. You'll then thereafter have a Bajaj Holdings, which will hold just a shade below, or rather acquire fresh just below 20%, and the balance will be held by Jamnalal Sons. In terms of the quantum, and I'll talk only about Bajaj Holding here because that's the listed entity, Bajaj Holding will pay to Allianz 10,574 crore rupees for the general insurance arm and 7,980 crore rupees for the life insurance arm. And therefore, the total consideration being 18,554 crore rupees. Part of this likely to go for funding that acquisition.
Okay, Bajaj Finserv, expect a downtick, of course, when that sizable number of shares come in on the street. But nevertheless, Aditya, fundamentally, how do you look at the stock and all of these developments?
So this is the process of Allianz exiting out of Bajaj Allianz joint venture and Bajaj Group taking over the stake. I have no doubt that the Bajaj Group will do exceptionally well in their insurance business, even when the Allianz Group moves out. However, within the insurance space, I feel that better companies are available where you can invest. For example, in the life insurance space, You could look at somebody like an HDFC Life. The stock has broken out, and I believe that it will head to 1,000 rupees shortly. So my opinion is, although a fantastic company, I look at Bajaj Finserv as a holding company for Bajaj Finance, and if there is any correction per se within Bajaj Finserv, that's an opportunity to add. With a view, with a longer term view for 3 to 5 years. Mind you, Bajaj Finance is not a cheap stock. It's a highly fantastic company, which is valued very, very expensively by the market. So net, if there is a fall in the stock, it would be a buying opportunity in a longer term, and I expect Bajaj to do really well once Allianz is out of the business.
Okay, and and the other way to think of it is because it's procedural and maybe known, and because it's a marquee group, but if it's absorbed easily, could it actually spur the stock higher after the deal is done? So remains to be seen. We'll start off lower. Let's see the kind of response it gets, and then maybe there is buying or no. Just very quickly on that, Kush Bora, the very quick other thing is ZF Commercial and IREDA, the two other things with a QIP and a block to it. Are charts showing any support? In ZF's case, it's a 10% discount. In IREDA's case, it's a 5% discount. Either one of them is fine.
So I think I would prefer an IREDA because it's sustaining above some key levels. It's also seen an uptick over the last few 8 or 10 sessions. ZF Commercial, on the other hand, is actually seeing resistance around the 13,700 mark. So just be a little cautious on that. But yes, IREDA is placed rather nicely. Supports near the 165 mark. If that holds, I think another round of bump up is very much likely on IREDA.
Okay, by the way, as we speak, and speaking of blocks, just before we get to an exclusive piece of news, just watch out for this one as well, because 2.85 crore shares have exchanged hands in Bajaj Finserv in the block. I'm just trying to get, 3.1 crore shares were supposed to happen. 2.85, I'm guessing some slippage, some this, some that, here and that, but the block is done effectively for Bajaj Finserv. Now, we'll get to know in the pre-open session how the stock is reacting to this, but absorption has happened for Bajaj Finserv. Very interesting. Okay, on to more news and updates. Let's go on to an NDTV Profit exclusive. The Prime Minister's office and the Indian Embassy in Beijing are working to secure a crucial meeting between Indian automakers and the Chinese Commerce Ministry. This is to resolve the issues over the export ban by China on critical rare earth magnets that have left automakers struggling for supplies, or at least in the future. Remember, we had brought you the exclusive news yesterday that automakers had rare earth magnet inventories for just the next 30 days. Hear out this piece.
India's auto industry is getting all the help it needs to tide over the Chinese ban on rare earth exports, so much so that 7 Lok Kalyan Marg has now stepped in. According to sources, the Prime Minister's office as well as the Indian Embassy in China are now working with a delegation of Indian automakers to set up a meeting with the Chinese Commerce Ministry in Beijing. That's according to sources. Apart from that, at least 3 government ministries, that is the Heavy Industries Ministry, the Ministry of External Affairs, as well as the Ministry of Commerce Industry, are also in discussions. Earlier, we had reported that a delegation of 50 members from car makers and industry bodies, ACME and SIAM, were supposed to go to China this week, but that didn't materialize. What the future steps will be there, we will keep on reporting it to you.
Okay, so a lot happening on this right now, as government is going to be pushing every way to make sure that we're not so dependent on China, and some updates that you have also just seen, Neeraj.
Yeah, apparently a PLI has been announced for rare earth mining as well. So I think all hands on deck.
All hands on deck, but having said that, even if you announce a PLI today,
3 years.
It's going to be 2 to 3 years at least. Now,
Agreed.
here's what the Commerce Minister Piyush Goyal said. He's in Italy right now, and he said that the mineral monopolies by countries pose a danger to the global economy.
I think it is important that the world recognizes the dangers of critical mineral supply and processing being concentrated only in particular geographies, which at any point of time can hurt economic development. Also, we have a lot of encouragement given to startups, to R&D, to new innovators to find alternate and smarter solutions so that our over-dependence and over-reliance on certain critical minerals can reduce.
Okay, so now there's some clarity coming in on what will be the impact of this. Citi says that implications of disruption in rare earth mineral supply chain is likely to impact auto production in India. CM has noted that if there is no resolution soon, production could be impacted within the next few weeks as inventories of rare earth magnets are declining. OEMs and part makers have expressed concerns. EVs are expected to be affected more by unavailability of rare earth magnets. There could be some impact on ICE vehicles as well. Citi says they would watch for news flow on the progress of clearances for companies that have applied for end user certificates. So Aditya, just want to get your sense, this is not something that is impacting stock prices right now, but it is something that is brewing, isn't it?
Definitely. So what the government's idea is really very correct, that no one country can have a monopoly, as semiconductors have started to diversify away from China and Taiwan. These rare magnets are also really very important, not only for IC and CNG cars, but very, very important for EV cars, which is the future of mobility across the world. So the government has given a PLI scheme. I don't think it will take 2 to 3 years. I think it will take 5 to 10 years minimum for India to start to mine these metals. So mind you, India is also rich in these metals, but India does not do a lot of mining of this metal for various reasons. So the government will take about 5, 10, 15 years of good policy. Then India will start to become self-sustaining in these areas. However, in the shorter term, this may be a negative and a buying opportunity for all of these auto companies.
Okay, we move into a short break for now. Stay on, gentlemen. We'll be right back with the pre-open rates.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market mover.
All right, we're going to be speaking on the auto sector and what the outlook is. I mean, it's an important time for the auto sector because quite a few factors now coming together. We're going to be speaking with CS Vigneshwar, President of FADA, in just a minute, and their data is out for the month of May. Those numbers will be on your screen shortly. But also what's happening with demand in terms of monsoon. If we have a downtick in rates on credit policy, on monetary policy, will that help? So Mr. Vigneshwar, let me start by asking you what the month of May has been like.
The May has been a little bit of a tepid kind of a month. The overall growth rate year on year has been at about 3%. Of course, the two-wheelers did great. They grew at about 7% and three-wheelers grew at about 6%. But we did see a lot of headwinds in the passenger vehicle segment where it was a degrowth of about 3%. The commercial vehicle segment again was a degrowth about 3.7%. And for the first time, we also published the commercial equipment data, and we also saw a degrowth there at about 6%. So overall, it has been kind of a little bit of a disappointing month, but there have been certain factors which are to look forward to positively in the months to come. But however, May also had issues which were connected with the India-Pakistan border tensions, because we also saw that the border states like Gujarat, Jammu and Kashmir, Rajasthan, Punjab have a relatively damp month in terms of passenger vehicle sales. The first 10 to 12 days, there was hardly anything at all selling. But then slowly the customers started coming back and we started selling vehicles even in the border states.
Okay, so there is an improvement in the border states. When we look at some of that data as it comes out, volumes, retail volumes are up 5% year on year. Growth is led by two-wheeler sales, up 7.3%. Passenger vehicle sales are truly tepid, just up 3.1%. And commercial vehicle sales are down 3.7% year on year. Tractor has been okay. I think month on month, you've had a slide downwards.
Yes, so it isn't something to be worried about because it's a one-off month. But there's something which we need to talk about, of course, is the rare earth mineral availability and the magnet availability, which seems to be having all the industry talk about it. Even SAM and ACMA have talked about saying that if we don't get the supply straightened out, plants might get into shutdowns by end of June. Of course, there was Maruti also commented, said they have a couple of months of production assured. But however, I think we probably need to work out with the Chinese government. Our government needs to probably liaise with them and sort things out. Otherwise, we might have to look into plant shutdowns. So at the moment, I urge the customers to get into dealerships and buy the
1 minute, Mr. Vigneshwar, this is important. When you're saying that there may be plant shutdowns, is this what you're hearing when you're speaking with OEMs?
It's open news. SAM has already put out that news saying that in case the supply chains don't get sorted out, there might be plants which need to shut it down. So this is not from our association, it's from the Manufacturers Association. So it's in the public domain. So this needs to be sorted out. Otherwise, we are looking at some amount of disruption in automobile production.
Okay. Mr. Vigneshwar, just one quick word. I mean, any initial feelings? I mean, while we look at this danger of, or this issue of the magnets not being available and the impasse ending process happening as well, what is the consumer demand looking like in the very near term? Let's say, how has June started off because monsoons were earlier, etc.?
The monsoons have been good. I think it's been at about 106% of rainfall already been received. But we see that it's not evenly distributed. Sometimes we receive excess rainfall in certain parts and certain times a drought in certain parts.
So what's the impact?
But overall, it's been... The impact, I mean, I can't judge the impact by number of
what I mean is the consumer demand being soft because of the early monsoons?
Not really. There are walk-ins are quite strong, so we are looking at it. Another thing also which has happened is the Kharif crop has been a 3% hike in the minimum support price, so which again helps in the rural demand. But the urban demand is facing a little bit of headwinds because of cost of living, hasn't gone down drastically, and that salaries have not kept pace with the increasing cost of the car. And we're also seeing some kind of a tightening from the banks. They still haven't loosened their purse strings. Is becoming the takt time of getting a loan is becoming longer. So perhaps the government needs to look into the banks and how they can ease lending from their side.
Okay, thank you so much, Mr. Vigneshwar, for speaking with us. So Farda saying May has been muted, definitely been muted, and to some extent border areas because of the regional conflict, border areas saw muted sales as well, but that's now picking up. Auto is going to be in focus. Let's see what's moving this morning. Vaibhav Global, Cochin Shipyard once again showing buzz. This is just the first 4 minutes of trade, so keep that in mind. You're seeing, I'm spotting a City Union Bank moving, a Suzlon, JSW Energy, JSW Holding, both JSW companies. There was a deal that was announced for JSW Energy, if I'm not mistaken. Maybe that is seeing some impact. L&T Finance, 361. Those are some of the early movers. No very specific trend that I can spot so far, but anything that you're seeing interesting, Kush, in the first few minutes of trade, or pre-open trade, that is?
Too early, Tamanna. I'd actually wait for 9-8, some of these rates to settle down, and then perhaps look at some of these names. But very interesting that you mentioned Cochin, because I think we've been debating about when to start booking profits in some of these names. I think the time is now. I'm not saying that exit them completely, but a partial profit book is a good idea. A lot of these names are on highly elevated levels.
I want to look at some of those blocks, and let's pull up details of those block deals. IREDA, ZF, both going into blocks today, and if we can get some of those graphics on our screen on what those block deals details are, we'll talk about them as well. ZF Commercial for one, the promoter WAPCO is selling 3.13% stake worth 720 crores. The floor price is at 10% discount to CMP at 12,000 rupees. They have 6 lakh shares changing hands in 7 blocks. As far as IREDA is concerned, it's a fundraise for IREDA. So they're raising funds via QIP. It's all set to raise funds for their expansion plans. Street not too excited about their fundraise of 3,000 crores of IREDA. It's 1,500 crores actually is what the fundraise is, and it will be finally built up to 3,000 crores. That's the upsize option they have. Street is not moving too much on it right now. But I want to talk about Bajaj Finserv, because the floor price, the price of the block is much higher than what the floor price is. So which is why, even though there is a large amount of stock or shares coming on, I think you might see an uptick on Bajaj Finserv, because that's the details we're getting. Yeah, absorbed well.
Absorbed
and quite
well.
A few takers for it.
Yeah. I mean, since the deal got done like this in the block open window, suffice to say that this is one thing that's happened. Also, maybe 3%, and they would have done their checks, hopefully, seemingly so, around this. So, I wonder if, and Aditya spoke about this, but Kush, is there a trade in Bajaj Finserv the way it's starting off?
Neeraj, I'll hold on. I'll hold on to that trade. I'll wait for that trade, because even if you discount that trade bit, and if you look at the kind of moves that the stock has made, it's actually very close to the levels that it was mid-October 2021. So you're just about getting your buy price. If you entered at those levels. So I might want to wait out a little. 1900 is a good support zone. If that is maintained, it could gradually move up. But I don't see a very big momentum coming on to this one. Maybe Bajaj Finance. If it actually corrects a little, then it becomes interesting. But Bajaj Finserv, you might want to just wait up a little.
In fact, this is something Harsh pointed out, that you're seeing one of those blocks of 2.85 crore shares at 1925 a piece. The floor price is 1880, so just barely any discount. Harsh, in fact, joining us for the big brokerage call of the day, but your observation on what we're seeing with Bajaj Finserv's block so far as well, Harsh?
Well, yes, it's likely a positive, frankly, because it's just a 1% discount and the blocks are done. So it's actually cleaned up very, very well, it seems. I mean, you're seeing that in pre-open, that reaction. So that seems evident, actually. So yes, so that piece. Let me quickly go on to the big brokerage, actually, because MOSL on Bharti Airtel, this one stands out as a downgrade coming in there. They're saying, now they've downgraded it to a neutral. They're saying that since initiating coverage on the stock by Motilal Oswal, the stock is up 40%. In fact, since the listing in 2024, the stock is a three-bagger, and therefore they're saying that we've seen a very sharp and quick rise with regard to the stock price here. What they are saying, therefore, is they're pointing out to valuations. 19 times EV EBITDA, they believe, that which is the current valuation basis their math, they believe is expensive. So not really looking too good from that perspective. Of course, you're building in slightly higher growth compared to a Bharti Airtel. That's the comparable. Better ROC, better capital allocation as well, because it's a smaller company. But such a high multiple, which is a 40% premium, is not warranted to Bharti Airtel. The Bharti Exa's premium to Bharti Airtel is 40%. They believe that that premium is steep. Risk reward is no longer attractive, is what they say. The free cash flow yield, which was 5%, has now fallen to 3%. Even with building in hikes, and maybe there's some bit of more premium in terms of customer cohort in a Bharti Hexa versus a Bharti Airtel. But despite that, they believe that it's not warranting the kind of premium that it commands. Higher market share gains to get tougher in largely what's going to be a top 2 player market is what they spell out as well. The other reason why they say that the stock has rallied is because the government owns 15% stake in the company as well. So maybe the lower free float is also kind of proving to be a headwind in terms of valuation. So something that they're not comfortable with, and hence the downgrade.
So that's a view on Bharti Hexacom. I don't know, Aditya, if you look at this company closely and have any take on Bharti Hexacom?
I don't tag the stock, so will not be able to comment on it.
Okay, fair enough. Let's look at some of the other movers today, and especially I want to come back to autos. One of the stocks that we talked about this morning was Bajaj Auto. I want to pick up and just see what Bajaj Auto has done in the pre-open session. The pre-open has shut now. It's about 0.5% up. But that CLSA note on Bajaj Auto looking at an outperform. I think nearly a 20% upside right now, saying they're well placed among peers, with that turnaround in KTM being a key driver, and of course what they want to do in the 125cc segment. If you had to look at two-wheelers right now, Aditya, would you look at a Bajaj Auto?
Yes, definitely. So Bajaj Auto continues to be my favorite for the last 4 or 5 years. The company is doing exceptionally well within the Indian market as well as the exports market, and the amount of cash flow that the company has got, dividends and buybacks are something that the company also does. So within the two-wheeler space, TVS Motors stock is really very expensive. So two stocks where my focus will be, which is Hero MotoCorp. If they turn around, the stock will do exceptionally well. And then there's Bajaj Auto, which also is on my radar, purely from a growth perspective. So Hero MotoCorp and Bajaj Auto are two stocks where good returns could be seen, and as always, a steady compounder would be a TVS Motor.
I'll tell you a few stocks though which are interesting. So remember, PSU banks the last couple of days have been soft. Bank of Baroda is leading the losers move today. 2.5% or nearly 3%. Is the market behavior telling us something about the policy? Is the question. IREDA 1.38% lower. On the flip side though, ZF commercial is up 3.58%. The liquidity may be very low here, could be deceptive, but should pull up ZF. Very interesting, right? That stock is higher in trade, and I think some of the capital market plays continue to move higher. 361, and Hindustan Zinc, with silver prices doing what they are doing, is up another 2%. Actually, this one, Kush, as a trade, Hindustan Zinc 501 up 2% today after being up 4%, nearly 4% yesterday. Can it do more?
In all likelihood, it can, but this is where I will start offloading some positions. 500 to about 510 is the resistance zone, the supply zone. The stocks actually consolidated for a brief while in the last bit of December, around these levels. So if that is taken out, then you will see further momentum, but the stocks already had quite a bit of run. While the momentum could continue, fresh initiation does not make sense from current levels. A pullback closer to say about 485, 490 levels, yes, but if you have a position, continue to hold. 500 to 510 is a supply zone, so you should also start looking at booking some profits around those levels.
Okay, the other one is Brainbees. Big move today as well. Not big move really, but in the green per se. So that's the other thing to keep in mind. But Aditya Shah, the one that I want to ask you, the capital market plays have gotten a leg up the last few days. Today it's 361, which is up 3% as well. Do you like any of the capital market plays?
Within the capital marketplace, I don't think I like anyone because the valuations here are extremely expensive. Even though India's outlook within the capital market continues to remain exceptionally well, mutual fund business will do really well. Even the brokers could do exceptionally well over a longer period of time. But I don't think over a shorter period of time they could do well. A lot of these valuations are extremely expensive. If you look at a BSC, the stock is now extremely expensive at about 60 times multiple in anticipation of the NSE IPO coming in. And that is also dragging companies like CDSL, where NSDL's listing is dragging those stocks up. So in my opinion, I would tend to not go into these stocks and rather look at the banks and the NBFCs.
Okay. Kush Bora, is it profit booking here? Quick one there, and one top call, Kush. We have about 25 seconds.
So, capital market plays, yes, time to start booking profits. A lot of these names have shot up quite a bit, BSE, CAM, CDSL included. And the top call will be GMDC. Yesterday did well, today also opening with a bit of a gap up. I think 400, 410 odd levels are the ones to look for on the upside, and on the downside, 370, 375 is a good support zone. So should act as your stop loss or trailing stop loss.
Okay, viewers, keep in mind, if this whole PLI thing around the rare earth mining is a reality, then GMDC right up there as a beneficiary, simply because it's supposedly got reserves of some of the rare earths. So maybe rare earth minerals. So that could be the reason. So watch out for that stock. Flat for the markets, and not otherwise anticipated really, because this is how the market should be ahead of a key policy decision. Will it be 25 or will it be 50? That's the key thing, or maybe somewhere in between. Banks flattish, IT about 0.25% lower. This is the Nasdaq effect, of course, and IT continues to play tic-tac-toe, by the way. Mid caps 0.15% in the green, small caps 0.17%. Absolutely flat. Maybe Tamanna will have better luck in spotting winners, because I doubt the large cap space has too many winners or losers. But Bajaj Finserv 1.45% higher. Very good move there. Dr. Reddy's continues from where it left off yesterday, 0.95% higher. Strength in Coal India, strength in Hindalco, Adani Enterprises, IndusInd, BEL. But that's about it. Even Stevens on the winners and losers, maybe a bit more red right now, but almost 50-50. What's losing out? Tata Steel a couple of percentage points lower. Shriram Finance, ICICI Bank, Infi. So IT, like we said, seems to be a bit on the back foot. I think probably the only notable name from a news perspective which is making a move is Bajaj Finserv, and the continuation Tamanna from yesterday on Dr. Reddy's.
Just one word for Bajaj Finserv, and what you're seeing today is pedigree. This is what happens when you have 5,800 crore rupees of share coming onto the street and being lapped up way above the floor price. That stock over 1% up right now, right? So that's the Bajaj Finserv story. But let me just take you through what's happening in the broader markets as well before we move ahead. And I would say no fireworks, but definitely better luck than what's on the Nifty and the Sensex. Just about 0.25% up on the Nifty small cap 250 as well right now. Let's pull up the sectoral heat map for you if we can very quickly, and just look at what's moving. India defense, there's no stopping India defense in more than one way, and we're all glad for it. But 1% up. I wonder if a Cochin shipyard is up again. I wonder if a Mazgaon is firing, and MTAR. We'll pick up all of those stocks in just a bit. Nifty Realty, we told you about late sensitives. Those are going to be in focus. Nifty Metal also about 0.5% up right now. What's not working? Finance, bank, all of these are going to be under a bit of a pressure till there's clarity from Governor Malhotra in just a bit, and so is auto. But keep an eye on these for a mood change post 10 if there is an announcement that the market has not already priced in. I want to pull up the India VIX if I can for just a second and look at what's happening there. It's an important indicator to track on a day when there are not too many other cues, and India VIX looking completely benign at 15. That's a number that you can be happy with. All right, specific stocks that we're talking. Just the block deals, I've clubbed them all together. ZFCom, Bajaj Finserv. Let's look at IREDA. Bajaj Finserv we looked at a couple of seconds ago, but let's look at whether those moves are continuing. Paired off actually about 0.5% up right now, but ZFCom 5% up at this point. I want to look at an IREDA. They want to raise 1,500 crores in a QIP. Street's not liking it, 1.5% down. Hindustan Zinc, silver is at an all-time high. Hindustan Zinc is also shining, 2% up. Praj Industries has a big order from Paraguay. We talked about it at our watch list, 2% up on that stock. And Wockhardt is the other one. They've had some very good news with Zenic, which is their blockbuster product, and we had Dr. Habil Khorakiwala also speak with us on this. Wockhardt, once again, 2.5% up. I want to look at some of those defense stocks. The producers very helpfully pulled them up for us because defense is where the rally continues. Look at a Cochin shipyard. Wow, 5% up. You know, one of the reasons that defense is also in focus, especially shipbuilders, is that Trump has gone and told NATO nations that they must spend 5% of their budget on increasing defense. And if everyone wants to rush in and now have more product, India is definitely up there, and Indian companies are up there as an option for all nations, especially European nations as well. So Cochin Shipyard having another fabulous day. So these are some of the movers and shakers that I've spotted, and good old defense has come to the rescue, Neeraj.
Yes, yeah. I like the way you put it, but that's interesting. Yes, and the kind of moves that some of the stocks have made this morning as well, despite the fact that the markets is very flat, is interesting. I'm amazed by ZF Commercial, to be very honest, because that one is really revving up. Kush, opening thoughts. We'll mark some individual stocks, but opening thoughts and a word on ZF. It's not a very liquid stock, I agree. So difficult to maybe give a trade here, but just maybe give a view.
Sure. As far as the opening goes, I think it's fairly in line, as even you've rightly pointed out. Ahead of a big event, you might see some consolidation in an already consolidating market. So this is not surprising at all. As I said, if the commentary is in line, then you could see the PSU pack, extend some of these profit booking moves that it's been doing so for the last, day or two. So just be a little watchful on that. Also, the realty space, some of these names that we've discussed, while the medium-term trend is positive, from a near-term, they have also overshot. So you might want to perhaps take some money off the table, if not, entirely. So indices not doing much, which is okay. You would see some reaction post-10, but some of these pockets are starting to overheat. And some partial profit booking is par for the course in some of these names.
Okay. Well noted. There is strength in Newland Labs today. There is strength in RK Forging, but also there is strength in Wockhardt. If I'm not wrong, Wockhardt started off well. Maybe it's cooled off a little bit, but still up about 2%. So really good going there. Aditya, yesterday was literally one a capital market day, but two a pharma day with a Reddy's, a Wockhardt, Laurus, etc. Everything doing well. And that theme seems to be continuing today, right? Because there is not just Wockhardt, I said, Newland Labs too is in the green, and some others might be too. Do you like anything in the non-Nifty, non-large cap pharma pack, Aditya?
So within the CDMO space, I've been a fan of changing. The stock is not done too well over the last 1.5 years. But the CDMO capabilities, CRAM CDMO capabilities that Syngene has got, I think they will do pretty well over the period of next 3 to 5 years. Laurus struggled a lot over the period of last 3 to 4 years, ever since that massive rally during COVID. Now the capabilities that they have invested in will mean that over the period of next 3 to 4 years, Laurus will also continue to do well. And as always, Newland also continues to do pretty well in their business. So the API space as well as the CRAM CDMO space looks really very interesting. Something like a Piramal Pharma, that also looks really very interesting to me, given their CDMO business is starting to rev up now, and their facilities in the US are starting to do pretty well. So I'm positive on the pharma pack, particularly CRAM CDMO in the API space, and domestic diagnostic space, something like a Krishna, that will do pretty well over the period of next 3 to 5 years.
Okay. Okay, interesting. By the way, LT Foods, Muthoot Capital are some of the ones which are doing well. Quick Heal, by the way, is taking a pause today, so mark that. 2 days on a trot had a really good move. It's down 4% today. And usually, viewers, slightly illiquid stocks revving really strongly up. Sometimes you should be careful trading them. So Quick Heal is a case in point here. But the PSU banks is the interesting trade the last couple of days. Kushbura, we marked it, but I don't think we spoke about it, right? What is happening here? From a trade perspective, ahead of the policy decision, PSU banks are very, very soft.
So just a quick word on ZF Commercial. I missed it the last time around. You asked me the question. Yes, it's a rather illiquid stock, but from a medium-term trend, if you see there is a support line that is rising. So that's a healthy sign. There's a gap around the 14,300 mark that just about to be filled up. If that happens, you could see further up move continue on this one. But just to mark it once more, rather illiquid.
ZF, right? You're talking about ZF Commercial
ZF
right now.
Commercials.
Okay, yeah, not the PSU banks, but ZF Commercial. So that's the one he's talking about. Yeah. Now on PSU banks.
Now on PSU banks, Neeraj, a lot of these names, as we know, had already run up quite a bit. So it's not surprising to see some profit booking and some light positioning ahead of the RBI meet, as I've been maintaining. If it is in line, if the announcements are in line, then there won't be a big trigger for some of these PSU names to jump higher. That's why I prefer the likes of HDFC, ICICI, and SBI Bank, in the banking space. PSU banks for now are a good momentum trade. If there is a positive surprise, then yes, this light positioning will actually be healthy, and Canara Bank and Bank of Baroda and PNBs of the world will see a further leg up. If not, then I think some profit booking consolidation is actually quite healthy at this stage.
Can someone please explain to me what is happening with Cochin Shipyard? 7% up now, 6.5% up. I want to pull up the 1 week chart. Let's pull up the weekly chart. Let's pull up the 3-month chart as well. But in the last few sessions, what has been going on is astonishing. There you have it. Cochin Shipyard nearly 30% up in just this week. I mean, I'm just wondering, Aditya, how do you look at it? In a month, it's up 70%. I mean, I don't know what peer comparison you would have of a performance like this, a return like this. 70% in a month on Cochin Shipyard, if you had magically managed to get the timing right and come in at exactly that point, of course. Having said that, Aditya, what do you make of this kind of a run-up?
So craze, euphoria, FOMO, fear of missing out. Today the value...
Sorry, Aditya, are you
sales,
feeling FOMO? Are you sitting pretty right now?
I am not feeling, I don't feel the number one rule of the stock market is don't feel FOMO and look at opportunities everywhere. Today, there are opportunities everywhere in the market. Let me give you some statistics about Cochin Shipyard. The company has sales about 4,000 crores and is today valued at about 65,000 crores after this rally. At that kind of a price to sales and that kind of P multiple, I don't think it is justified to even stay invested in the company. Company does get a lot of orders, and I believe the third aircraft carrier that India will have, that also will go to Cochin Shipyard. But then the valuations are extremely expensive. They're all pricing in the near-term growth for about 3 to 5 years. Anybody who's entering the stock at this valuation, I feel would take a time correction of at least 2 to 3 years before which the stock would really move on. But from my perspective, I've been continuously warning. Defense is where chemicals was in 21. Everybody wanted to jump in on the chemical basket, and look what turned out in the next 2 to 3 years. Similar thing happened within the pharma pack in 2020, and similar thing will happen within the defense pack as well. If you tend to buy stocks at extremely high valuation, those companies will continue to do well, but there could be a time correction on the stock, post which those stocks would start moving. So investors should be really very careful on what kind of stocks they invest in within a defense sector.
What about you, Kush? Are you feeling FOMO? Or are you saying that right now it's enough? If you've sat in this, you've seen the run up, then it's enough. What are you saying on Cochin Shipyard and the defense pack?
So a couple of points. For someone who's seen these stocks have a multi-bagger run, a 70% in a month is not really a FOMO case. Also, I see your Cochin Shipyard and I raise you a GRSE. 6th May, it was a 1700, okay, 3400 right now. So forget 70%, GRSE is up 100% right in the last month or so. I'm fairly of the opinion, very firmly of the opinion that yes, now is the time to start booking profits in some of these names, especially the ones that have run up so much. They will continue to do well, medium-term structure, positive, all of that is fine. But you have to book profits somewhere. Realized profits are better than book profits, okay? So book profits, as in when you see a 15-20% kind of a correction in some of these names, re-enter, and yes, I do mean 15-20%, maybe a little more as well. These stocks are no stranger to that. So book profit right now, hold 50%, and as in when you see any kind of dip, I think we'll be here to tell you that, when is the time, when is a right time to perhaps re-enter, Cochin Shipyards and GRSEs and some of the other defense names of the world.
So take profits for now, if you can. Thank you so much, Kush and Aditya. Have a great weekend to both of you, and thank you for joining us on this leg of the program. But we're putting the focus on gold right now. Senco Gold is in focus. The company's revenue grew 21% in FY25. Before we get the management in, Mahima joins us to explain what Senco Gold does and how the numbers are looking.
Right, so basically Senco Gold is a pan-India jewelry retailer. In terms of its Q4 numbers, the key highlights were that old jewelry segment grew by around 20% in value, but volumes declined by around 6% Diamond jewelry grew 38%, although their studded mix ratio right now is around 10.9%. Old gold exchange was very high this quarter and has risen sharply to around 39 to 40%. In terms of numbers, good set of numbers for Q4. Revenue was up 21%, net profit up almost 94%. But in terms of growth as compared to FY24, revenue growth came down a little bit. It was 29% in FY24, which came at around 21% in FY25. Even same-store sales growth did slow down. FY24 stood at around 19%, which came down to 15% in FY25. Operational metrics stay strong. There was a 7% increase in footfall, 5% increase in new invoices. Average ticket size also went up to 73,000. In terms of a few consumer trends that was observed in this particular quarter was that there was a shift in terms of lightweight jewelry when it came to studded jewelry. There has been increase in buying of solitaire because of diamond prices correction, and silver utensils jewelry also grew over 20% in terms of volume. The company has also changed its hedging strategy because they used to hedge gold up to 90% before 2 quarters, but now in this particular quarter they have said that around 60 to 80% of their jewelry will be hedged. So this is of course first on the back of volatility in gold prices, plus we are also seeing that old jewelry is being exchanged, so they'll have to keep less gold in terms of inventory. In terms of guidance, management is targeting 15% studded ratio in 3 to 4 years. The EBITDA margin guidance is between 6.8 to 7.2, top line growth of around 18 to 20%, and they also aim studded jewelry to go to that 13% mark. So a few questions to ask here is, of course, first, why the change in the entire hedging strategy, demand for lab-grown diamonds, and the overall outlook for how diamond prices are faring because of the competition that lab-grown diamonds is giving, and of course, what is the FY26 outlook look like?
Okay. Thank you, Mahima, for that. Mr. Suvankar Sen, MD and CEO of Senco Gold, joins in right now to talk about how the outlook for business is. And of course, we'll also talk about their Q4 numbers, which are very, very strong. Mr. Sen, good having you. Thanks for joining in. Gold, silver, Bitcoin, everything is zooming. It seems like alternate classes are up and doing well. Now, please tell us, when I look at your numbers, it seems that you've had a really strong quarter. And I guess from what I read from the research reports which cover your business, that the outlook that you've given for FY26 is strong too. Talk to us a bit about that.
So see, if we look at the trend of our performance over the last 3-4 years, every year we've been growing in the range of 18 to 20%. So with the current market scenario, the way the gold prices have been moving upwards, it is, I think, quite an easy possibility of having a growth of 18 to 20%, because in terms of value itself, gold has been on an upward trend. As a company or as a strategy, our effort is now that how do we ensure that we can have more and more, increase in volumes, as well as getting more and more customers into the store. So I think that in terms of overall performance, everything remains very strong. And the best part of the Q4 performance was the high growth that we saw in the diamond jewelry segment. Till about Q3 and especially in the H1, we saw that the consumers' interest towards diamonds were much lower. People were more interested in buying gold. But then post Q3 and Q4, we could see, and that trend continues to happen even in this last 2 months of this particular quarter, where consumers are preferring diamond jewelry, and the stud ratio is moving upwards of 11%. So this is a good sign in overall profitability, as well as fulfilling the desire of the consumer. We need to understand 2 things. One, that the gold price continues to be in an upward trend. The market volatility is there. It's almost touched 1 lakh. So consumers are also looking at options on how they can buy lower ticket size item or what is falling within their budget. And that is the reason that getting the volumes as desired is a challenge, but we need to fulfill that gap and the demand of the customer. So that is one thing that we need to understand. The second thing we feel is that diamonds have kind of reached a bottom. hopefully within a month, 2 months, 3 months, I've been saying that with the Russia-Ukraine war that will come towards an end, we will soon see that diamond prices will keep moving upwards, and then it will become a good investment also. But the bad performance of diamond that has been in the last year, that things will change and things will move better. So these are the two things we are keeping in mind. In terms of new store openings, we are planning to open 18 to 20 new stores. The same store sales growth with a very conservative estimate of 15%. Yeah, last year, the same store sales growth were 18. But what the challenge we saw with this high gold price rise is that consumers are getting a little, or they are a little, thinking whether they should buy now or later. And that is why the same store sales growth have come down from 18 to 15%. But that will continue to happen, and we'll add new stores, new franchisees, and that will, add 20 more stores to our kitty in the coming year. So that's the overall scenario that we have.
Got it. Mr. Sen, a follow-up would be, one, the guidance that you've given for FY26 in terms of actual numbers. And did I read that right, that while you clocked in higher margins in Q4, for the year at large, you're giving a range of 6 to 7% on EBITDA margins? So a bit of a lower guidance there?
0.8 to 7.2. So this year, our EBITDA margins have been the adjusted EBITDA margins because of the duty impact. It looks unadjusted, looks a little lower, but adjusted ones is about 6.8. So we have given an EBITDA margin of 6.8 to 7.2. That's how we're looking at it. So it's not a very low margin. It's 7% and upwards.
Okay, sorry, no, just a follow-up. And that is that, if I'm not wrong, your Q4 margins were 9.2, right? So
correct.
Relative to that, I'm saying it's lower range, right?
Right. So you shouldn't see just a quarter.
I agree. But sometimes exit margins give a flavor of what the year might be like as well. I'm not saying that is what should be the case, but I'm just clarifying that. Okay.
Right.
Okay. Hiral?
Right. So Ankar, good morning. Hiral here. Interesting point that you made in terms of the kind of same-store sales growth that you're looking at as well. Now, taking into consideration your point of how the urban or the younger population is looking at the market, how does the strategy be with regards to Sense Fashion and Everlight? Because these two are the portfolios which are targeted towards this segment. And number two, the average ticket size that the market now is looking at is in that range of 72,000 to 75,000. So taking both these points into consideration, your strategy on that front.
So if you look at the number of new designs that we've launched in the previous year, there have been 30,000 new designs in gold jewelry and about 25,000 new designs in diamond jewelry. So the effort towards creating lightweight, modern, everyday wear designs in gold and diamonds have continued to be a focus area for us. Everlight, as you rightly said, is the platform on which we want to continue to launch new designs in everyday wear, lightweight diamond and gold jewelry. And Sennes is our lab-grown diamond strategy, in which we've got about 6 to 7 stores that we've opened under Sennes. And there we are trying to test and see how the consumers are taking their interest towards lab-grown diamonds, because that is also going to be one of the multiple categories in the jewelry for the future. Along with that, one thing I must mention is that we've got a brand called Gossip, which focuses on silver and fashion jewelry. And we are seeing that while we are talking of gold and diamond, and the silver volumes are much lower or even in terms of value, but that is another tool through which we are trying to target the young generation. We are having shop-in-shops in multiple malls and departmental stores. And the ticket size of 4,000, 5,000, below 10,000 rupees that we are creating. And that is also, silver as a category is growing at about 20% also.
Okay. Sorry, Suvankar, just 1 minute. Just wanted to point out that the RBI governor has arrived at the place from where the decision will be made, and the RBI headquarters, and the most important thing that everybody is watching out for. Just wanted to mark that. Suvankar, please carry on. Sorry to interrupt you.
Yes. So silver also as a category, I think, all of us must take note of it, is also growing at a very good rate in terms of volume as well as value. So that's how, through the diamonds, the lightweight jewelry, through our lab-grown diamonds and silver, we're catering to the demand for the new generation. And let us say that for these young Gen Zs and millennials, I would say that yes, the 18-20 years are there, but it's mostly people above 25 till about 35, once they are getting married or they are getting their first jobs. And that is where the impulsive buying and the not so planned buying of jewelry continues to happen at the lower tickets.
So Suvankar, you mentioned about lab-grown diamonds. Now, 25 to 30% of your sales approximately comes in from the diamond side of the business. 11% is the contribution, and that was the kind of anticipated growth. Your focus has been on 14 karat, 18 karat studded pieces for the younger consumer. If lab-grown has to come in on a big way, how much will your contribution from diamonds come down if that's at 11% currently? And what share will lab-grown taking into consideration the demand right now?
So the plan that we have is to take the 11% to 15%. And I think that lab-grown diamond will be an addition to the 14 to 15% of diamond jewelry. And I think in terms of value and in terms of volume, if you really look at it, because it's almost 80-90% lower the prices of lab-grown diamonds compared to real diamonds. So I think that will be an additional 1-2% over a period of 4 to 5 years. So overall, our strategy beyond 15% is 15% diamonds, 1 or 2% of lab-grown diamonds, and 2-3% of silver and platinum. So 20% will be your non-gold portfolio, and 80% will be your gold portfolio. That's how we're looking at over the next 4 to 5 years.
Okay. Apart from that, if you have to look at the old gold exchange, that contributes around 40% to your sales in FY25. 61% is coming in from your non-Senco customers as well. Taking this data point into consideration and the way gold prices are moving from here on, what is that kind of revenue growth trajectory that you're looking at, taking into consideration also the expansion plans?
Also, our revenue growth projections are in the range of 18 to 20%. So this year we've closed at about 6,300. So we are looking at about 7,500 in the coming year. That is one. The old gold exchange, as you mentioned, is a very important tool for the jewelry industry. And I think that is where the jewelry sector has been able to grow in spite of the gold prices going up, because consumers might have lesser money in their pockets, but because of the gold that they have and the gold that they want to exchange, and they are trying to take the benefit of the higher gold rate. So this 35 to 40% that has been the share of old gold exchange, if you look at 3 years back, it was only about 25 to 28%. So that's been a substantial jump that the consumers are actually exchanging their old gold and buying a new piece of jewelry. So that will continue to take a major share, I think, with this increasing gold price scenario. And with the new stores that are getting added as well, there will be almost 50% of those will be franchisees focusing on the tier 2, 3, 4 towns and cities. And that is where it is also very important that, when you see the organized sector of the jewelry market, that they are expanding, they are getting into the smaller towns. It is not only the focus on the bigger cities. And there, the shift from, acquiring new customers from the smaller towns and the shift from the unorganized to organized is the play that is going to happen.
Okay, so Ankar, my last question coming to you is with regards to your hedging strategy. 60 to 80% is where you remained hedged for the 2 quarters ago. 2 quarters ago it was 90%, right? So what is that conversion cycle looking like, and where do you see it moving now?
So, 2 quarters ago it was 90. Then over a period of time, we've brought it down to 80. And, as we speak, as we spoke in the earnings, we were about 65%. So we are just bringing the hedging ratios to closer to around, I think, somewhere between 65 to 80%. And that is primarily because of the gold price volatility. If we really look at the macroeconomic scenario right now, there is a large, discussions, and you see the way the dollar is getting weaker. And there is so much uncertainty in the US markets, which will make the investors move more towards gold and silver as a hedge. And if the interest rates of the Fed is going down and they start cutting the interest rates, that will also have an impact on weakening the dollar. And there is a higher probability of the gold price going up. So very honestly, I think all of investor community have to be on their toes and really look at what is happening all around the world, and accordingly, have a very conservative approach. So I think that a range of 60 to 80% is what we would like to follow. Yes, there will be times when it will be 80, there will be times when it will be 70, but 65 to 80% is what we need to follow. Today, the RBI their interest rate decision is also very important. But the whole world is in a movement of ensuring that the growth happens in the future. But currently, the next 2 months will be extremely volatile.
Absolutely. Volatility over the next 2 months. The rate cut decision also is interesting to watch out for. But thank you, Suhankar, so much for joining us on the show and sharing the views. Now that we're actually embracing for the RBI governor to come and speak, consensus is a 25 basis point rate cut and the potential guide for more cuts coming in as well. Meanwhile, CLSA is also forecasting a 25 basis point rate cut and has released a report analyzing the potential beneficiaries of this move, and they're mainly talking about infrastructure, real estate. Anushi is with us to tell us which are their top picks basis the 25 basis points rate cut. Anushi, over to you.
Hey, morning, Hiral. So as you mentioned that, the broader consensus is of a 25 basis points of a rate cut, even CLSA predicting the same. So there are a couple of beneficiaries in the real estate space that we should be watching out for. This is with the expectation that there would be an additional 50 to 75 basis rate cut in the remainder of FY26 as well. So the major beneficiary of this would be, of course, the affordable and the mid-income housing as compared to the luxury side of the business. So this lower interest rate cut on this debt and slight asset reflection is set to benefit this segment as well as the annuity players as well. If you're talking about the key beneficiaries, right, one at the top is Sobha. In fact, they've upgraded the stock to a hold rating as compared to an underperform rating. The stock reacting in trade on the back of this upgrade also. Target price, however, is 1,550, which is a 3% of a downside. While for Prestige Estates and Godrej and for Sunteck Realty, they're looking at an upside of more than 40%, seeing overall trends in their mid-income segment that we are looking at. So that is something we should be watching out for. For Godrej Properties also, they've maintained an outperform rating, and this is with a 20% of an upside they are eyeing out for. Other rate cut beneficiary remains all the REITs that are in effect, that is Embassy REIT, Mindspace, Brookfield, as well as Nexus REIT, which will be in focus. Large annuity players includes the likes of DLF and Phoenix Mill, which would benefit from these lower interest rates, especially on the debt profile that we are looking at. So these are a couple of counters that we should be watching out for.
Anushi, thanks so much for that. So that's, the CLSA view on rate cut beneficiaries. In fact, Jefferies has a note on financials as well, saying that, saying the obvious, that RBI is likely to cut rates, but they say that the inflation is expected to stay below forecast. Again, something that Pranjul Bhandari mentioned to us. In fact, in a conversation with us, Pranjul said that the inflation could actually average around 2.5% for the next couple of quarters. And the other factors that Jeffrey says, banking system liquidity highest in 3 years, sequential improvement seen in multiple factors, and of course finance facility to buy health insurance gaining ground as well. So a lot of factors that Jeffries is saying could be in store for why the rate cut should be there, though must say those factors need not have been told because it is evident that there's going to be a rate cut.
So no prizes for guessing rate cut. We have an ongoing bet, 25 basis point, 35 basis point and more. And what about you, Hiral? You want to join our bet?
25.
So it's 2 versus 1.
Yes.
I'm outnumbered.
3 versus 1.
No, Lakshmi to both sides. Lakshmi to
no,
both
Lakshmi's
sides.
bet 25.
Or is it SBI with a 50?
See, she said next quarter when she comes in, she'll give you a coffee if she's lost. So.
Give me a coffee. Anyway, so let's tell you what all of this is based on. As we all know, the Monetary Policy Committee is expected to continue to cut lending rates. It will be 3 times in a row. Now, economists are expecting the benchmark lending rate to be lowered to 5.75% by the MPC. That's a 25 basis point cut. Pallavi is joining in with more details.
Right, it's Monetary Policy Day yet again, and the MPC is expected to continue to cut the benchmark lending rate or the repo rate by 25 basis points. Now, according to an NDTV Profit poll of economists, all except for one expect a rate cut of 25 basis points, with SBI expecting a rate cut, a deeper rate cut of 50 basis points. Now, let's quickly take a look at what's changed from the last policy to this one. First up, GDP growth rose to a four-quarter high of 7.4%. That was for Q4 FY25, while GVA growth came in at 6.8%. The divergence was on account of high indirect taxes. Now, retail inflation slipped to the lowest since July 2019. So it came in at 3.16% for the month of April. This was largely on account of lower food and beverage inflation that fell to 2.14%, and within that food basket, it was primarily the contraction in vegetable prices that led to this decline. Now, to be sure, the RBI actually does project inflation for FY26 at 4%, though economists are not ruling out some undershooting there, with Q1 being estimated at 3.6%. Going forward, a lot, of course, will depend on the trajectory of the southwest monsoons. So essentially, growth, while in Q4 was higher than expected, growth for the full year was at 6.5%. That's for FY24. Slower growth juxtaposed with easing inflation does set the backdrop for yet another rate cut today. Now, what also has changed is the RBI expected to pay 2.69 lakh crore rupees. That's how much it has announced will be the surplus transfer to the government. That is the highest ever, though it is a tad below estimates, and it does mean that liquidity is likely to continue to remain comfortable going forward.
Okay, thank you for that detailed explanation, Pallavi Nahata there. All right, Subodip Rakshit joins in. He's Chief Economist, Kotak Institutional Equities. Anubhuti Sahai with us. She's head South Asia Economic Research at Standard Chartered Bank. Vishwanath Nair, of course, coming in from Reserve Bank of India, where we're going to see and hear from the governor in just about 10 minutes odd from now. But quick takes before that. And Anubhuti, let me come to you. Very good morning. What are we expecting? The rate cut now is the given. That's penciled in. But what will you be watching out for?
I think from today's policy meeting, probably we are unlikely to get any major surprise. As you very rightly mentioned, 25 basis points rate cut is given. A downgrade in their inflation projection from 4% towards 3.7, 3.8 is very likely. Markets would watch out if the downgrade is much more than what is priced in at this point in time. The other part is GDP. Maybe it sees a marginal upgrade. On liquidity, because they have done like almost 5 lakh crores since the start of the year, the system liquidity is in surplus, and we will get RBI dividend. There is no need for any major action when it comes to liquidity injection. So I think this will be more and in line with expected policy decision. And RBI will maintain a balanced tone, will reiterate their data dependency, and it's very well justified because we are in a highly uncertain world and there is a need to keep the powder dry.
Okay. Subodip, would the street be happy with the 25, or would the street want something more than 25, be it 35, be it 50?
I mean, if you give the street as much more as you want, the street will be happier.
Okay, so let me refine the question. Would the street be disappointed if it's only 25?
Not really. I mean, let me put it this way, that, if there's a 25 basis point, it depends on the tone the RBI, the governor, or the MPC policy is taking, right? If it becomes apparent to the market, or the tone is such that this is near the towards the end of the rate cut cycle, I think that is a bigger disappointment. Not as much as a 25 bips or a 50 bips. That is not what I think is the point of debate as of today. But the outlook and how much of further rate cuts can happen is, I think, what will be looked at. To that extent, the tone is important. The kind of concerns expressed, whether on growth or whether on inflation or whether on through the food prices, concerns on weather conditions or global conditions, etc. I think that becomes more of the talking point. It's not as much as 25 bips rate cut or 50 bips rate cut. I mean, I think that is in the price. 25 bips is given. Tone is what we should watch out for.
Vishy, we want to take the next question.
Yeah, so I just wanted to ask Subhadeep one question. We've seen this bumper dividend come in. I mean, yeah, it was slightly lower than the 3 lakh crore that the market was broadly expecting. Broadly, the liquidity scenario looks pretty good as far as the RBI and the liquidity management is concerned. I'm trying to understand from you what will then probably spur the conversation about further rate cuts, because as things stand, the growth momentum seems to be there, liquidity seems to be there. What warrants then for further easing in the rate cycle?
See, the way I see it is that, when we frame monetary policy, or let's say RBI or any central bank frames monetary policy, there is a trade-off between inflation and growth or employment that they take into account. If you look at the current scenario, inflation is benign. In fact, for the next few months and probably till around December, inflation will be below 4%, which means that the RBI has room from the inflation front. What's happening to growth is that growth is around 6.5%. I mean, one can debate whether it is 6% or slightly above 6.5%, but essentially it's centered around the 6.5% is what most of us would agree. And RBI's own projections, it's around 6.5%. The question then comes in is, what is the potential growth? And I'm sure the potential growth as of today would be higher than the 6.5% that the RBI is expecting, which means there is a negative output gap. And if in terms of the trade-off, or let's say the concerns expressed on inflation versus concerns expressed on growth, I think for now the concerns on growth are more than the concerns on inflation. In that kind of a setup, and where the RBI has room to cut rates, you have to also add in the point that what is happening on the fiscal front. You've brought in the point on the dividend that the RBI is giving, but look at the kind of fiscal consolidation that has been steadily happening. So fiscal consolidation, of course, in certain areas, there is a push that is being given, for example, income tax relief that has been given. But overall, if you look at the fiscal condition, that is a consolidation that is steadily happening, which means that the fiscal impulse that is being given to the economy is not in some sense pushing growth massively, which means there has to be a certain push that comes from the monetary policy side, which is why a rate cut cycle should continue even beyond, let's say, the June policy, which is today's policy of 25 bips rate cut. How much more is needed? I think that is an open debate, in the sense that what is the natural interest rate? What should be the real interest rate that should be kept over the rate cut cycle? I think is up for debate. It's not as much of whether rate cuts should continue.
All right. I want to take the next question with Anubhuti Sahai. Anubhuti, the question here seems to be that while the RBI has done its bit, right? 50 basis points already done, another 25 basis points if it comes in today, that's a 75 basis point rate cut just this year. I'm trying to understand at what point does this flow into the economy completely, because bank transmission still seems to be going a little slower despite the rise of repo rate linked loans. You're seeing that overall sort of transmission into the economy is still a bit slower.
Sure. So I think we have to categorize where transmission is happening at a faster pace and where it is taking time. So if you look at the EBLR linked loans, their transmission is pretty fast, and that's a very large component when you look at the retail portfolio. The other part of credit pricing, the remaining part of credit, it takes a lot of time for the transmission to plays out. And if you look at the historical pattern, there are factors which actually play a very important role in the pace of transmission. The first is liquidity, where obviously RBI has done more than what anyone in the market was expecting. The second is a very important, related to the question which you raised, and in fact Subhadeep mentioned, where the rates would bottom out. It's a very interesting observation which we have made, that as long as expectations of further rate cuts continue, the transmission is slower. Once you reach the bottom or the peak, and then the rates stay on hold, then the transmission picks up pace. So I think if I tie both these questions, the first one which you raised to Subhadeep and this particular question, I think from a terminal repo rate perspective, we think a 550 rate at this juncture looks optimal, assuming there are no major growth shocks. Inflation is giving us room, but one also has to be cognizant of the transmission. And if a very deep rate cutting cycle is delivered with a quick turnaround, say in 2026, maybe because of higher inflation or whatever possible reason, then the transmission gets disrupted. So how much rate cuts have to be delivered? One, it will be a function of what happens to growth. And second, I would say if we reach a much lower repo rate level, then does it lead to market expectation of quick turn in the monetary policy cycle?
Okay. Anubhuti, the other question is, how much of what the Fed is going to do will be the most important or will be a key development in the minds of the MPC, because the Fed is not charting the course, even if the ECB is, of the rate cuts, right? It may happen in the future, but as of now we don't know. How much of that will play in the immediate decision?
So in the immediate decision, I think at this point in time, it's pretty clear that Fed is not likely to deliver rate cuts pretty quickly. We at Standard Chartered also do not expect recession in the US. We think another 50 basis points of Fed rate cut before we enter a pause period. And this is all factored in our call of a bottom or a terminal repo rate at 550. The risk scenario can be if growth in US just turns lower at a much more accelerated pace. If we enter the recessionary kind of an environment and Fed is pushed to deliver 100 basis points of rate cuts in quick successions. In that kind of a situation, maybe we get another repo rate cut. But again, here the domestic fundamentals will be also important to keep in mind, given that Fed has not been cutting, while RBI has been cutting over the last few meetings.
Okay, so Subhadeep, just in terms of rate cut trajectory, and we were having this conversation in the morning as well, where right now, as far as the street is concerned, maybe 25% is not going to be enough because that's priced in, done and dusted, expected. Do you think we need to see, if not in a rate cut, at least in commentary, a messaging that we're ready to go further from the Reserve Bank today?
Not necessarily. I don't think there is any reason why RBI should be in any kind of a hurry or any kind of emergency mode, so to say. I think the important part, which Anubhuti was also talking about in terms of the transmission. See, transmission takes time, and it does not make sense to just, sound dovish. And ultimately, the market or the banks, NBFCs, etc., will kind of keep pricing the rate cuts or keep the transmission going on for longer than what in terms of the RBI is expecting. The point is that the rate cuts, let's say, our expectation is another 50 to 75 basis point after today's rate cut. The banks will take time to transmit it. EBLR happens instantaneously, but the other part will take time. So anyways, that the impact on growth, etc., comes over 3 to 4 quarters. It's not instantaneous, and I think the RBI should not be in a hurry of sorts, because it's not a emergency situation that there should be a hurry from the RBI side. I think.
Namaskar. The 55th meeting of the Monetary Policy Committee was held in the backdrop of an early and promising start of the monsoon season. This is of vital significance for the Indian economy. In contrast, the global backdrop remains fragile and highly fluid. The uncertainty around the global economic outlook has somewhat ebbed since the MPC met in April, in the wake of temporary tariff relief and the optimism around trade negotiations. However, it is still high to weaken sentiments and lower global growth prospects. Accordingly, global growth as well as trade projections have been revised downwards by multilateral agencies. Moreover, the last mile of disinflation is turning out to be a little more protracted. As growth inflation trade-offs is becoming more challenging, monetary authorities are charting out a more cautious and carefully calibrated policy trajectory. Looking beyond the near term, growing economic and financial fragmentation is reshaping the global economy. Besides complex interconnections with the financial system, elevated debt levels, and growing influence of frontier technologies like AI are raising financial stability concerns. Amidst heightened volatility in capital flows and exchange rates, coupled with constrained policy space, central banks of emerging market economies have a tougher task to stabilize their economies against global spillovers. In this global milieu, the Indian economy presents a picture of strength, stability, and opportunity. First, strength comes from the strong balance sheets of the 5 major sectors: corporates, banks, households, government, and the external sector. Second, there is stability on all 3 fronts: price, financial, and political, providing policy and economic certainty in this dynamically evolving global economic order. Third, the Indian economy offers immense opportunities to investors, both domestic and foreign, through 3 Ds: demography. We have a high proportion of the working age population which is growing. It is becoming more literate, it's becoming more educated, more skilled, urbanized. Then there is the third D, the second D, the digitalization. We have very advanced and sophisticated public digital infrastructure. And domestic demand is the third D, which we are talking about over here, which is very important given the trends of deglobalization. This 5x3x3 matrix of fundamentals provides the necessary core strength to cushion the Indian economy against global spillovers and propel it to grow at a faster pace. We are already growing at a very fast pace. 6.5% is the highest, not only last year amongst major economies, but even in the last decade. Of course, we aspire to grow at a higher rate, and we are making all efforts in our vision of a Viksit Bharat by 2047. I now come to the Monetary Policy Committee decisions. The Monetary Policy Committee met on the 4th, 5th, and 6th of June, that is today, to deliberate and decide on the policy repo rate. And after a detailed assessment of the evolving macroeconomic and financial developments and the economic outlook ahead, the MPC decided to reduce, which is widely expected, the policy repo rate under the liquidity adjustment facility by 50 basis points to 5.5%. I repeat, the reduction recommended by the MPC is for 50 basis points to 5.5%. This is with immediate effect. Consequently, the standing deposit facility rate, which is the STF rate, shall stand adjusted to 5.25%. And the marginal standing facility MSF rate and the bank rate shall stand adjusted to 5.75%. I shall now briefly set out the rationale for these decisions. Inflation has softened significantly over the last 6 months from above the tolerance band in October 2024 to well below the target. Its latest numbers are 3.2%, with signs of a broad-based moderation. The near-term and the medium-term outlook now gives us confidence of not only a durable alignment of headline inflation with the target of 4%. You are aware we had earlier projected for this year an average inflation of 4%, as excluded in the last meeting, but also the belief that during the year it is now likely to undershoot the target at the margin. While food inflation outlook remains soft, core inflation is also expected to remain benign, with easing of international commodity prices in line with the anticipated global growth slowdown. The inflation outlook, therefore, for the year is now being revised downwards from our earlier forecast of 4% to 3.7%. Growth, on the other hand, remains lower than our aspirations amidst challenging global environment and heightened uncertainty. Thus, the MPC felt that it is imperative to continue to stimulate domestic private consumption and investment through the policy levers to step up the growth momentum. This changed growth inflation dynamics calls for not only continuing with the policy easing, but also the MPC felt front-loading the rate cuts to support growth. Accordingly, the MPC voted to reduce the repo rate by 50 basis points to 5.5%, as already mentioned. After having reduced the policy repo rate by 100 basis points in quick succession since February 2025, the Monetary Policy Committee also felt that under the present circumstances, monetary policy is now left with very limited space to support growth. Hence, the MPC also decided to change the stance from accommodative to neutral. From here onwards, the MPC will be carefully assessing the incoming data and the evolving outlook to chart out the future course of monetary policy in order to strike the right growth-inflation balance. The fast-changing global economic situation too necessitates continuous monitoring and assessment of the evolving macroeconomic outlook. I will now come to the assessment of growth and inflation. First, growth. The provisional estimates released by the National Statistical Office placed India's real growth in 24-25 last year at 6.5%. During 25-26 so far, domestic economic activity has exhibited resilience. Agriculture sector remains strong with a very good harvest in both the Kharif as well as Rabi cropping seasons. The supply of major food crops is comfortable. The reservoir levels remain healthy. The highest procurement of wheat in the last 4 years provides a comforting stock position. Industrial activity is gaining gradually, even though the pace of recovery is a little uneven. Services sector is expected to maintain momentum. PMI services stood strong, as you are aware, at 58.8 in May 2025, indicating a very robust expansion in activity. On the demand side, private consumption, which is the mainstay of aggregate demand, about 56% of the total GDP, remains healthy with a gradual rise in discretionary spending. Rural demand remains steady while urban demand is improving. Investment activity is reviving as reflected by high frequency indicators that we track. Merchandise exports recorded a strong growth in April 2025. Of course, this could be because of some front loading, but this is after a lackluster performance in the recent past. Non-oil, non-gold imports posted a double-digit growth, reflecting buoyant domestic demand conditions. Services exports continue on a very strong growth trajectory. Both the last month's figures have been quite robust. Going forward, the outlook for agriculture sector and rural demand is expected to receive further impetus by the expected above normal southwest monsoon rainfall. On the other hand, sustained buoyancy in services activity should nurture revival in urban consumption. The healthy balance sheets of banks and corporates, governments the government's continued thrust on capex, elevated capacity utilization, improving business optimism, and easing of financial conditions should help further revive investment activity. Trade policy uncertainty, however, continues to weigh on merchandise exports prospects. The conclusion of the free trade agreement with the United Kingdom and the fast progress that is being made in our negotiations with other countries, on the other hand, should provide a fillip to trade. Spillovers emanating from protracted geopolitical tensions and global trade and weather-related uncertainties pose downside risks to growth. Taking all these factors into consideration, real GDP growth rate for this year 25-26 is projected at 6.5%. We continue with our earlier forecast with Q1 at 6.5, Q2 at 6.7, Q3 at 6.6, and Q4 at 6.3%. The risks are evenly balanced. I will now move to inflation. CPI headline inflation continued its declining trajectory in both March and April. The headline inflation moderated to a nearly 6-year low, in fact 69 months to be precise, to 3.2% in April 2025. This was led mainly by food inflation, which recorded the 6th consecutive monthly decline. Fuel group, which had been earlier witnessing deflationary conditions, there was a reversal of the deflationary conditions, and it has recorded positive inflation prints in the last 2 months of March and April. This is partly because of the hike in LPG prices. Core inflation remained largely steady and contained during March and April, and this is despite the increase in gold prices, which exerted an upward pressure. The outlook for inflation provides towards benign prices across major constituents. The record wheat production and higher production of key pulses in the Rabi crop season should ensure adequate supply of key food items. Going forward, the likely above normal monsoon, along with its early onset, augurs well for Kharif crop prospects. Reflecting this, inflation expectations are showing a moderating trend, and this is more so for the rural households. Most projections point towards continued moderation in prices of key commodities. This includes crude oil, which is of critical significance to us. Notwithstanding these favorable prognoses, we need to remain watchful of weather-related uncertainties and the still evolving tariff-related concerns with their attendant impact on global commodity prices. Taking all these factors into consideration and assuming a normal monsoon, CPI inflation for the financial year 25-26 is now projected at 3.7%. As I mentioned earlier, this is a downward revision from our earlier forecast of 4%. We are projecting inflation for Q1 at 2.9%, Q2 at 3.4%, Q3 at 3.9%, and Q4 at 4.4%. The risks are evenly balanced. I'll now come to the external sector. With a moderation in trade deficit in Q4 24-25, alongside strong services exports and remittance receipts, the current account deficit for last year 24-25 is expected to remain low. We are yet to get the final figures. Furthermore, despite rising geopolitical uncertainties and trade tensions, India's merchandise trade remained robust in April 2025. As imports grew faster than exports, trade deficit, however, widened during the month, which is the month of April. Going forward, net services and remittance receipts are likely to remain in surplus, counterbalancing the rise in trade deficit. The current account deficit for this year, 25-26, is therefore expected to remain well within the sustainable levels. On the financing side, in 24-25, foreign portfolio investment to India dropped sharply to $1.7 billion as foreign portfolio investors booked profits in equities. Net foreign direct investment, FDI, too moderated. I would like to take a moment over here because there has been large and widespread commentary on this moderation of net FDI. Now we look at net FDI primarily because of our concern regarding foreign exchange reserves, where the net becomes important. It's not only the net the inflows but also the outflows, which actually lead to either an accretion or a depletion in the foreign exchange reserves. However, when it comes to investment, then it is the gross FDI which is actually important, and gross FDI last year actually increased quite sharply. 14% is a very robust growth that we had, $81 billion. And so India continues therefore to be an attractive investment destination, despite there being a moderation as we are seeing in net inflows, which is primarily because of rise in repatriation, which is again a very good sign of a maturing market where foreign investors can enter and exit smoothly, and at the same time higher gross FDI, which is again a sign of our large industrial and other companies going out and investing. So on the whole, gross FDI is high, which indicates that India continues to be a good and attractive investment destination. External commercial borrowings and non-resident deposits, on the other hand, witnessed higher net inflows compared to the previous year, as on May 30, 2025, India's foreign exchange reserves stood at $691.5 billion. These are sufficient to fund more than 11 months of goods imports and about 96% of external debt outstanding. Overall, India's external sector remains resilient as key external sector vulnerability indicators continue to improve. We remain confident of meeting our external financing requirements. Now I come to liquidity and financial market conditions. You are all aware that the RBI over the last few months, in fact since January, we have injected a lot of durable liquidity through various means, through OMOs, through the CRR rate cut, through the buy-sell swaps, OMOs, etc. A total of 9.5 lakh crore rupees of durable liquidity has been injected into the banking system since January. As a result thereof, after remaining in deficit since mid-December, liquidity conditions have transitioned to a surplus at the end of March. And this is also evident from the tepid response to the daily VRR auctions, which got a bid coverage ratio of only 0.26 in the recent past, and also from the high STF balances. They are averaging about 2 lakh crore rupees in the last 2 months, that is April and May. Similarly, reflecting the improvement in liquidity conditions, the weighted average call rate, which is the operating target for the monetary policy, this traded at the lower end of the LAF corridor since the last policy. The comfortable liquidity surplus in the banking system has further reinforced transmission of policy repo rate cuts to the short-term rates. However, we are yet to see a perceptible transmission, although there are incipient signs of transmission to the credit market segment, but it is still not perceptible, although we are aware and we need to keep in mind that it does happen with some lag. The Reserve Bank remains committed, as we mentioned earlier, to provide sufficient liquidity to the banking system. To further provide durable liquidity, it has now been decided to reduce the cash reserve ratio, the CRR, by 100 basis points. I repeat, we have decided to reduce the cash reserve ratio by 100 basis points from 4% to 3% of net demand and time liabilities. This will be done in a staggered manner during the course of the year in 4 equal tranches of 25 basis points each, coming into effect from the fortnights beginning September 6, October 4, November 1, and November 29 of this year, which is 2025. The cut in CRR would release primary liquidity of about 2.5 lakh crore rupees to the banking system by the end of November 2025. Besides providing durable liquidity, I would like to emphasize over here and highlight that it will also reduce the cost of funding of the banks, thereby helping and accelerating the monetary policy transmission to the credit market. I would like to reiterate that we will continue to monitor the evolving liquidity and financial market conditions and proactively take further measures as may be necessary for liquidity and for monetary policy transmission. I will now come to financial stability. The system level financial parameters of the scheduled commercial banks continue to be robust. The asset quality parameters, liquidity buffers, and profitability parameters have shown further improvement. The credit deposit ratio for the banking system at the end of December 2024 was at 81.84%. This is broadly similar to what it was a year ago. Similarly, the system level parameters of NBFCs too are sound with comfortable capital position and improved GNPA ratios. The stress witnessed earlier in retail segments like unsecured personal loans and credit card receivables portfolio has abated, while the stress in microfinance segment is still persisting. Banks and NBFCs active in these segments, however, are already recalibrating their business models, strengthening their credit underwriting practices, and stepping up their collection and recovery efforts to avoid any excessive buildup of risks on this front in future. I now come to the end of my statement. On both inflation and growth fronts, the Indian economy is progressing well, and it is broadly on expected lines, and this is despite the huge uncertainty that the global uncertainty that we have. Strong macroeconomic fundamentals and benign inflation outlook provide space to monetary policy to support growth while remaining consistent with the goal of price stability. As global environment remains uncertain, it has become even more important to focus on domestic growth amidst sustained price stability. Accordingly, today's monetary policy actions should be seen as a step towards propelling growth to a higher aspirational trajectory. Here I would also like to highlight that there is no tussle between price stability and growth in the medium and long term. Price stability preserves purchasing power. It imparts certainty to households as well as to businesses in their savings and investment decisions, and it ensures congenial interest rate and financial conditions, all of which foster consumption, investment, and overall activity and therefore growth. Moreover, this is crucial for equitable growth and shared prosperity because its absence is disproportionately burdensome on the poor. I must also add over here that while price stability is a necessary condition, it is of course not sufficient to ensure growth. A supportive policy environment is vital. And this is even more important during periods of high uncertainties such as the current times that we are witnessing. At the Reserve Bank, therefore, while price stability remains the focus of monetary policy, we are not oblivious to putting in place complementary monetary as well as credit policies and regulations that support growth and prosperity. Thank you, Namaskar, and Jai Hind.
Okay, so huge. Of course, suffice to say, anyone who's been watching the show since this morning, I won the bet. 50 basis points, all of you were in it. So 50 basis points, the jumbo cut has been served. A sharp drop in CRR, that's another jumbo cut, 100 basis points from 4% to 3%. But is the change in stance, last time from neutral to accommodative, now accommodative to neutral back again, a bit of a dampener in the middle of all of this celebration?
That's what it comes across, right? I mean, Neeraj, clearly, if you're looking at the limited space to ease further from here on and that neutral stance, I think RBI is being cautious over here because they want to make sure with all the external factors that are coming in, they want to be on that neutral stance to make a decision if they have to maintain rates or change up or down in future. So I think it's the economical factors that they're taking into consideration here.
Yeah, very likely. Just as we go to Vishy, I think the key message is that two things. That one, we can't be not mindful of the fact that the US Fed policy is at a particular rate, and that we've done our bit now for the last 6 months. Now we're up to the cycle and the private sector to do the capex. But yep, Vishy is here, so let's go across to Vishwanath Nair, a banking editor, for more key takeaways from the policy. Vishy, you are at the epicenter of it all. Give us your view.
Yeah. On audible gasp as soon as the 50 bips came and then the 100 bips on the CRR came, it was, the other reporters, everybody went into a little bit of a jerk. But yeah, the point being that it's clear that the RBI is throwing everything, including the kitchen sink, at growth, hoping that the situation changes with specifically the urban consumption side of the story. So that's something that they're looking to support. This 2.5 lakh crore liquidity boost because of the CRR cut will go further than the 50 basis point rate cut in itself. See, the 50 basis point rate cut was essential to support the broader growth, but maintaining the average liquidity at the surplus for a longer period of time. Alongside that, addressing the concerns that bankers had that way too much of the liquidity is being impounded through measures like the CRR or the SLR, where the RBI requires banks to keep money aside compulsorily. So reducing that and allowing banks to access more of their liquidity to further lend, that is also very, very supportive. He's also pointed out that the CD ratio is, I think, about 81% is what he said, if I remember it right. So obviously there's a lot of headroom for banks to go out and lend further. More lending will also mean better transmission. And the RBI governor is very, very clearly saying that we should read these measures as RBI's way of propelling growth. So that's an important one. The other interesting thing, the other key takeaway is the change in stance from accommodative back to neutral. It changed only from neutral to accommodative a few months ago. So now we're back at neutral stance now. So that means, that indicates that maybe room for further rate cuts might be a little limited. So the RBI is going to take a more informed view depending on the data that comes in. Interestingly, GDP growth projections have not changed.
But inflation growth projections have been cut quite significantly. Thank you for that, Vishwanath Nair there. I just want to quickly, before we get our lineup, I just want to quickly tell you how the markets have responded. Let's pull up the intraday of the Nifty first. And yes, a spike when that 50 basis point was cut. A little bit of a dampener that you're seeing because stance back to neutral gives a little bit of concern on whether you're going to continue to see that rate cut trajectory and then the CRR cut again seeing a bit of boost. Banks are doing fine. Look at the bank nifty, spike in the bank nifty actually, and a sharp spike thereon when that 100 basis point cut in the CRR was announced. Tanvi Gupta Jain joining us now. She's Chief India Economist at UBS Securities. Jaydeep Iyer, Head of Strategy at RBL Bank with us, as is Katrina L, Director Economic Research at Moody's Analytics. Welcome to all of you and thank you so much. Tanvi, on a scale of 1 to 10, surprise at what the governor has said?
I would say I'm definitely surprised. We never had a 50 basis point rate cut, 25. We were not expecting a CRR rate cut, especially when liquidity is so much in surplus. I didn't realize that the RBI will go ahead and do a CRR, which means they were uncertain whether this liquidity can sustain or not. And clearly the stance changed. So I think in a scale of 1 to 10, I would say 8.
Wow, so 8 and a positive 8 that I can see there. The messaging seems to be very clear. Katrina, let me come to you on that. The messaging is very clear that growth, and we will go whole hog behind growth. There's no holding back here.
I think that makes a lot of sense to deliver this additional 50 basis points, because if we're looking now at the actual settings of monetary policy, we can see that now the policy rate is in neutral. So it's no longer being restrictive of domestic demand, and which makes sense at this point, given the significant downside risks to global growth and the vulnerabilities that India's economy has. So I think that 50 basis points to rush a bit quicker to get there, was the appropriate move at this point, even though it has been a bit of a surprise to markets.
Right. Thanks, Katrina. Jaydeep, let me come to you as well. Taking into consideration, what they've said in terms of the stance as well, are they being overly cautious to avoid overstimulation? And or by keeping it neutral, is it more flexible to either maintain or adjust them depending on the incoming data they see from the global markets as well? Jaydeep.
Okay, sorry, I didn't realize that was for me. I think, from a banker standpoint, I think we've, in the past, generally expected stance to go with liquidity. And when the governor announced change of stance from accommodative to neutral, I was a little, disappointed to say the least. But I think the CRR bazooka came in after that. So I think the way I would interpret it is that the neutral stand is just to say that more rate cuts are obviously subject to data, subject to growth, inflation dynamics, and so on and so forth. But there is no need to worry on liquidity. Liquidity is going to be easy, and a liquidity through CRR cut by far is one durable, definitely, and also is a direct impact to banks' profitability. So all of that would mean more confidence from the banking sector to lower rates on the lending side. Which is what I think is being attempted here. So, I think my answer on a scale of 1 to 10 is a surprise on 10. All parameters. Whether it is rate cut, whether it is stance, whether it is CRR cut, I think it was quite amazing.
No, and before I go to Jayesh, I was going to ask Tanvi. Tanvi, why is Tanvi at 8? I mean, what would have made it 10? Was she wanting the stance to not change? But that was the key. Yeah, sorry,
no, I think 8 is a very good number, I won't say, but a part of it was expected. There was a section of market who was expecting a 50 basis point rate cut. Yeah. People thought, looking at the bank credit growth number for the month of April, at least we have the mid-April number, the credit growth was 9.8, growing in line with nominal GDP. And we definitely wanted credit to come back to get some boost on leverage funded consumption, to give some boost on investment cycle. So I think I won't say it was a complete surprise, because there was a big section, small section which was still saying a 50 basis point rate cut.
Okay, so no surprise, and which is why an 8, but maybe could have been a 10. Jayesh Mehta is with us as well. Jayesh, what is your first reaction? Because there are 2 or 3 things out here, right? I mean, the repo, the CRR in 4 tranches, the government. I mean, do you think the governor is saying that liquidity will stay ample, or is the governor saying that, hey, we are not sure about the liquidity and therefore we are enacting those CRR cuts? And of course, the change of stance as well. How do you think about that?
The 2 things, the expectation was, now and the next policy, one would not look at beyond that. So But if you look at next 4 months, the trajectory was perfectly fine. So why not do it now rather than doing 25 now and then in 2 months later? So I think that was a good surprise, though there was 20% people expecting that there could be 50 basis point, and I think they acted upon it. So I think there is a decisive action to support growth, and doing it upfront anyway made sense, because if you are thinking that you want to do it now and 2 months later, might as well do it upfront, right? So that's one part of it. And second part of it is like the CRR. Again, if you really look at it, right, it's actually starting from September. So it is actually assuring you for if there is some other things which happens, liquidity will be provided, and that liquidity will be there because we'll have the busy season starting from the second half, right? And from that perspective, you will also have festivity seasons and stuff like that. So the liquidity will be enough at that point of time. And the idea is, of course, there is also one more thing on liquidity, which is being there. It's not only pure liquidity, but it's also a change of stance on reserves, not only us, but every global central bank right now. US exceptionalism is kind of dying out, and therefore why do you increase your allocation more to US? And there is no other alternative at this juncture, might as well support the local balance sheet. So it's like either you increase your foreign currency exposure or you increase your INR exposure on the balance sheet. And same for every global bank in the world. Global central bank in the world. So I think it's very good, very supportive, very upfront thing is always good. I would not worry too much on the stance because you still have visibility of next 4 months. You don't have visibility beyond that.
Yes.
Maybe next policy where we will see the stance could, depending on the data.
Okay, so before I come to all of you on what you think the quantum of cuts in this calendar is going to be, I want to bring in Pranav Gundlapalli, Senior Research Analyst at Bernstein, also joining in on the conversation. Pranav, so glad to have you on. Should I ask you the surprise question? Everyone is talking about how surprised they were. Was it a gasp? Was it a wow when you heard 50 basis point and then add that on with 100 basis point in a CRR cut? What is the very clear messaging from the governor and what does it mean for financials?
I think at least from a financials perspective, it's almost a relief because the loan growth had started to drop. It had dropped from 16 percentage points a year ago to 10. So I think both the actions, the CRR cut as well as the larger than expected rate cut, is a way of saying that we need loan growth today and we don't want to wait for 6 months or 12 months before the new LCR guidelines or anything else kicks in. So I think it's a statement that there is urgency to bring back credit growth, which is now dropped to sub 10%. So it is good for the banking sector, and the assurance of liquidity will hopefully let the lenders lend a bit more aggressively.
Yeah, well, Jaideep Iyer, will lenders lend more aggressively? As a banker, you said it's glass half full, glass half empty. How do you think lenders will lend more aggressively?
No, I think I guess if you look at the CRR cut, I think that's a big boost to profitability. I mean, my rough math is that the system will benefit to the extent of 15 to 17,000 crores, if not more, in terms of less cost or more profit, or whichever way you look at it. And I think that's a big thing. I don't think anybody ever expected CRR cut. And I think while the stance is neutral, which is a bit of a surprise, but I guess I would still clearly interpret that this is a message that we need more credit growth. And with rates coming down, the good part from a system standpoint is that this is the first cycle, downward cycle with EBLR regulations in place. So by definition, the transmission on the lending side is going to be reasonably quick. And I think we'll have to see how deposit growth pans out and how quickly banks are able to cut deposit rates, because that will be a consequence naturally out of this policy. But on a net basis, I would expect credit growth to clearly pick up.
Okay. Now, the question, Katrina, the belief that some people might also have that if the Fed is supportive, right, and because inflation in India is going to be low, despite the change in stance, there might be a possibility of some expectations of a rate cut too. Now, is the Fed decision going to be the driving factor for further rate cuts from emerging market central banks like India?
I mean, I think it will remain certainly an input, but it won't necessarily remain a key underlying driver. And I think if we take a step back and look at why central banks in emerging markets, including the Reserve Bank of India, have been able to cut quite aggressively, including today's 50 basis point cut, it's because we have had that sustained dollar weakness for, you know, the best part of this year. And so because of that, you know, currencies like the rupee have been fairly steady, even though they are weak by historical standards. So it has given central banks that flexibility to provide that additional support to domestic demand, particularly private consumption, particularly to lift credit growth. So I think as long as the dollar does stay relatively soft, and our expectations are that it will, then that should keep the door open for central banks to provide that additional support should they need that. But at this stage, our baseline forecast doesn't incorporate further rate cuts from the RBI because we do think that they are now at that neutral level, and so they don't necessarily need to, at this point, deliver further cuts to make this stance more expansionary for domestic demand at this point.
Katrina. Right. In fact, thanks, Katrina. That's an interesting take as well. Thank you, Jaideep, as well for joining in. Let me come to Tanvi. Tanvi, we're talking about in terms of the interest rate direction as well from here on. So do you think the stance is more towards that and not liquidity management? How would you read into it?
Okay. So I would say the stance is basically giving some buffer to the RBI because the global uncertainty continues to remain elevated. So in case you need to respond at some point, you still have some 25 to 50 basis point buffer. You need to see that even if I look at 1 year forward inflation forecast by RBI, which is 3.7%, and RBI in the annual report mentioned that 1.4 to 1.9 is their neutral rate, which basically means your headline repo rate should be somewhere between 5.1 and 5.6. It is right now 5.5, which basically is telling you that they have some ammunition in hand. And neutral basically means depending upon which direction the macro is shaping up, we can swing. So even though I think we are done for the rate cut cycle for now, but I would still say 25 to 50 basis point is still the buffer the RBI has kept in its hand in case the growth surprises on the downside.
Yeah, that's an important point. Okay. Tanvi, we'll let you go on that note. Thanks so much for joining in. Now, we took the initial view from Jayesh Mehta and all of our guests, Pranav as well. Jayesh, I want to come to you on a specific piece. What happens to, let's say, for example, the rate sensitives? What happens to bond markets? What happens to currency over the course of the next 3 months as the RBI is showing its hand that yes, they will take actions, but maybe not on the benchmark repo rate?
So, of course, I think even on the stance, first, let me say that, I think I look forward for the stance on the policy 2 months later. That's very important because right now, you had 4-month visibility and you actually did it upfront rather than doing 25. So that stance, whether at that point of time, whether your 3.7 remains 3.7 or lower, I think that's going to be very, very crucial on the inflation projection, right? If that does not change, then we can expect another 25 basis point rate cut. As far as markets concerned, at this moment, normal traders would typically say go for profit booking, and now that the stance is neutral, and therefore not really expecting further rate cut. But let's look at it, right? It's not only neutral, it's 5.5 is reality, and then you also have ample liquidity, which will continue. So maybe after the initial round of a little bit of profit booking, we will see the yields going down. Definitely, at 5.5 repo rate, there is no logical reason for long bond, 10-year bond to be above 6%, right? And that has to move. And that will take some time, but eventually it will seep in. So that's there on the rate side, definitely will come down. I think on the currency side, very clearly 2 things, actually 3 things. One is, of course, dollar weakness. This is the global thing. In spite of that, we are seeing some moment of upward coming in because people do believe that there is some forward sales by RBI which they will cover. I might have a different view than the market there that, we have enough reserves. We don't need to really cover that unless they get their own pricing. And we don't know that pricing. Could it be 84? Could it be 83? We don't know that pricing where they would want to cover that, or maybe they don't want to cover it, right? As I said earlier, it could be, why keep on building foreign currency balance sheet, rather build a local currency balance sheet and support the local growth. So maybe that thinking needs to be, seen that whether it is moving towards that direction. But yes, a lot of central banks are thinking on that lines, right? So
probably that's what RBI is also looking at, Jayesh. But let me also get in Pranav into the conversation, and we have Aditi Nair also joining in. Aditi, I'll come back to you. But Pranav, taking into consideration now, the question is going to be with regards to how effective the transmission is going to be and the impact that the banks will see in terms of their financials. What's the view that you're picking up in terms of FY26? How will that entire cycle work according to you?
Right. So I think with the rate cuts and the promise of abundant liquidity, two things will happen. One, we expect growth to improve. I think especially with the CRR cut thrown in, from the current 10% system growth, we expect banking credit to get back to 12-13%. So I think that's the first positive. So we could see a bit of a growth surprise on the positive side for the banks. On the margins, given the abundant liquidity, we again expect a positive surprise on the margins, because steady state rate cut should not damage the margins too much for the banks. It's only the transmission delays which will damage the margins, again, temporarily. Here, with liquidity being abundant, I think banks will be aggressive in cutting the deposit rates, which means by end of FY26, the net impact on net interest margins might not be as bad as feared. So we're talking about 15 to 20 basis points impact to NIM for the full year in the worst case scenario. So overall, a positive surprise versus what is right now penciled in by the estimates, and therefore positive in the banks. For the NBFCs, yes, again, the rate cut is always a positive. I think the two things which become a drag is, one, what is already penciled in terms of expectations. I think a fairly sharp growth is already expected from these lenders. And second, with the rate cuts being brought forward, it's also seen as an indication that growth needs support. And in case it doesn't come back strongly, then there'll be a bigger negative surprise for the NBFCs than banks. So throwing valuations, impact on the metrics, probably side with the banks at this stage. They offer a better risk-reward trade-off compared to the NBFCs at this stage, especially the large private sector banks.
Pranav, very quickly, is that a minority view? A lot of people are saying that the cost of funds coming down might actually be positive more for NBFCs. So are you a minority? Are you a contrarian here?
Yes, because we do see the growth risk. I think you will not get both. You will not get growth and margin benefit. If RBI has been aggressive, it's because they are worried about growth.
Okay. Pranav, we'll leave it at that. Thanks so much for joining in. Jayesh, I request you to stay on for a minute because we have to take a final word from both you as well as Katrina. But just welcoming Aditi Nair in the conversation as well. Aditi, actually we didn't ask Jayesh for his rating, neither we asked Katrina. But Aditi, I'm going to start with you. You rating this 10, 9, 8 or slightly lower?
Look, as the chief economist of a rating agency that's regulated by the RBI, I'm not going to be able to give you a rating. Really sorry about that. But let me tell you what, this was a policy packed with surprises. I don't remember the last time we got so many surprises coming out of a single policy meeting. First of all, the large rate cut, the front-loaded rate cut. And with that, very interestingly, we got the change in stance. Again, cannot remember the last time that the stance changed and changed back so quickly. And then, of course, the CRR cut, which we really weren't expecting. Now, going forward, I think a couple of things are going to be really important. One, of course, how does growth respond? How does the domestic economy's resilience really come through in the next few months, before the next policy meeting, particularly? Are there any fresh cues that we have on the table? And, of course, how do the inflation readings pan out? So if you would have noticed, we got the reduction in the inflation forecast for the full year, but the quarterly trend is upward. So Possibly, I still feel that the Q2 number could end up being lower than what the MPC has told us even today. And if it does, that would be one of the factors that could lead to that final rate cut that a lot of us were talking about. So our view was we'll get 3 rate cuts of 25 basis points each. We've got 150 today. So that last 25, whether it will come through or not, I think is going to be very crucially determined by whether the MPC can further reduce its average forecast for FY26 inflation from the 3.7% that they've laid out today. And if they can particularly have confidence that the Q2 or Q3 number will be lower than what they forecast, then I think an August rate cut may still be on the cards, although with the change in stance to neutral, obviously the likelihood of that at this point in time is on the lower side.
Right. Aditi, stay with us. Katrina, let me come to you as well in terms of taking your closing comments. So overall, taking into consideration, you've already seen a 100 basis points rate cut that has happened in 2025. What would your expectation be, even if you have to be conservative from here on towards the rest of the year? Would it be right to say that no further rate cuts is something that you will bake in, or there is a further possibility as well?
So at this point, we don't have further rate cuts banked into our baseline forecast. Our expectation is that now that the policy rate is sitting at a neutral level, the RBI will sit back and then see how domestic conditions evolve, but also perhaps more importantly, see how global conditions evolve and then determine whether further adjustments need to be made to the policy rate and other levers as well. But at this point, I just don't think further adjustments will be needed. But it will be incredibly interesting to watch, particularly how credit growth, domestically driven credit growth, starts to pick up over the next couple of months and how aggressively banks then follow through, because that will be the key to determine how potent these monetary policy adjustments are. But I think it is certainly good news that because inflation is well contained and on the expected to remain at the lower end of the RBI's 4% midpoint, it does give them the flexibility to move if they need to. But the fact that they have changed their stance from accommodative to neutral does mean that they are signaling, look, don't expect more rate cuts unless conditions really deteriorate at this point.
Okay, Katrina, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time today, as always, by the way. Jayesh, sorry, so I know Aditi can't give a rating, as she rightly said, but is this the end of the surprises, Jayesh, for you, or do you reckon that there is ammo for some surprise? And is a surprise needed, or is a predictable policy regime actually pretty good for growth?
I think, firstly on rating, can I give 11? If
you can. You most certainly can.
No, I think you look at it slightly, back of the mind. It is a very thoughtful, decisive policy. Of course, as you said, everybody was expecting cut now in August. So I think that they've done it upfront. Now, after that, naturally, you have to see whether you are, as Aditi said, whether you remain at 3.7 or you move to 3.9 or you go to 3.6. Even if it remains 3.7, maybe it can still give you some room for rate cut. So that's something, or maybe if not August, maybe the policy after that, right? So something on that lines very clearly. On CRR also is a very, very, very decisive move. One of the things I'm just trying to recollect because I haven't got time to read it, but I didn't say that it's a temporary CRR cut, right? It's a cut. So from that perspective, I think it's also getting prepared, you are going to move to LCR guidelines. Why do have 2-2 situation? Banks have always been complaining, we have LCR, we have CRR, why do we need both of that? So I think from that particular situation, you have SLR, LCR, CRR all put together, and that is kind of putting burden on bank balance sheet also because it's zero cost. Whereas at the same time, you have RBI anyway borrowing at 0.25% lower than the repo rate. So that's something you can always keep a buffer. So from that perspective, I think it's taken a very, very decisive decision rather than going on to debate or should we reduce CRR or not, or could this be a trend? I don't know. One has to really look at it. Could it be a trend to actually reduce CRR on a overall basis? So I think that's the thing. It's too premature to say that, but it's something I want to look at.
So Jayesh, I'll interrupt over here. We're running slightly out of time. A quick range that you could give us, because the yields have hit the lowest level today since September 2021. What is that range you're baking in from here on, taking into consideration how the bond yields will move?
So we had 5.5% liquidity being abandoned. There is no reason why it should not be below 6, maybe whether it's 580, 56, 590. But that's the number I would look at. Of course, right now there has been some huge demand on the short end. The long end was suffering. So if you look at the short end 5 years, anyway at 575, right? 4 year, 5 year. So there is no reason for 10 year to be at 620 or so. And I think there is enough room, but of course there will be some profit booking coming in, as I said, and that may be another give a month or so. It will slowly trend downwards.
We'll leave it at that. Thank you so much, as always, for taking the time out and being with us on the policy day. Aditi, we won't push you for ratings, but what's the surprise element? Aditi, in a minute, if you can tell us, we need to slip into a break, but final words in a minute. What is the surprise element left for the next policy?
Very little, I think. Honestly speaking, the stance has been used so strongly to signal what's coming that I think there is probably not going to be too much surprise from here on out. And on second thoughts, with the CRR having been cut today, maybe that final rate cut is really off the table unless there are significant downside surprises on growth or inflation coming from here. And on the yields, I actually don't think that 10-year is going to come below 6%. I think 50 basis points of rate cuts are already been built in. And while there has been some down movement today, it's not been very sharp despite the surprise being 50 instead of 25. So I don't think we're going to breach 6%.
Okay, we'll leave it at that, Aditi. Thanks so much for being with us. Really appreciate your time today. And just get a quick perspective as we wrap up the show from Pankaj Murarka, CEO of Renaissance Investment Managers. Pankaj, thank you for joining in and appreciating you accommodating this request. What does this mean? Is this the RBI saying that we are pro-growth, but we've done our bit, now it's up to the cycle and the private sector to man the capex?
Morning, Neeraj. Yeah, it certainly means all of that, but it also means an acknowledgement from the RBI that they've been behind the curve. We've been calling out RBI has actually been behind the curve for almost 9 months. They were very late in the cycle to call out the slow. I think I would say it's a hop that RBI has taken to catch up with the cycle because RBI has been behind the curve. I think it's a pretty good decision or good monetary policy outcome that we've seen, that RBI has clearly front-loaded the 50 basis point cuts rather than stagger it over 2 rate cuts of 25 basis points each. And I think, I would think for the timing, it seems like RBI has done its bit in terms of bringing rates down. Now, because all of us know India has had the highest real rates in the world, and which is one of the big reasons for the sharp slowdown in the consumption that we've witnessed. The economy is in the midst of a cyclical slowdown. So it was high time that RBI front-loaded some of these rate cuts and hopped itself to catch up with the curve rather than staying behind the curve. And all of these has significant economic cost. And I think the good thing is at the same time RBI has ensured that they've induced significant liquidity into the system by announcing 100 basis points of CRR as well. So yes, I would credit RBI for what they've done today. And I think it looks like for the time being the central bank has done its job. I do certainly believe that the cyclical factors in the economy will come into play. And we will start seeing a cyclical uplift in the economy from all signs of it. Probably we are in for a good monsoon this season. And so probably the post-monsoon season, as we get into the festival season, which is where the large part of consumer spending happens in India, I think the economy is poised for a cyclical uplift.
Right. Pankaj, a cyclical uplift, banks that you've always been absolutely positive on over the last couple of months, how further does this actually, tell you that probably this is the best time? Because we were talking to another Pranav as well from Bernstein, where he's of the opinion an upward trajectory in terms of net interest margins to the tune of almost 40 to 50 basis points. Would you see a probable re-rating then?
Generally rate cuts tend to hurt banks in the short term because the lending rate cuts are much faster than the deposit rate cuts. But I think this time around, to cushion banks' balance sheet and to ensure adequate liquidity in the system, RBI has also done a CRR cut. So I don't see a significant impact on banks in that sense in terms of they're getting hurt. But I would say the names would be more stable with a marginal downward bias, which banks can easily digest kind of thing. Slightly more medium, take a 1 year view or 18 months view, and our view on banks continues to remain positive. I would rather expect an acceleration in loan growth from banks. I think with consumer spending coming back, loan growth had slowed down in the system. So I think system level loan growth and banks loan growth will improve now going into the second half of the year. So I will expect better growth from banks. I think certainly improves growth prospects of bank by 1 to 2% depending on different banks. But growth trajectory for banks will definitely improve.
And Pankaj, how about the rate sensitive side of it? Real estate, an obvious bet, but anything else that catches your radar that you should be looking at from here on now?
I'm positive on discretionary consumption. I've said this, we are coming out of 8 quarters of slowdown in the consumption. There is a lot of pent-up demand that exists in the economy. Consumers have been adversely hit by slowing economy and very high real rates. Now that the inflation has moderated very significantly, and now that we have rate cuts in place, just to give you a sense of 50 basis points of rate cuts is approximately about 5,000 crores more in the hands of consumers on a monthly basis, which is a combination of the reduction in the EMIs and the interest rate reduction they benefit from. So that's a significant pool of money in the hands of consumers. In addition to that, we also have the tax cuts which were announced in the budget in February will start flowing into the pockets of the consumer. So sum total of that, I think the impact of that in terms of lifting or reviving consumption or discretionary consumption spend will be meaningful. So I think that's one space which looks very interesting in this context.
We will leave it at that, but thank you so much for agreeing to do this. Really appreciate your time. And viewers, just as we wrap up this show, the markets have given a thumbs up for now. Bit tentative when the change of stance happened, but since then it's a rip-roaring move, 1% higher. I reckon that the large caps would be doing better than the mid caps and the small caps, maybe simply because the banks are leading the charge higher. Just bring up the mid cap and the small cap before we wrap up the show. I guess that the bank nifty would be at the top. Yes, indeed. The mid caps 0.5%, the small caps probably around that level, just 0.25%. So it's a large cap morning for now. Let's see if it continues. We take it a break. In fact, wrap up this show from Hiral myself. Thanks so much for tuning in. Up next is more special coverage on the RBI policy and the markets ahead.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome, you're watching Ask Profit, a show that gets all your stock related queries answered. Before we move on with the show and queries, of course, today's big day in terms of what the news has been delivered by the RBI governor as well as the RBI committee. We've seen a rate cut of 50 basis points, which was not expected. The expectations were of 25 basis points, but a 50 basis points rate cut. So in terms of key takeaways of this is, of course, first the 50 basis points rate cut, the changes in stance to neutral from an accommodative in nature. We have FY26 CPI inflation projection at 3.7% versus that of 4% earlier. So this has reduced. There is cut in the CRR ratio, that is the cash ratio, by 100 basis points to 3% from 4%. Rural demand steady, urban demand is improving as per them. Price stability remains a key focus area, private consumption remains healthy, and India remains attractive investment in terms of destination, and stress in microfinance segment is still persisting. So these are the 10 key takeaways from the RBI monetary policy meet. Now, both the rate cut as well as the inflation projection that the RBI has given is being cheered by the markets. Let's pull up the Nifty 50 as well as the broader markets and see how it's doing in trade. And of course, the Nifty Bank trading at its day's highs almost. The Nifty 50 is up almost 0.8%. The Nifty Bank clearly leading the entire pack, up 1.2%. Broader markets, however, doing tad lower than that of benchmark indices. The mid-cap 150 is up almost 0.5%. Small cap 250, 1/4%. But in terms of sectors, especially the sectors that are rate sensitive, that is your real estate, your automotive sector, are cheering this kind of move that the RBI has given. Let's pull up that quickly. There you go. Realty, top gainer on the Nifty, up by about 2.9%. Nifty Finance, of course, up by 1.7%, followed by banks, services, metals, as well as auto. All right, moving on with the Ask Profit show. Today we are joined by Neerav Ashar, Head Equity Research Analyst at Latin Manharraj Securities, and Ravi Singh, SVP Retail Research, Religare Broking, joining us now. Welcome to both of you, gentlemen. A very good morning to you. Neerav, I'll quickly come to you. How are you rating this decision by the RBI?
Good morning and thank you for the invite. I think it's an excellent decision by Reserve Bank of India. I think Reserve Bank of India has done all it could. It's pulled all its stops to ensure that the economy is back on track. We've seen RBI provide liquidity to the system earlier. We've seen the record dividend payout to the government. And now, of course, this 50 basis points repo rate cut and the CRR cut, which was least expected, I think it's a very, very proactive move by the Reserve Bank of India. And now it remains to be seen how the private sector capex picks up in the time to come, and also how consumption is able to revive in the times to come. But overall, I think it's a very, very positive step.
Right. And your view on the rate sensitive sectors, something like autos as well as real estate?
Well, yes, it's a positive. I think all these sectors, yesterday itself, they were showing signs of resilience, and there was some indication that something positive is there in the works. We've seen auto stocks rally in trade. We've seen realty already showing very strong moves yesterday itself. So I think these are all positives, and I think it's very healthy to see that even two-wheeler stocks, which were languishing, they've also started moving up in trade. I think we can expect housing finance companies also to start moving up in trade very soon.
Okay, let's start with the queries then. The first question is from Rajesh Maheshwari, who's writing in from Indore today. His query is on Radico Khaitan. He's got 190 odd shares at 1,505 a piece. That's his average price, and wants to know as to what could be the best course of action from a short to medium term perspective. Ravi, I'll come to you on this one. What are the charts indicating? Is there more steam left when it comes to Radico Khaitan?
Yeah, we have seen 27, 25 level. There is some profit booking, but right now is trading 26, 14. So is it attractive levels? And long-term prospects is good, and short-term prospects it will hit again 2750 to 2800 levels. So I can say that if you need, then book the profit. Otherwise, you just continue because your buying level is very good. Put the stop loss of 25.75. So the next target would be the 2800. So just hold it.
The view on Radico Khaitan. Nirav, it's raining questions on banks certainly today. The next question is from Manjunath Nayak, who's writing in from Bengaluru. He's holding 3,000 odd shares of IDFC First Bank, and his average price is 70 rupees. So he's sitting on a significant, he's sitting on a profits of around 1,500 rupees right now, and wants to know if he can continue to hold this for the next 5 years. What's the outlook like?
Well, I think the stock has disappointed, at least if one were to go by the past performance. So I think it would be advisable to shift to some better names, something like a Federal Bank or something which is giving a better prospects of growth going forward.
And what would those counters be, Nirav?
I think Federal Bank could be a good alternative.
Okay, Federal Bank, a better alternative than something like an IDFC First Bank. All right, the next question then is on Dixon Technology. We don't have the name of this person, but he's bought 500 odd shares at 1750 a piece. Okay, his name is Narendra Mehta, and he wants to know as to what are the charts indicating for something like a Dixon from a next 6 months perspective. Ravi, I'll come to you on this one. Dixon Technology, how are the charts faring?
Ma'am, if you look into the shorter period, then definitely chart is negative. But I can say that in a daily, if you watch in a daily chart or weekly chart, then you feel very strong support around 14,500 levels. So I can say that put your stop loss at 14,500 or 14,200 levels. If you have some money, then you just again invested at current market price, then target would be the 17,500 to 1,800 level, but it will take time. So next 6 months you can just hold their position. So that is the better strategy for you.
Continue to hold is the view coming on Dixon Technologies. Viewers who are tuning in, you can also call us on the numbers that are flashing on your screen right now, the landline numbers, and you can also, of course, write to us on the WhatsApp number that is flashing on the top pan. All right, the next question is from Hariom, who's writing in from Karnal, Haryana, and wants to know if he wants to buy a bank from a 1 year perspective, which bank should he park his money in? I'll come to you again, Nirav, on this one. Federal Bank was one of your suggestions, but if he wants to spread that money into 2 or 3 odd banks, what would your picks be?
Well, I think then the obvious choice would be HDFC Bank and ICICI Bank.
HDFC Bank and ICICI Bank. Can you elaborate more as to why you're picking these two?
Well, both of them are the leaders, and one is going through a transition phase after having merged HDFC. And of course, the other, that is ICICI Bank, it's very aggressive and it's carrying the mantle of leadership as far as the banking sector is concerned. So I think both of them have very strong prospects going forward.
Okay, fair enough, Nirav. The next question is from Rajesh, who's holding Raymond shares, 1500 odd shares at 2130 a piece, and he's been holding since September 20th. So he's also got the Raymond Lifestyle, considering the demerger that has happened, and will also be eligible for Raymond Real Estate once that gets demerged and list. Nirav, I'll again come to you on this one. Should he continue to hold? Because Raymond Limited now will be having its engineering business, which is growing at a decent pace, and the management is very optimistic when it comes to the growth levers there.
Well, yes, because I think he should continue to hold, because almost Raymond is firing on all cylinders. I think they have a very almost zero cost real estate, which can be a very big growth driver for the company. The textile division has been doing quite well, and of course this engineering division is also picking up. So I think the advice is to hold.
Right. Let's also pull up the Nifty Bank and see how it's making waves today. The Nifty Bank has touched its lifetime high right now. There you go. Of course, trading at days highs and lifetime highs, trading at the levels of that 56,500 odd levels, up 1.4%. We'll have to see as to how much of these gains are sustained throughout the day. And there you go, the counters. IDFC first leading the chart, up by 5 odd percent, followed by Axis Bank, HDFC Bank, Kotak Mahindra Bank, AU Small Finance Bank. Only Bank of Baroda is on the losing end. There's 2%, that's down 2%, and Canara Bank, which is down by about 1 odd percent. But Nifty Bank at its life high on the back of the decision given by the RBI policy meet. All right, the next question then is from Bhupendra Mehta, who wants to know if this is the right level to enter into something like a Keynes technology. Ravi, I'll come to you on this one. In terms of the EMS players, they've done significantly well when it comes to their Q4 performance. Do you think that this is the right time to make an entry into something like a Keynes technology?
Ma'am, see, trend is your friend, and today is a bank day, so I can say that, yeah, stock is trading at a very crucial level, but this is not a right time to invest. So better you choose banking stocks. The lot of stocks we are suggesting is Canara Bank and Federal Bank. A small bank is a Central Bank and Bank of Baroda. These are banks are have enough potential to go give at least 17 to 18% return from the current level. So why you invest in that type of stock? Just avoid and buy trend is friend.
Trend is friend is the view coming in on Ravi. Go ahead and buy banks is his view. All right. The next question is from Akhilesh, who's writing in from Andhra Pradesh. He's bought 104 odd shares of TV Today Network at 249 levels and sitting on a loss of 8,000 rupees right now. Wants to know as to whether he should hold or exit. Ravi, I'll again come to you on this one. It's one of those media stocks that's always volatile in nature. Do you suggest to continue or book losses at the moment?
Ma'am, it's very difficult, because if I'll say better if you comparing with the media industry, then why you miss the NDTV stocks? So they have enough potential. So TV Today, I think just take exit from the current market price, because there is a strong resistance around 170 levels. But if you want to buy another stocks, then we have a lot of options, right? Like banking or construction. Maybe you can switch their position to NMDC. But if you want in TV industry, then NDTV is a good option for you.
Right. So that's with regards to where the media stocks are concerned. Our next question is from Narendra, who is writing in from Hyderabad and wants to have a medium-term outlook on something like a Sundaram Clayton. He's holding 10 odd stocks at 2,271 a piece. Nirav, not sure if you have a coverage on this one or a view on this one. If you have, should he continue to hold?
Yes, he should continue to hold, because stocks like Sundaram Clayton and all are this category of stocks. They are portfolio stocks. They are not meant to be traded. They are meant to be kept in the portfolio. So you'll get definitely you'll reap the rewards of this in the medium to long term.
Okay, so that's the view with regards to where Sundaram Clayton stands. Our first caller for the day, Rishabh, is calling in. Rishabh, a very good morning to you. How can we help you?
Hi, good morning. So I've been holding Devyani from past 3 years. I'm a long-term investor.
Okay.
So the average price I'm holding at is currently 174. Okay. I'm a long-term investor. So wanted to know what's the long-term outlook for this particular stock.
All right. Got your query, Rishabh. I'll take this up with Nirav. Devyani International, it's not been a very impressive stock performance if you take the past 3 years, right? In terms of their overall fundamental performance also, last 2 quarters QSRs have picked up, but otherwise the overall demand has remained subdued, and that's still a concern per se for QSRs. But if you had a view on Devyani, should Rishabh continue to hold or shift to something like a Jubilant?
Well, I think Devyani and Jubilant are from the same group, and I think the stock has underperformed. So I think the better option would be to maybe shift to something like a Westlife Development. That would be a better choice.
Okay, shift to Westlife is the view coming in from Nirav instead of holding Devyani. All right, our next caller, Jagdish, is calling in from Bengaluru. Jagdish, a very good morning to you. How can we help you?
Ma'am, so I'm holding Manyavar, so close to 11,273 shares. At the price of 807, I bought it.
Okay.
Actually, so I had analyzed, so it went twice, so up to 40 to 50%.
Okay.
Then I went that the moment it went, it came down to close to some 25%. Then again it went to 50. Then again it came down to some close to 37%. Now again it went up close to 50, and it went down to close to 50%.
Right.
So below the issue price somewhere. So from the day of issue to from here it was close to some 70 to 20% down. So it is right time to hold it, or if I look quarterly results also, it went after July and all, September quarter was performing well. So is it right time to hold, man? So
I got your question, Jagdish. I'll take this up with Ravi because as you rightly mentioned, Q4 earnings were disappointing for Vedant Fashion, and retail sector as a whole in tier 1 cities has been subdued in terms of demand. But Ravi, what are the charts indicating for Vedant Fashions?
Ma'am, he has done enough research, but I can say that don't be a bias. Levels you have to watch particularly. 780 is a strong support level. If below trading that level or closing below, then you take exit from the current level. Otherwise, you just hold. Again, it will touch the level of 880. Once 880 level hit, then you just ask profit again.
Right. So continue to hold is the view coming in on Vedant Fashions where charts are concerned, of course. Our next caller, Mohan, is calling in from Bengaluru. Mohan, a very good morning to you. How can we help you?
Yes, madam. I am holding 80 shares of Enviro Infra Engineers.
Okay.
So it is for long time view.
Okay.
Should I add some more or wait for a correction?
Okay, I'll take this up with Nirav. Nirav, right now for him, it's almost no profit, no loss situation. Do you recommend to continue to hold Enviro Infra?
Yes, I think he should not only hold, he should try to add also if possible at these levels.
Okay, try to add at these levels is the view coming in, Mohan. Hope that solves your query. Our next question then, Priyanka is writing in from Bengaluru. She's holding 10 odd shares of CNC Automation, Jyoti CNC Automation at 1250 a piece, and wants to know if she can continue to hold this for more than a year or not, and can she accumulate more at the current levels. Nirav, I'll again come to you on this one. What's the outlook like for Jyoti CNC?
Well, the outlook is very positive, and if possible, she should do a stock SIP also. That's highly recommended in this stock.
Okay, stock SIP in Jyoti CNC is recommended as per Nirav. All right, our next question is on GMR Airports. Ravi Bhatnagar is holding 2,000 shares bought at almost 80 rupees a piece and wants to know if he can continue to hold for the next 6 months to see his profits grow more. He's sitting on a profit of 11,000 rupees right now. Ravi, I'll come to you on this one. Should he continue to hold?
Yeah, definitely. Chart is consolidating and it will test again 92, 95 level very soon. So just hold with the stop loss of 80. I think once it correct around 84 or 83, then you can add also, but hold for the target of 92.
Okay, hold for the target of 92 for GMR Airports is the view coming in from Ravi. Our next question is from Murli, who's writing in from Bengaluru. He's got 65 watt shares of Vedanta at a price of 447. He's bought it for 2 months and wants to know if he can continue to hold or exit. Ravi, I'll stick with you for this one. Vedanta, what are the charts indicating?
Ma'am, this is a stock, I can say that for the long-term portfolio. So if you are doing trading, then that is a difficult. But I can say that stock is good, dividend is good, very happy with the client. So I can say that just hold your position with the stop loss of 425 for the target of 470 to 475 levels.
Okay, so that's with regards to where Vedanta stands. Our next caller, Pradeep, is calling in from Bengaluru. Pradeep, I believe you have a question on Nazara Technologies.
Yes.
Go ahead, ask your query.
Yeah, I had bought 25 shares at a price of 682.
Okay.
Holding it for 2 years.
Okay.
Now I have a vision of another 2 years.
Okay.
Now the stock has recently run up high. So I thought to seek your opinion on whether I should sell or book profit.
Okay, got your question, Pradeep. I'll take this up with Nirav. Nirav, he's sitting on profits of 13,000 odd rupees right now. Should he continue to hold?
I think you should book profits and move to some better quality IT stock.
All right. And speaking of Nazara Technologies, the next show, that is Know Your Company, is going to feature Nazara Technologies today. So Pradeep, of course, I request you and other viewers also to go ahead and watch. What we are going to address is why cash flow hasn't kept up with profitability, how the mix is going to change, and how large sports media vertical and how large it can get, margins of different businesses. So we're going to discuss all of these things. What will be the margin levers, growth ahead, plus levers from new acquisitions. All of this will be discussed in KYC today. All right, with that, we're completely out of time on this edition of Ask Profit. Today it was a curtailed show because of the RBI policy meet, but we'll see you back on Monday. Nirav, Ravi, thank you so much for joining us and giving us all your insights. Viewers, keep watching KYC on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Hello and welcome. You're watching KYC. I'm Harsh Saitar. Today we're going to be talking about Nazara Technologies. It's again an IPO which happened less than 5 years ago, and it's a company which had immense investor interest. Now the stock has rallied. It's done very well for itself. and therefore we've picked this one up. Also, the FY25 numbers were quite good in comparison, and that's why we saw a decent amount of traction in the stock as well. Let's though quickly look at what I want to really look out for. The first thing is going to be the cash flow number. The cash from operations in FY25 is far lower than profitability or EBITDA or however one quantifies it. And therefore, that's my primary concern. Why is that so? And what is it that changes in the next year? Can some of these cash from operations get loaded into FY26? Is that a surprise at all? The second one is going to be the levers for growth. They generally make acquisitions and they do growth mostly through inorganic means, but can they grow organically in a sharp fashion will be the question. The third piece is with regard to the fact that you just have to have better margins in this business. Can margins improve? What are those levers that one will look for in terms of margins? Now, they also have introduced a new vertical, and I'll just take a minute to explain this. The sports media vertical, how large can it get? Because they might delink that from the current verticals that they have. So are we seeing a large vertical get delinked or not will again be the question. The margins of different businesses will be the other piece I'll want to know about, but they ventured into offline games. How will offline games really contribute to the overall margin picture as well as to overall top line? What's the goal there? Because that is more recent in terms of its business acquisitions. Now, in terms of long-term goals, of course, it's a gaming company and therefore will likely stick to that industry. But what's the long-term goal like? What are the numbers that they will look to clock? Because you're currently at 10,000 crore in market cap, and therefore, is there an opportunity for that to expand or not will be the question. They've made lots of acquisitions and that's how they grow. How do they continuously ensure monetization and efficiency of some of these acquisitions that they've made will be the last piece I'd want to really look out for. New acquisitions, what's the plan? How do they balance profitability with some of these acquisitions? Well, all of that and more when I speak with management. But first off, let's try and understand the business itself. This one was incorporated in 1998 by Nitesh Mitter Sen, who is the founder as well as the current promoter of Nazara Technologies. It's a multi-million-dollar company now. It's diversified. It's got a global presence, and it's primarily into gaming. It's India's only listed gaming company. What it also boasts of is a global presence, which I spoke about. They continuously raise equity. That's also a possible concern for me, and that doesn't shape up well because you continue to dilute existing shareholders. How much of that is going to continue along with promoter stake sales will be the other thing I'd want to know. Let's look at the business now at a glance. You have all of these verticals within the company, but primarily the company divides itself into three verticals. One is the gaming vertical, the other is the esports vertical. Within esports, there's sports media and there's online gaming tournaments, and then there's the ad tech vertical. Most of these verticals grow or have been part of acquisitions. Gaming is the one which they have built organically and now they use it for inorganic expansion as well. But other than that, largely it is acquisition led. Now, let me break this up a little bit more. Let's understand each segment. The first one is the gaming segment, and within gaming, it's the mobile gaming segment. They do these acquisitions. They've created a company within that, or rather they have acquired the World Cricket Championship and the Big Bash Cricket, which are both games within the Next Wave multimedia subsidiary of theirs, and that's one of their investments. The other one is again mobile gaming, but they acquired this one called Curve Games in May of 2025. It's a London-based video game publisher. The acquisition is 250 crore acquisition, and it offers a higher margin revenue, so it's margin accretive for the company. It's got cross-platform expertise, and it's a global launchpad for Indian developers as well. So that's the other one which they've acquired recently. But this is the big one. They have a stake in PokerBaazi, which is moonshine technology. Now, PokerBaazi, you would have seen various ads, and this is the more familiar of the many businesses that Nazara runs. It has acquired a 48% stake for 832 crore in September of 2024. It's real money gaming, and this gives it a presence in that real money gaming segment. It's achieved the highest ever revenue in FY25, and of course it's boosted by campaigns within IPL and Shark Tank, which are the marketing campaigns that they run. They continue to accelerate user acquisition within this business. So PokerBaazi is the other big one. Then you have Paperboat Apps, which they acquired in July of 2024, gamified early learning segment with the Kidopia app. They have an app for kids to play children games. So that's the other one which is which they run. Now, talking about some of the offline games, you have Funky Monkey and Smash, which they have acquired in 2025. Funky Monkey, Smash is a full acquisition which they made under the IBC or the Insolvency and Bankruptcy Code due to issues with regard to the business. But Funky Monkey, they own 60% stake. It's an indoor soft play and entertainment center chain and caters to children. Now let's talk about esports. The business is extremely large, so I might take some time to go through it. The esports business, Nodwin Gaming is the other piece that they have a stake in. They own 55% majority stake in Nodwin Gaming. It's an independent subsidiary. A platform for growth is what they call it, and they plan to raise additional capital this month within Nodwin Gaming. It generally organizes esports tournaments. That's what they do. So again, an interesting play there. The other play that they have is in the sports media space, where they have Sportskeeda and Pro Football Network. Sportskeeda, as you well know, is the Indian platform which caters to cricket news predominantly, and then you have Pro Football Network, which is the equivalent platform in the US for NFL and the like. So those are also valuable in terms of assets that Nazara owns. And then you have the ad tech segment. Again, this is a niche. They acquired a majority stake in DataWorks, 55% stake, in January of 2022. That for 225 crore. It's aimed at enhancing customer acquisition capabilities. It works very, very well with the existing business of Nazara, which is acquiring customers for gaming. They do this now for other businesses as well. So therefore, that is the other synergy which they've tried to unlock through acquisitions. But now let's look at the rating parameters that we will be analyzing with regard to our Nazara technology. We'll start off with the income statement, the balance sheet, the cash flow, the shareholding pattern, and return ratios, street cred, street coverage, valuation, yeah, so you have all those 8 parameters that we look at. Let's start off with the income statement now. The last 3 years, the income statement has actually done quite well for itself. You've seen a 38% growth on the top line. The EBITDA has gone up by just 12% on a CAGR basis. Margins have shrunk actually. They've come under pressure. Can those margins go back will be the question. Profitability has also done decently well for itself on a 3-year CAGR basis. But over the last year or so as well, you've seen decent growth on that profitability metric. So keep your eye out on that. So it's clearly a positive with regard to the income statement, but look at the margin trajectory. I want to highlight that for you. From 14%, margins have come down to 7.5%. This is where the margin pressure has been acute. What they've done is they've made acquisitions, and some of these acquisitions are in loss-making businesses, and therefore what you're seeing is a margin drag from some of these acquisitions. As they plan to scale these acquisitions, you might see margins start to revive. The question is how much and how quickly. So that for that we will obviously speak with management. Let's break this up into segments. There's gaming, there's esports, and there's ad tech. 3 segments which they have. The gaming segment is out of the 1600 crore, roughly contributes a 30% to the top line. The esports segment is around 750 crore out of the 1600 crore, so it's a larger chunk. And remember, esports also has sports media within it. So not just Nodwin Gaming, but also the sports media segment. And then you have AdTech, which is fast growing from 103 crore last year in terms of top line. AdTech has now contributed 350 crore to top line. So that is where the significant chunk of growth has come from this year. You want to look out for AdTech as the big new growth engine if it were to play out. Let's look at how the balance sheet though is shaping up. You're seeing equity base continue to rise because they make acquisitions. When they make acquisitions, they need to issue fresh equity. When you have to continuously issue fresh equity, you keep diluting existing shareholders. That's the key downside here. So you want to take care of that. But outside of that, the borrowing is limited on the balance sheet, as you can see. Equity shareholders' funds or the book value of the entire entity is roughly 3,000 crore. Just 200 crore rupees of borrowing. It's gone up in recent times, but they've also made acquisitions, especially the inorganic route to acquire offline games or gaming studios or gaming parlors like a Smash has added to that borrowing number. Look at the cash though, cash in bank sitting on a very healthy cash in bank balance of around 450 crore as well. So that looks okay. Balance sheet doesn't look like a concern per se, just the equity dilution is something you need to take care of. But outside of that, no risk here in a significant fashion, and therefore we've given it a thumbs up. Let's look at cash flow very quickly. Now in terms of cash flow, this is where the concern lies. You look at the cash flow from operations at 65 crore, look at the EBITDA number at 122 crore. That is not really adding up. The cash flow to EBITDA is not really adding up. So you want to wait and watch as to what's causing that drag. The net cash flow likely negative because of acquisitions that they make. I wouldn't be too concerned about the net cash flow. So therefore we've given this a neutral. You want to wait and watch out for that. FY24 decent set, but FY25 not looking good. Let's look also at the return ratios now. You look at the way return ratios have shaped up, it's 2 to 5%. That doesn't look very appealing, right? You're seeing return ratios of north of 15% generally as part of filters that most investors make. This one with a sub 5% ROE and ROC doesn't really appeal. You want that ROE, ROC to inch up, and that's the other question that hopefully we'll get answers to. Now let's talk about the shareholding. The shareholding, again, a crucial part of this entire basket. The shareholding pattern has really just seen a downward trend where promoter shareholding is concerned, and this is a key thumbs down. Not only are they diluting, they're also selling stake. They sold a 6% stake to Plutus, for example, Plutus Wealth. I'm not so sure as to why that is so. We will ask and quiz promoters as to why they are continuously selling stake, but it's not a good sign regardless. From a 19% to a 9% in 2 years, well, it's not looking good. FI holdings have inched up a little bit, DIs have also inched up a little bit, but look at the public shareholding. The free float, 65% sitting in public shareholding, that's also not looking too good. So just from a shareholding standpoint, it's a major red flag, a couple of major red flags that we can see. Now let's look at street cred. Look at the way in which the stock has moved. 25% up 1 month, 6 months 21%, year to date 23%, 1 year 78%. So we've seen very strong moves, at least in the near term. And this is despite markets being tepid, especially SMID stocks from September, which haven't done well. Nazara is one that really stands out, and therefore we've given it a thumbs up with regard to street cred. So that's one positive with regard to where street cred is concerned. Now let's look at valuations. In terms of EPS, the FY26 EPS is expected to be at 14 rupees per share, and FY27 that's expected to go to 19 rupees per share. That is significant in terms of growth. The price to earnings multiple is at 88 times currently, 1 year forward, is expected to shrink to 64 times. I'm thinking, even if the company were to execute in the best way possible, a 66 times 2 year forward price to earnings doesn't look cheap. I mean, it may be a growth focused company, revenues are going up significantly, margins are also inching higher as per estimates, but there is no valuation comfort per se because there are no comparables. I cannot compare the valuation metrics, but versus the listing price, it's surely looking very, very expensive. And hence, I have given this a thumbs down. Let's talk about analyst ratings very quickly. You have 4 buy calls, 2 hold calls, 4 sell calls, a return potential of -6% as per Bloomberg. So there's actually a downside risk to this. Again, not looking good. I would at best give this a neutral, but what we're going to do is we're going to give this a thumbs down because a majority either are saying hold or sell. So therefore, we're tilted more towards the thumbs down. Let's quickly have a look at the ratings. Therefore, we are looking at decent growth on the top line, and therefore income statement is decent. Balance sheet in terms of debt is largely de-risked. Cash flow, you want more of that to come through. Return ratios are a thumbs down. Look at shareholding, street cred, valuation, street coverage. Sums it all up. We give this a 3.5 on 8 on our KYC ratings. But can this change? Really is the question. And I want to bring on board Mr. Nitish Mittal Sen, who is the Joint Managing Director and CEO at Nazara Technologies, to talk to us about exactly that. Good morning, Nitish. I want to first start off by understanding from you, what is the what's the drag with regard to cash flow in FY25? And I'm talking about cash flow from operations versus the EBITDA number. What's caused that drag, and can that reverse in FY26, and if so, how quickly?
Yeah, sure. As you saw in FY24, our cash flow conversion was close to 90%,
yes,
which to 54% due to some, I would say delays in payment collections, etc. But we're very confident that FY26 will, the cash flow numbers will be higher. And we're generally quite a cash flow focused company. We look at all the cash flows being generated. We've always been a positive cash flow generating company. So I don't think it's a long-term challenge. FY26 should post better cash flow results compared to FY25.
Has that already reversed, Nitish, to a certain extent? We're already in FY26, so some indicators.
Yeah, I think we're seeing positive indicators of cash flow. We usually put out a cash flow in September results.
Right.
So you'll be able to hopefully see that.
Okay, perfect. How does the mix change, Nitish? Because you've seen very sharp growth in the ad tech vertical. Does that continue on this higher base?
I think so. I think, we've acquired another company called Space and Time based in the UK. And right now we see good synergies between our existing ad tech platform, which is DataWorks, and Space and Time, and the team is busy, building that out. So I think over the next year, you will see improving EBITDA margins from that business, which should add to our overall profitability.
How much would that improve, Nitish? What is it at currently? Give us that perspective. And where does it go maybe 1 year, and if not 3 years from now?
Yeah, today the EBITDA margins on our ad tech business are, sub 10%. But I think over a 3-year period, we should be able to get it to a 15 to 20% kind of number.
That's on the ad tech business only, and therefore, what's the impact? That will be huge, Nitish. Where does your top line go? Give us more perspective.
I don't have a specific guidance out right now on top line. The only guidance we have out right now is that in FY27, we should be able to achieve a EBITDA of 300 crores. And we seem to be well on track to achieve that. That's up from a EBITDA of 153 odd crores in FY25. So we should double our EBITDA in the next 2 years.
Double your EBITDA absolute number in the next 2 years. Top line difficult to guide as of today, but give us specifically for ad tech. You said 20% margin number in 2 to 3 years from now. Where does the top line go? I want to understand top line contribution, either a percentage or either a number. What's the target like?
Look, I think our focus in that business, as you can see, is already generating strong top lines. So I think we are not very focused on driving faster growth in that business in terms of just top line generation. I think after these acquisitions that we have done, remember that Space and Time, which has added a lot of revenue to our current base, is a company we acquired recently. Our whole focus is on, bringing synergies, getting some cost optimizations done, and improving the EBITDA margins. So I think we would worry less about how the top line is growing there and focus a lot on how we can uplift the EBITDA margins to the levels I was speaking about earlier.
Okay. How confident are you of this 20% EBITDA margin number, Nitish?
Yeah, I said 15 to 20%.
15 to 20. Fair. The journalist in me gets to me sometimes. But yes, 15 to 20, Nitish. Tell me.
Yes, I think the team is working hard.
Sure.
And quite hopeful that we will achieve that.
Okay, fair. What about the other business verticals, Nitish? Are you going to split the sports media vertical? Does that create new levers of growth for it? Does it give it renewed focus?
Yeah, I think it's important to note that if you saw the presentation we put out at the end of the year for FY25 last month, I think we've kind of doubled down on our core gaming business because we're seeing the highest margins, the best cash flows, and potential to grow, and we are constantly acquiring very strong global gaming IP. Including in FY25, we've done multiple acquisitions in that space. So I think, at least from a capital allocation perspective, from a Nazara perspective, FY26 will be all about investing more in these gaming IPs and potentially acquiring additional gaming studios. The other businesses, whether it's the ad tech business or our esports business, are run by strong managements, are well capitalized, and are independently running businesses. So I think they will continue to grow in their own paths and own perspectives. But we are right now doubling down a lot on the core gaming business ourselves.
Nitish, you want to give perspective to our viewers with regard to what the thought process is. When you continue to acquire businesses, what's the thought process? What do you want to build out? And how you expect to scale? I mean, I've read a bit about it, but it's great to have your perspective. So give that perspective to viewers.
Sure. So, I think Nazara has built a very well diversified and stable gaming platform over the years. And we are well poised to, take advantages of two opportunities. One is the Indian gaming growth opportunity. The Indian gaming market is expected to grow the fastest in the world. We already have 500 million gamers. Monetization has lagged, but it is starting to pick up. So I think India will become a large revenue generating market in the gaming world over the next 5 years. And Nazara is best poised to take advantage of that. In addition to that, there is a lot of, I would say, opportunity of, Indian gaming companies going global. And I think Nazara can be the first globally respected gaming company out of India. So I think that's what we are pursuing quite actively.
Nitish, do you intend to double down on existing acquisitions you've made or continue to grow through acquisitions?
I think we'll obviously do both. Post acquisition, post acquiring a company, obviously our focus is always on how do we scale that business. Done that quite often in the past. If you go back the last 4-5 years, whether we acquired Kidopia, which was about 20 crore revenue business when we acquired and took it to over 200 crores in 3 years. Or a Sportskeeda, when we acquired it was a 15 crore revenue business, which in FY25 has done over 200 crores of revenue with very high profitability. Nodwin Gaming was a 17 crore business when we acquired it 5 years back, which is today a 500 crore revenue business. So I think Nazara has proven time and again that the companies it acquires can grow, and they can grow profitably because we focus a lot on profitable growth rather than growth at all costs. So I think we are quite confident that the companies that we acquired will continue to grow. At the same time, I think it's a fantastic opportunity at this point of time for Nazara to expand further through acquisitions. We have very attractive opportunities. We have the right momentum and the right brand positioning globally for a lot of gaming companies wanting to partner with us. So we will definitely double down wherever we can.
Okay, point taken. Your return ratios, though, Nitish, have shrunk. This doubling of EBITDA, what does it do to your return ratios, and where would you want it to normalize? Because it's been a very long period of growth-focused capital allocation. When does that change to profitable capital allocation?
Yeah, I think it's important to note when you look at our return ratios, right, that because we have been a very acquisitive company, we absorb a lot of intangibles onto our book. And there is significant amount of amortization, intangible amortization that's happening below EBITDA. So if you look at our PAT numbers, right, our cash flows being generated are much higher than the PAT numbers. And therefore, I think some of these return ratios are currently skewed and don't really tell the true health of our business.
Okay. Where does it go therefore, Nitish? What's the goal?
I think in the near term, we will continue to acquire large businesses, and therefore you may continue to see at PAT level return ratios remain depressed. Also, it's important to note that we've done large acquisitions. For example, in FY25, we invested nearly 1,000 crores in acquiring a near majority stake in PokerBaazi, which is the #1 online poker platform in India. Again, that is today not profitable, but an extremely fast-growing market leader with about 30-40% market growth. We don't even consolidate those revenues in our books yet. So I think some of these ratios, because of multiple reasons like this, are skewed, and I would invite your viewers and investors to deep dive a bit into the numbers rather than look at them at a superficial level to understand the real health of the business.
Okay, Nitish, last question is with regard to promoter stake dilution. You've diluted some amount of stake. Give us the reason for that. And second, any further dilutions expected, both on the equity side as well as on the promoter holding side?
Sure. I think, of course, one reason of dilution has been, as you yourself mentioned, due to the acquisition opportunities, we have, raised equity capital, and that has led to some dilution. But I very strongly believe that the actions that we are taking in terms of dilution, and I know nobody likes dilution, but are very strongly accretive to the shareholders, and only that's when our intent is to do that. If we're able to increase significant value over and above the dilution cost of the fundraise. In terms of promoter selling, I think the promoter family ran the business for 25 years with very little liquidity. In the last year, we did dilute a certain amount of sell a certain stake. But I think the whole purpose was to kind of be able to be more aggressive in the business. We were being a bit conservative, having run this business for 25 years. And we've been very happy to be vindicated by our biggest investors who have kind of bought the stake, right? If you see the stake that was bought from the promoter family, it was bought by the largest shareholder in the company, Plutus, which has been in the company for the last 5-6 years and understands the company well.
Yes.
So I think that was a strong vindication for us. As you also know, Plutus / Arpit Khandelwal, as well as the well-known entrepreneur Mithun Sacheti of Carrot Lane have put out an open offer and are joining the company as co-promoters. So I think we are getting the right backing of the right investors. The Kamath brothers, led by Nikhil Kamath, have also taken a stake in the company.
Yes.
So I believe we have the right backing with the right investors. And we will continue to focus on making Nazara, like I said, a globally respected name in gaming out of India.
Okay, thank you so much, Nitish, for coming and speaking with us. Super having this conversation. Completely out of time as well, viewers. In fact, thanks so much for watching. More on the other side. Stay tuned to NDTV Profit.
That's huge. That is a biggie. It's out of
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
And welcome. We are just looking at the RBI policy meet outcome and the press meet consequently, which is supposed to take place. A lot of questions on the kind of repo rate cut which has taken place, 50 basis point higher than the expectation of 25 basis, which was expected. In fact, if you look at the CRR cut also, that was 100 basis point, which took the markets by a surprise. In fact, if you look at the markets, strong action that we are seeing here, top 5 decisions. If you are just summarizing it on that, the jumbo rate cut of 50 basis points, repo rate now, as of now, remains at 5.5%. The change in stance was a surprise that we saw a neutral rating as compared to accommodative. But let's hear in on the press meet on what is happening over there.
Thank you so very much. May I start, sir?
Yes, of course. Let's start.
Hello and good afternoon. Welcome to this post-monetary policy conference, press conference, second in this financial year. Friends, today we have with us Governor Shri Sanjay Malhotra, Deputy Governors Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, Shri Swaminathan J. and Dr. Poonam Gupta. I would take this opportunity to welcome Dr. Gupta to this press conference after taking charge as the Deputy Governor. We also have with us Executive Directors Dr. Rajiv Ranjan and Dr. Ajit Joshi and other friends from Reserve Bank. Before we begin, I'll request all of you to please either switch off your mobile phones or keep it on silent. Please restrict to one question per person so that everybody gets a chance. And then maybe going forward, we can take another question if time permits. And when you are asking question, please see that you switch on the mic which is in front of you. Because that's how the people listening to this transmission would be able to hear whatever is transpiring here. And once you are done, please switch it off to avoid the interference. Sir, there are 23 participants from media today, and with your permission, I'll call out the names. I'll ask Lata to ask her question.
Thank you, sir. Lata from CNBC TV 18. Governor, thank you very much for the opportunity and for a policy that is giving us a lot of headlines. Okay, I wanted you to clarify things on the liquidity front. In the last few weeks, the repo rate, the call rate was not at the repo rate. You gave enough liquidity and the call rate was 25 basis points below the repo rate. Now that you have given a 50 basis cut, will you use liquidity in such a way to align the call rate more to the repo rate, which means you will do more VRRs, reverse repos, or will the reverse repo have to be suspended because your 40 billion short positions have to be, will mature? So if you can give us a little more color on liquidity, and on the stands itself, is it fair on the part of the market to assume an extended pause? Or because the positive real rate, I mean, if you assume that that 1.4 to 1.9 positive real rate is what you are also going by, then with inflation at 3.7, you still have space to cut. So should the market assume that the terminal rate can still go down after the pause?
Yeah, so first of all, thank you, all of you, for coming here as usual and taking our message to everyone across the country. So thank you very much. You have asked 3 questions in 1 question. But we'll try to attempt to answer all of them. So first question is a very good question. In fact, what do we do with liquidity? Where do we actually maintain now the call rate? The call rate today is hovering at the lower end of the LAF as it was till yesterday. So it was at about 5.75%. Whether we now maintain it at 5.25 or at the policy rate, which is at 5.5. That's, as I said, we'll see how the situation goes. Of course, liquidity is abundant, and if we do not do any VRRs, then it's going to stay at 5.25. If we do VRRs, then, we can bring it anywhere between, depending on the amount. So we'll see, how the situation evolves, and we'll take a call. We have not really given it a thought on that. So we will decide, and you will come to know, in the coming few days. I'll not be able to give you a very precise answer. But having the policy at 5.5, and the stance, now going to neutral, so all that will, certainly come in the picture. We will take a call as to where, we will try to have the call rate. The second question is on where do we see the terminal rate. The MPC, I think, has very clearly, articulated that in the statement in the resolution that has come in. We have changed the stance from accommodative to neutral. And it has mentioned that there is now very limited space for the monetary policy, actually, given the current circumstances. And you are aware of the current circumstances, which is that growth is at about 6.5%. Inflation, we are projecting at 3.7% for this year. And next year, it's above 4, it's 4.5%, or roundabout. So given these current, if these were to play out, there is very limited space, is what MPC says, and that's why it has been reduced now. We have changed now to neutral. MPC also states that we will continue to monitor the incoming data, and basis that, given especially the uncertainties, what way now we will move will depend primarily on what the data suggests to us. There was a third question, which what was your? That's it. Thank you. So I've answered.
That's what I wanted. Yeah.
Thanks.
If you can allow me another question, I will.
Yeah, we'll come back later. We'll come back and see if there is time.
Thank you, sir. Next, we'll have Mr. Mayur Shetty from Times of India.
Governor, you spoke about the uncertain environment, and a lot of uncertainty is coming from the behavior of the US administration, and that is also resulting in a lot of volatility in dollar assets. So given this, how would you balance between rebuilding the forex reserves and managing exchange rate volatility?
See, our policy over there is very, very clear. It has been very consistent. And we do not manage, or try to target any price, any level, any band. You are aware of that. If there is any abnormal, that's a standard response, right? Any abnormal volatility, if it is there, that is what we try to counter, and we let the market prices be determined, prices be determined by the markets. Now, this question, and I think that was something that even Lata alluded to, and that was the third point, I think, that you mentioned.
The 40 billion.
Is, this 40 billion, etc. We are not unduly concerned about that. Even if you were to exclude that $625 billion, if you were to exclude this $65 billion, including, the one after 1 year that is coming in, we are not unduly worried, on that. It's a very, very comfortable level to be in. Yes, if there are opportunities and we can build reserves, that will happen. But that is not something which we will be unduly bothered about. Thank you.
Thank you, sir. अब मैं श्री अनुराग शाह से आग्रह करूंगा कि वो अपना प्रश्न पूछें. अनुराग शाह, ET Now स्वदेश से.
थैंक यू सर. थैंक यू सर. जो सर ने इतने बड़ा धमाका कर दिया, सबको चौंका दिया, तो मेन प्रश्न लेके आया था सर, वो भी पूछूंगा साइड में. सर ये आज के जो ऐलान से क्या बड़ा मकसद है और क्या संदेश आप देना चाहते हैं ब्रॉडर रूप में?
नहीं, ब्रॉडर रूप में देखो, संदेश हमारा यही है कि इन्फ्लेशन, आपको मालूम है, मुद्रास्फीति इन्फ्लेशन पे अब काफ़ी जो है नियंत्रण में है, और वो जंग जो है हम ये मान सकते हैं कि उसके ऊपर में हमने जीत हासिल कर ली है. तो एक मैसेज है, क्योंकि हमने 4% से उसको घटा करके जो हमारा अनुमान था उसको 3.7% किया है मुद्रास्फीति को. उसी प्रकार से जो ग्रोथ है वो 6.5% है, अच्छी है, लेकिन उसमें और गुंजाइश है उसके अंदर में और बढ़ोतरी होने का. तो जो भी हमें कार्य करना है, हम ये बिलीव करते हैं कि वो डिसाइसिवली करना चाहिए, सही समय पे करना चाहिए, और एक जो निश्चितता है, इस अनिश्चित वातावरण में निश्चितता मेरे ख्याल से जो है हमें मार्केट्स को, सभी को, बैंक्स को, इकोनॉमी को निश्चितता देने का बहुत अधिक ज़रूरत थी. इसी वजह से ये जो आपने देखा कि एमपीसी ने कहा कि हमने फ्रंट लोड किया है, ताकि एक ये निश्चितता रहे कि हाँ 50% हमें बेसिस पॉइंट्स कम करना है तो एक साथ ही उसको कर दिया। उसी प्रकार से जो CRR का है, हम चाहते तो हम इसको 4 महीने बाद भी अनाउंस कर सकते थे, हमने आज ही अनाउंस कर दिया पहले से ही, ताकि लोगों को, बैंक्स को ये निश्चित हो जाए कि लिक्विडिटी, जो कि हमने कहा ज़रूर है लेकिन वो एक्शंस में भी तब्दील होना चाहिए, तो वो एक्शंस में हमने अपने तब्दील किया कि जो CRR है वो एक हमने उसका आज ही घोषणा कर दी। तो निश्चितता जो है जितनी होगी उतना हमें लगता है कि उससे हमारी जो अर्थव्यवस्था है उसको बल मिलेगा, और यही हमारा संदेश है कि हमारी अर्थव्यवस्था अच्छी चल रही है, और उस अर्थव्यवस्था को दोनों मुद्रास्फीति को ध्यान में रखते हुए वो हमारा प्रमुख संदेश है, उससे हम बिल्कुल नहीं भटकेंगे। वो हमारा प्रमुख प्राइमरी हमारा जो मोटिव है कि प्राइस स्टेबिलिटी, मुद्रास्फीति को हम कंट्रोल करें, उसके ऊपर में हम अंकुश लगाएं, और जो हमारे को टारगेट दिया है उस टारगेट की ओर हम उसको ले जाएं। जब वो हो जाए तो उसके बाद में हम जो ग्रोथ है, ग्रोथ के ऊपर भी हम ध्यान दें, वही हमने इसमें किया।
जो स्टांस आपने चेंज किया सर, पिछली पॉलिसी में ही आप न्यूट्रल से अकोमोडेटिव आए थे और इस बार वापस एक ही पॉलिसी में आप वापस उस स्टांस पे चले गए, तो उससे कहीं एक मैसेज गलत नहीं जाएगा?
गलत मैसेज से मैं नहीं समझा। हाँ, ये बात आप ज़रूर कह सकते हैं, ये बात हमारे भी दिमाग में थी कि हमने पिछले बार ही तो इसको अकोमोडेटिव किया था। हमारे पास में चॉइस ये था कि हम उसको अकोमोडेटिव रखते, जो हमने बोला था, जो मैंने आपको कहा कि बोलते रहें कि अकोमोडेटिव है लेकिन करें नहीं कुछ, तो एक्शन जो है वो ज़्यादा इम्पॉर्टेंट है, और जो भी हम बात कर रहे हैं वो एक्शन में तब्दील होना चाहिए। इसीलिए जो है हमने उन हमारे जो स्टेटमेंट्स रहे इंटेंट के, अकोमोडेटिव केवल एक इंटेंट था, उसको हम अकोमोडेटिव रखते रखते नहीं चेंज करते, अकोमोडेटिव ही रखते, तो क्या वो बेहतर रहता, या हम सर्टेनिटी दें कि हाँ हमने अकोमोडेटिव से जो हमने आपको वादा किया था कि हम इसको रेट को कम करेंगे, डिसाइसिवली कम करेंगे, वो हमने किया, और स्टांस को हमने न्यूट्रल कर दिया है। आज के सर्कमस्टांसेस में जो स्थिति बनती है उसके हिसाब से बहुत कम गुंजाइश, जैसा कि MPC ने नोट किया कि उससे बहुत कम गुंजाइश अब रह जाती है, वेरी लिमिटेड स्पेस, उन्होंने कहा वेरी लिमिटेड स्पेस, तो कम गुंजाइश रह जाती है आगे और पॉलिसी रेट्स को कम करने की। ये एक पूरा संदेश हम दें, इसीलिए उसको न्यूट्रल में किया गया है।
धन्यवाद सर। मूविंग टू दिस साइड ऑफ द टेबल, मिस्टर मनोजीत शाह फ्रॉम बिजनेस स्टैंडर्ड।
Sir, good afternoon. Thank you, Punit ji. Again on this stance, I mean,
Thank you.
This policy has several surprises. The most surprising part is the stance. As you said in the last policy, the accommodative means the rate can go down or it can stay there. So in that, so neutral would mean the rates can go up. Are you saying rate will not go up, but there will be a long pause? And whether there is a voting on stance, if you can.
It will depend. See, it will depend on data now. This is what neutral means. We had explained it in our earlier MPC. I had explained it in the earlier MPC statement that neutral will mean that it can go either ways. It will depend on how the data comes in. If the growth is weaker, it can mean that it will go down. If the growth is good, inflation is going up, it can mean that the repo rate policy rate can go up. So it will depend on how the data, both on inflation as well as growth, turns out to be.
Was there voting on stance this time?
Stance, we have already mentioned that there is no, I mean the statute does not mandate a voting. There was a discussion on it, certainly, because we need to give a sense, we need to give a guidance. It's more of a guidance that we have to give to the market participants. And so there was a discussion, and everyone, all the 6 MPC members were of the view that we should change it to neutral. So there was no voting, but the view of all the MPC members is that going forward the stance should be changed from accommodative to neutral.
Also, if you can add just one more, are you satisfied with the monetary transmission that has happened so far?
I think it has, going by past trends, the transmission has happened much faster, both on in the money markets. In fact, you can see a huge transmission, more than what we have done, more than 50 basis points in the money markets at the shorter, especially at the shorter term levels. And on the credit side also, we are now seeing some initial signs. Deposit rates, in fact, have been reduced, retail as well as wholesale, by most of the banks. About 40 basis points, they have reduced. The average, of course, is about 27 basis points. It has reduced over there. 17 basis points is the reduction on the credit side, on the outstanding credit. And in terms of fresh loans, there is, that's a little slow, but it has started. It is about 6 basis points as per data that we have. So that's slow, but it is much faster than other times. Normally, it takes 6 to 9 months. It's only been 4 months from the first policy cut. So from first policy cut, or 25 basis points, against that, if 27 basis points on deposit side, 17 basis points on the credit outstanding side, and 6 basis points on the fresh loans, I think this is a very good transmission. However, we need to do it faster. And that's why we have front-loaded some of our actions.
Thank you so much.
Thank you, sir. Next, we'll have Mr. Vishwanath Nair from NDTV Profit.
Good afternoon, Governor. Couple of questions, actually. The first one with respect to your GDP forecast, which has not changed. The estimates have not changed at all. What is the growth boost that you're expecting from this cumulative 100 basis point rate cut that you've afforded? And thereby, would there be a revision for FY26? And the second part is on the stance itself. I'm asking you again, in the past there has been criticism that the stance is more or less becoming meaningless because we kept saying withdrawal of accommodation, but it was a prolonged pause. Is this a way to then bringing it back into relevance?
So your first question is what impact it has on growth. Obviously, it has a positive impact. It will be very difficult to assess as to how this transmission from monetary policy to the credit rates and then to the real economy, how that transmission happens. As you are aware, it takes minimum of, going by history, 6 to 9 months. We would like, of course, to expedite it, but we'll see impact of this only in the later half. So for this year, in terms of numbers, especially when there is so much of an uncertainty, we would not be in any position to give you how it will, to what extent it will impact the GDP numbers. Your second question is on, I can't actually speak about the past, what has happened, but our policy will be very, very clear. Whatever we are saying, we mean it, every bit of it, and you will continue to experience that.
Thank you, sir. Next is Ms. Swati Bhatt from
also
the
to be kept in mind is, whether it is past or present or future, a lot of it is dependent on data. So if the data kind of changes, even if it is, say, accommodative or tightening, it does not necessarily mean, that next policy itself, you are going to tighten it or you are going to reduce the policy rate. It does not mean that. It depends on how the data is actually coming in and how, what that data is showing. So if that data demands that you have to actually stay put, even if it is accommodative, it will, that's how, it will be done.
Thank you, sir. Next will be Swati Bhatt from Reuters.
Thank you, Puneet, sir. Sir, I just wanted to understand, you have front-loaded the rate cuts and the certainty obviously helps. But we've seen that despite the massive surplus liquidity that has been there in the market, there is very limited scope to lend because there is genuine lack of demand from companies and corporates. There's not much capex happening as well. How does this liquidity really translate to boosting growth? What is the advantage of having so much, flush of liquidity in the banking system? Similarly, on the CRR front as well, obviously you planned it in advance and announced it now. But CRR historically has been at the 4% sacrosanct level to some extent. Is there a renewed thinking on the CRR front, which is why you've gone ahead and cut it to 3%? Thank you.
Can I just add, nowhere you have told us why you cut the CRR. What was the RBI's thinking?
So let me take the second question first. I think the monetary policy statement that I read out, it did mention that it has two objectives. The first objective is that we need to, continue to provide liquidity, and I'll come to your first question relating to liquidity. And then we also mentioned that it will not only improve liquidity, but it will also help reduce cost of funding for the banks. So that is the other objective. And see, over the years, last 12, 13 years data I've seen, and one can even go back, the CRR has mostly remained at 4%, as you have rightly pointed out. During COVID, we reduced it by 1%. Now these reserves are basically kept for liquidity management. So the experience as of now does not suggest that perhaps, we do not need 4%. 3% can perhaps suffice. Having said that, we do not know what the future holds. So please don't hold me, to this number that, we are going to maintain this 3%. But as of now, it seems that 3% is a comfortable reserve ratio to have. And so from a liquidity management perspective, and so that's why, apart from providing liquidity, it will also reduce their costs and improve their NIMs by about 7 basis points, at least it should help, is our estimate. Why do we provide liquidity? So that, there is a better transmission, there is a faster transmission, and it is primarily, it's basically for that. Thank you.
Thank you, sir.
Take the next question.
Liquidity, but will it actually translate, sir? That bit is unclear. Because so far banks are not lending. So how does that demand come in?
It will depend. We have said, even in the statement, that this is not a sufficient condition. Monetary policy is not a sufficient condition. It is a necessary condition. We have provided that. We are confident that it will certainly translate into better credit growth. I am not able to give you a number. Obviously and certainly with confidence one can say that it will certainly increase, the flow of credit. And so that's why, this liquidity is important. A reduction in repo rate is important. To what extent and what time frame it will take, that will be difficult to say.
Thank you, sir. Next will be Mr. Ankur Mishra from ET Now.
Thank you, Puneet sir. Good afternoon, Governor. I want to understand from you that you have given a statement in the monetary policy that today's steps should be seen towards propelling to a higher aspirational trajectory. You're talking about growth. You have kept your target intact at 6.5%. Is there a scope of further revision ahead which should be expected with the kind of actions you have taken? And also, I will once again ask on the stance front, but in a cricket analogy, if you can explain, it was a roller coaster kind of a policy. We saw you announced 20, expectation was 25 basis point, you announced 50 basis point cut. Similarly for CRR, the expectation was 50, you announced 100. But on the stance front, you got back to the crease and said, I'll wait and watch. So how should one understand?
Well put. The target, you are saying that the target, the 6.5% is not the target, 6.5% is the forecast that we have made.
Sorry.
And the aspiration is certainly much more, between 7 and 8%, is our aspiration. Aspiration is 8%. We would like to grow, as fast as possible. You have said it all, I don't have to say anything more, on, you have put it out very well. As to what, this monetary policy, because everyone here in India, they may not understand our monetary policy, but they will understand the cricket lingo. So you put it out very well for your viewers.
Thank you, sir. अब मैं जी बिजनेस से एकता सूरी को आमंत्रित करूंगा।
Policy has been very well received by the markets. However, I want to ask questions which are a little different from the market how they've received it. So मेरा पहला सवाल होगा, पिछली पॉलिसी में हमने गोल्ड लोन्स के ड्राफ्ट के ऊपर बात की थी। उस पॉलिसी से लेकर अब आज की पॉलिसी में आपने कुछ चेंजेस सोचे हैं? क्योंकि बहुत से लोगों को ऐसा भी लगता है कि अगर सोना हम गिरवी रखने जा रहे हैं तो हो सकता है हमारे पास ओनरशिप का कुछ प्रूफ ना हो, क्योंकि वो हमें अपनी मदर या किसी और से मिला हो, या फिर हॉलमार्क ना हो। तो ऐसे जो ट्वीक्स हैं आप सोच रहे हैं नियमों में बदलाव? और दूसरा ये भी क्योंकि अब हम देख रहे हैं कि फॉरेन बैंक्स की बहुत दिलचस्पी है भारतीय बैंक्स में, तो आप FIIs को लेकर भी कुछ नियमों में बदलाव सोच रहे हैं? 26% का जो वोटिंग राइट है वो भले ही सरकार के पास है, या फिर फॉरेन बैंक कितना स्टेक ले सकते हैं भारतीय बैंक में?
अच्छा, आपने सवाल किया है जो गोल्ड लोन के बारे में, ये भी काफ़ी चर्चा में रहा है। मुझे लगता है कि ये सभी के लिए एक रुचि का विषय होगा, तो इस पे निश्चित रूप से आपका सवाल जो है बनता है। और मैं आपको बताना चाहूँगा सबसे पहले कि जो गोल्ड लोन के बारे में जो हमने रेगुलेशंस जारी किए थे वो केवल ड्राफ्ट थे, मसौदा थे, वो फाइनल नहीं थे। आपको ये भी बताना चाहूँगा कि हमने अब एक फ्रेमवर्क रेगुलेशन मेकिंग के लिए हमने एक जारी किया है, जो सबको हमने पब्लिक नोटिस के थ्रू हमने सबको बताया है कि कोई भी मेजर, जब भी हम कोई परिपत्र या रेगुलेशन या डायरेक्शन इशू करेंगे तो उससे पहले हम दो चीज़ें करेंगे। एक चीज़ हम कंसल्टेशन करेंगे, दूसरा हम उसका क्या इम्पैक्ट है उसका हम स्टडी करेंगे। तो उसी को ध्यान में रखते हुए ये भी हमने मसौदा गोल्ड लोन के बारे में हमने जारी किया। दूसरी चीज़ बताना चाहूँगा कि ये जो हमने जारी किया है इसमें कोई नयापन नहीं था, इसमें कोई नई चीज़ नहीं थी, ये केवल कोई नई बात नहीं थी। पुराने जो हमारे परिपत्र थे, पुराने जो रेगुलेशंस थे, उन्हीं को हमने कंसोलिडेट किया था, उनको कंसोलिडेट किया था और उनको रिआइटरेट किया था, क्योंकि ऐसा देखा जा रहा था कि कुछ जो हमारे रेगुलेटेड एंटिटीज़ हैं उनको वो अक्षरतः पालना नहीं कर रहे थे, क्योंकि उसमें क्लैरिटी नहीं थी और इसके बारे में उनको बताया गया था। इस कारण से इसमें कोई नयापन हालांकि नहीं था, लेकिन फिर भी जब वो बात बिल्कुल ब्लैक एंड वाइट में सामने आ गई तो इसलिए उसके ऊपर में हमारे पास में उसके कमेंट्स आए। तो मेरे ख्याल से आज ही हम जो है उसका फाइनल जो रेगुलेशन है, फाइनल डायरेक्शन है, आज नहीं तो एट द मोस्ट मंडे, सोमवार तक हम उसको जारी कर देंगे। आपने जो बात कही ओनरशिप के डॉक्यूमेंट्स के बारे में, वो जो हमने ड्राफ्ट जो इशू किया था उसमें भी ये बिल्कुल क्लियर लिखा हुआ है कि अगर आपके पास में उसके इनवॉइस नहीं है तो आप उसका एक सेल्फ डिक्लेरेशन आप दे सकते हैं, तो उसमें कोई चिंता की बात नहीं थी उसको, और हम उसमें और क्लैरिटी हम प्रोवाइड करेंगे। दूसरा ये एक बात आई कि क्रेडिट अप्रेजल, अब छोटे छोटे लोन के लिए क्रेडिट अप्रेजल नहीं किया जाए, तो वो भी हम इसमें डाल रहे हैं कि छोटे जो लोन्स हैं 2.5 लाख रुपए तक के जो लोन्स हैं उसमें गोल्ड से जो जिसमें कोलेट्रल आ जाता है उसमें क्रेडिट अप्रेजल की आवश्यकता नहीं है। तीसरा एक एंड यूज़ के ऊपर में बात आई थी कि एंड यूज़ की मॉनिटरिंग करनी है, उसमें भी हमने ये स्पष्ट किया है कि एंड यूज़ की मॉनिटरिंग तभी आवश्यक होगी जब आप उसका प्रायोरिटी सेक्टर लेंडिंग में उसका लाभ आप लेना चाहते हैं। चौथा और पांचवा जो कि महत्वपूर्ण प्रश्न LTV के संदर्भ में है, वो हमने कहा है कि LTV केवल जो कंजम्पशन लोन्स हैं उसमें ही, कंजम्पशन लोन्स में ही LTV का सिद्धांत लागू रहेगा। बाकी में आप क्रेडिट अप्रेजल करेंगे, उसकी और अन्य इनकम्स हैं और सिक्योरिटीज़ हैं, उसके हिसाब से अगर LTV रेशियो से ज़्यादा भी देते हैं तो वो रीपेमेंट कैपेसिटी के बेसिस के ऊपर में उसका आकलन करके वो दिया जा सकता है। और पांचवा और महत्वपूर्ण जो प्रश्न है LTV से ही संबंधित है कि वो 75% हमने उसमें अभी आज के दिन में हमने ड्राफ्ट डाला था, उस 75% को हम छोटे लोन्स के लिए 85% तक करने का हमारा प्रस्ताव है। 85% छोटे लोन्स के लिए, बिलो 2.5 लाख के लोन्स के लिए पर बोरोवर 85%, लेकिन इस 85% में इंटरेस्ट जो है वो भी इंक्लूड करना होगा। तो पहले वो केवल हमारा 75% था और प्रिंसिपल एंड इंटरेस्ट का ही था, जो कि कुछ कंपनियां पब्लिक सेक्टर बैंक्स जो हैं, अधिकतर सभी पब्लिक सेक्टर बैंक्स 75% पे ही दे रहे थे, इंक्लूडिंग इंटरेस्ट प्रिंसिपल। इसलिए वो प्रिंसिपल जो है केवल 65, 66, 67% तक ही दे रहे थे। लेकिन कुछ अन्य NBFC इत्यादि और कुछ छोटे बैंक भी हो सकता है, वो जो है 75% प्रिंसिपल दे रहे थे। तो इंटरेस्ट मिला करके बुलेट रिपेमेंट लोन में विशेषकर वो 88% तक भी चला जाता है, क्योंकि अगर 18% का लोन है तो आप रिवर्स कैलकुलेट करोगे तो वो 88% तक चला जाता है। तो छोटे लोन 2.5 लाख रुपए तक के लोन के लिए इंक्लूडिंग इंटरेस्ट 2.5 लाख प्रिंसिपल प्लस इंटरेस्ट। तो ये पूरी स्पष्टता जो है हम अपने सर्कुलर में देंगे। हमें उम्मीद है कि इससे जहाँ पे मिनिमम रिस्क के साथ में इस गोल्ड लोन की श्रेणी को हम अच्छे से रेगुलेट कर सकते हैं। दूसरा आपका प्रश्न है कि क्या हम FIIs वगैरह के लिए हम कुछ लिमिट्स वगैरह, फॉरेन बैंक्स वगैरह के लिए लिमिट्स वगैरह कुछ बढ़ा रहे हैं। तो देखिए ऑलरेडी लिमिट्स तो 74% की लिमिट है, ऑलरेडी 49% की लिमिट है ऑन ऑटोमेटिक अप्रूवल रूट, एंड अनदर 25% तो अप टू 74% गवर्नमेंट अप्रूवल रूट में जा सकते हैं। तो उसमें तो कोई बदलाव की आज के दिन में कोई ऐसी कोई बात नहीं है, उसमें कोई चेंजेस मुझे नहीं मालूम ये प्रश्न कहाँ से आ रहा है कि उसको हम चेंज कर रहे हैं। दूसरा उससे जुड़ा हुआ है 15% हम अलाउ करते हैं नॉन रेजिडेंट्स के लिए, लेकिन केस टू केस बेसिस पे 15% से ऊपर भी वो जा सकता है। तो उसमें कोई ऐसा बदलाव अभी अतिशीघ्र कोई भी बदलाव उसमें नहीं हो रहा है। हाँ, हमने ये इस बात ज़रूर कही है कि हो सकता है उसका आप लोगों ने उसको आपने देखा हो, कहीं पे पढ़ा हो, कि हम ये पूरा जो ओनरशिप स्ट्रक्चर है, जो एलिजिबिलिटी कंडीशंस हैं, जिसके अंदर में FFI नॉन रेजिडेंट्स के लिए आज के दिन में 15% है, उस सबको हमको पूरे को एग्जामिन हम कर रहे हैं। वो इमीडिएटली नहीं होगा, उसमें समय लगेगा। ये जो है बहुत डीपर क्वेश्चंस हैं जिनको क्रिकेट की एनालॉजी में जो है 2020 मैच की तरह से नहीं देखना चाहिए। तो वो हम उसको पूरा सोच समझ करके ही क्या हमारे अर्थव्यवस्था के लिए क्या उचित है उसको ध्यान में रखते हुए, क्योंकि बैंक्स में देखिए एक आम साधारण आदमी ट्रस्ट करता है बैंक के ऊपर में, जैसा मैंने एक जगह पे इंटरव्यू में कहा, ही ट्रस्ट्स हिज मनी विद द बैंक्स। तो उस प्रकार का ट्रस्ट वर्दी आदमी, ओनर और मैनेजर बैंक में होना ज़रूरी है। उसके लिए हम किस प्रकार की एलिजिबिलिटी क्राइटेरिया रखें, किस प्रकार की कंडीशंस रखें, उसके लिए सबसे बात करके और उसको निश्चित रूप से हमारी इकोनॉमी ग्रो कर रही है, अर्थव्यवस्था हमारी बढ़ रही है, तो उसमें हमें और अधिक बैंक्स की आवश्यकता है, और उसको ध्यान में रखते हुए जो भी उसमें यदि कोई बदलाव की आवश्यकता होगी तो उसमें बदलाव किए जाएंगे।
धन्यवाद सर। Now I'll request Ms. Sangeeta Mehta from Economic Times to ask her question.
Most of my monetary policy questions are taken away. So I'm going back to the annual report, which was very insightful. It had a lot of data points also. There's one question on the one thing about the annual report where you have said that in FY 25-26, RBI would be considering differentiated regulatory framework for type 1 NBFCs, which are without public funds and non-customer facing NBFCs.
See, it is our policy to have, to as far as possible customize the rules basis the risk profile. And so it is only, in continuation of that particular policy that we have, that mention has been made in the annual report. I'll request DG in case he would like to add something more on this.
No, I think review is done as a regular process, and type 1 is one which doesn't face outside to the system. So we are having a look at the regulations. So that is an ongoing process. We are doing that. That's it.
There would be kind of new guidelines coming for this kind of NBFCs on fundraising. I mean.
No, type 1 typically doesn't have outside liability.
Yeah. So is there any new?
It will be depending purely on the internal resource accruals from that.
Yeah, no, are there new guidelines coming for this type 1 type of NBFCs? That is what I
review and then see what kind of regulations.
It only means a review will be carried out.
Okay.
If at all there is a need, then we will do it.
Okay.
So that's the third part of our regulation making framework that we announced. Let me, I mentioned about two important elements for those, because I answered that in Hindi. I think it is important for everyone to know and understand that we have issued a regulation making framework now. There are three critical elements in it. One, that we will do a public consultation. And when I mean a public consultation, it is not only in letter, let me assure everyone, it's not only in letter, it is also in intent. So that, the important stakeholders, their views, we get all important stakeholders. The second thing is that we will also do an impact to the extent possible. It may be qualitative. Every time, it may not be possible to do a quantitative impact analysis. What will be the impact thereof on the banking system, on the regulated entities, on the customers, on, all the stakeholders. That is the second element. And the third element is that we will regularly review our regulations, directions, etc. because it is dynamic. Policies have to, change with the times. And so it is only, in that context that we are going to review some of these policies related to type 1 NBFCs.
Thank you, sir. Now it will be Mr. Anup from Bloomberg.
Thanks, sir. Sir, Anup here from Bloomberg. Interesting choice of words. Monetary policy is left with very little space to support growth. Does it mean that you would expect fiscal authorities to support rest of the growth and your growth aspirations that India should have? And also, even after all these measures that banks ever...
I believe in doing my work, right?
Right, sir.
And we have done, that bit. And obviously it is expected that, everyone else will be doing, their bit. So that is not something for me to say, right? It's not appropriate. I believe in doing my job, and that's what, we will continue to do.
Right, sir. Sir, one more question. If, despite everything that you have done for banks, they have ever asked for, banks really do not do the transmission, can you take actions? Or what kind of actions can you take?
See, it is... Ultimately, we have said this in our policy statement also, that monetary policy is a necessary but not a sufficient condition, right? So for monetary policy transmission to happen, there are so many other things, including demand, which has to be there, and so. It will depend on the macroeconomic conditions and the demand and the appetite and the demand for credit. Only then, it is the market forces ultimately. See, we have to leave it to market forces. We cannot start regulating that, no, you give credit or you reduce rates. No, you can't do that. It's the market. We believe that our markets are deep, credit markets. There are so many banks, there are so many NBFCs, there are alternative investment funds, now vying, for credit. There is private credit. And so the market forces will certainly, be able to push prices basis demand for credit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment?
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What
Hello and welcome to Profit Buzzers. This is Hiral Dadia. You're watching NDTV Profit, and now we're talking about the big bonanza that has come in from the RBI, and that is what has actually kept the street afloat right now as we speak. Let's quickly look at what markets are doing, because whilst the governor was giving his speech with the announcement of the 50 basis point rate cut and the 100 basis point CRR cut, that's what has lifted the sentiment. 0.9% higher in terms of Nifty 50. We are nearly at the day's highs, but 24,983 is marginal downtick coming in from those levels. Let's quickly pull up Bank Nifty as well as the PSU banking space as well to understand what that trend is looking like. There you go. Absolute outperformance, 1.5% up move. In terms of Bank Nifty, we hit a high of 56,650 in intraday trade. So we're just around 70 points away from there. And the PSU Bank Index also will be interesting to watch out for. 0.7% high. It's interesting to see the chart right now because it did see that blip in between, but after that, an upcycle that has come in. Very quickly, if we can just look at the sectoral heat map and then the contributors before we go to Astha Jain from Haim Securities, who will be joining in as well. But the rate sensitives, there you go. Nifty Real Estate, 4.5% up move, and that's where the bonanza is going to be as well for home buyers. What's going to be interesting is where the push will be. The middle class is where the push will come in. Affordable housing is where the push will come in. So that's going to be a segment we should be looking at. Metals are seeing some smart moves today. Auto also up in trade, 1.5%. What's losing is the defense pack, which is seeing profit booking today, 1.5% downtick there. Pharma under pressure slightly, and FMCG is pretty much on the borderline. The conversation now is growth versus inflation. Though inflation has come down, how sustainable it is going to be and how much the RBI will have to focus on growth is the key question. And an interesting question that was asked by one of the journalists at the press conference as well, that now will the owners be on the finance ministry to manage growth because RBI has done their bit. But let's welcome in Astha Jain. Astha, good afternoon and welcome to the show. Your quick take in terms of stocks that you would bet big on the 50 basis point rate cut and the 100 basis point CRR cut. What would your top picks be?
So on the basis of CRR cut, I would like to recommend some banks in which ICICI Bank, Axis Bank, because now they will get more fund for lending. So definitely it will boost the lending for banking sector. So on the basis of that, we are liking banks and in which ICICI Bank, Axis Bank and SBI are our top pick. Now, with the other things happening, I think real estate sector is looking very strong to us, especially if I talk about like Shobha or Prestige Estate. These counters are looking very strong. to us. Because what we have seen that there was a muted performance in 9 months of FY25 in real estate sector on the basis of not so strong launches. But now as they are getting more and more approvals, so definitely it will give boost to the launches and we will see a good quarter coming ahead. So I think real estate sector will be in a great demand on the basis of the rate cuts which we have seen. And in that, Sobha and Prestige as well as Brigade Enterprises, these are some of our topics.
Thank you for that. In fact, all the announcements have come in as a big surprise, and that was pretty much evident to the multiple guests that we at NDTV spoke to post the RBI meet outcome and asked them how big a surprise was it. Let's quickly listen into that conversation.
I would say I'm definitely surprised. We never had a 50 basis point rate cut, 25. We were not expecting a CRR rate cut, especially when liquidity is so much in surplus. I didn't realize that the RBI will go ahead and do a CRR, which means they were uncertain whether this liquidity can sustain or not. And clearly the stance changed. So I think in a scale of 1 to 10, I would say 8.
Now the policy rate is in neutral, so it's no longer being restrictive of domestic demand, and which makes sense at this point given the significant downside risks to global growth and the vulnerabilities that India's economy has. So I think that 50 basis points to rush a bit quicker to get there, was the appropriate move at this point, even though it has been a bit of a surprise to markets.
There is no need to worry on liquidity. Liquidity is going to be easy, and a liquidity through CRR cut by far is one durable, definitely, and also is a direct impact to banks' profitability. So all of that would mean more confidence from the banking sector to lower rates on the lending side, which is what I think is being attempted here. So I think my answer on a scale of 1 to 10 is a surprise on 10. All parameters, whether it is rate cut, whether it is stance, whether it is CRR cut, I think it was quite amazing.
I think that was a good surprise, though there was 20% people expecting that there could be 50 basis point, and I think they acted upon it. So I think there is a decisive action to support growth, and doing it upfront anyway made sense, because if you are thinking that you want to do it now and 2 months later, might as well do it upfront, right? So that's one part of it.
So that's a surprise answer that we're getting as well. But let's quickly take a look at the top 10 highlights before we go to Ghulam Zia from Knight Frank as well. Firstly, a jumbo rate cut of 50 basis points. Repo rate now stands at 5.5%. That's the first one. Moving on, you're talking about the change in stance, which has now become neutral from accommodative. To be noted earlier, the stance was neutral, and which was moved to accommodative, and now again the reverse has happened. Talking about the FY26 CPI inflation, that is now projected at 3.7% versus a projection of 4% earlier. So a downward revision coming in on the inflation number as well for FY26. Talking about the rural demand and the CRR, the CRR has been cut by 100 basis points from 4% to 3%. So that's on number 4. On number 5, you're talking about the GDP. FY26 growth projection remains unchanged at 6.5%. And going ahead, the rural demand is steady. Urban demand is improving, and that is also going to be one of the key highlights that we should be looking at from here on, taking into consideration the consumption trend that you're seeing, the commentary that is coming in from the FMCG players as well. Let's quickly look at 7, 8, 9, 10, what they are looking like. The price stability remains a key focus area, and that is mainly to maintain the inflation levels from here on. You have the private consumption that remains healthy. That's on number 8. And on 9 and 10, if we can just quickly have those plates, an attractive investment destination is what he's calling India. So the FI flow into the country is what we need to look at. And the stress in the microfinance segment is still persisting. And that is going to be one of the areas the RBI will be focusing on. But now, one of the rate sensitives that come into focus is the real estate space. 4.5% uptick coming in terms of the realty index. Ghulam Zia from Knight Frank joins in. Ghulam, good afternoon and welcome to this show, and a pleasure to speak to you as always at NDTV Profit. Your first reaction, how would you rate the policy, number 1, and was this something on expected lines or it's just a bonanza?
Well, to start with, I believe it's a bonanza because nobody expected, at least from real estate perspective, where a lot of people were seeing that industry is doing so well. These rate cuts are coming in as a straight away icing on the cake. So, in terms of if you're asking me to rank it on the scale of 10, I would say at least 9, if not 10.
A 9, if not 10. So, what is it that why has that 1 point got missed? I mean, what is it that you would have expected?
Well, when that 1 point I'm reducing only for you not to feel that I'm a bit too over exuberant. Otherwise, it should be 10.
Okay. Gulham, taking into consideration the way this will benefit, which are the segments of real estate where you see the benefits flowing in? Because all this while you have luxury, which has been doing pretty well. There was moderation that was seen in low-income housing as well. So how would you break this down now?
Well, you have been too kind with your words. I would say it was not a moderation. It was a recession in the lower end of the market.
Wow.
Practically every developer had fled the mid to low end because the upper end was doing so exceptionally well. So low-hanging fruits, better margins, every developer was in the luxury and higher than luxury market. And that was a big concern. Mind you, the luxury segment has already last a month or two has been showing fatigue. Signs of fatigue are emerging. And in a situation like this, to actually draw the focus of the developers towards affordable housing, this is the best thing that could have happened. This rate cut of 50 bips and effectively 100 bips in last two stunts, the third consecutive ones, and this 100 bips rate cut is something which is going to give a huge boost to affordable housing. And let's not forget, somewhere at the end of 2024, we had the Pradhan Mantri Awas Yojana 2.0 also kicking in. And we were anticipating this to complete that story after PMAID 2 also coming in. So, this is a great situation for developers to start focusing on affordable housing because that is one segment which will get a huge boost with the complete rate cut being passed on as home loan benefit to the end user. With that coming in, the affordable housing segment will get a huge boost, and that's where, because not much of a supply, no developer, that is where the scare is starting. If the demand shoots up, no supply, then the prices may go up. So it's a simple economy. Developers have to start focusing more on affordable housing today.
Okay. So taking that into consideration, Ghulam, if you have to split it up between the companies which are into real estate, how many of them who were into affordable housing have shifted focus, taking into consideration the recessionary phase that you mentioned about? And do you think there is that availability in terms of looking at affordable housing projects? Because the cycle is not a short cycle, right? By the time you decide, you plan, it's a longish one. So how long do you think will it take for that system to regenerate itself?
Well, to answer the first part, most of the listed players or known developers have already left this segment. The latest one was Mahindra, which I read in the newspaper recently. Mahindra Lifespace also said that they want to focus on the mid to upper end. And before that, pretty much all of them have stopped delivering or focusing on affordable housing. Now coming to the second part. Even today, if they start, exploring options to get into affordable housing, it will take nothing less than 3 years for them to reach that stage where they will be coming anywhere close to execution side, because at least 1 year I would set aside for identifying right land parcels and then negotiate, close the deals. Another 2.5, 3 years to get permissions, etc. For it to come and hit the market where your RERA approvals, etc. are mandatory, minimum to 2 to 2.5 years is what it will take for the inventory to start coming in, for the end user to come forward and book. So this is a typical time frame that you needed, and hence I'm a little disturbed that in last so many years, last 4-5 years, the complete shift to upper end of the market has actually done a huge disservice to the overall market, with not anybody remaining there in the affordable housing segment. So even if today they change their position and start relooking at it, they'll take at least 2 to 2.5 years to start taking bookings in affordable housing segment.
Okay. And how big a chunk of the overall real estate portfolio will now that be, and which cities will it be concentrated to you, according to you?
Okay, first of all, let's talk about what is the share of the pie. Typically, I would say at least 1/3 will be affordable housing. There was a time, say about 4 years back, around COVID. Actually, COVID made a lot of changes in the real estate business. But prior to that, 2/3 was affordable housing and 1/3 was mid to upper end. It completely changed in 2022, 23, 24. And now it is only 1/3 on affordable housing. And that is where what my concerns have been, that we had to work a lot to bring it, to revive it. Now talking about cities, well, affordable housing requirement exists in pretty much every city. You would be surprised to note that Mumbai does maximum amount of sales in below 50 lakh category amongst the top 8 cities of the country. And that is, you may find it surprising, but with Mumbai infrastructure improving, lot of remote areas are connected to the city in a much better way in last 2 to 3 years. And this is where a lot of affordable housing is coming up in the satellite towns around Mumbai. And that is where we need to focus on in other cities as well, whether you're going to NCR or Bangalore, Hyderabad, Chennai. Affordable housing locations are always very clearly identified. You just have to get back into action and start execution.
Okay. Ghulam, another question I have is from a developer's perspective, taking into consideration a 100 basis point CRR cut that has happened. Do you think it will directly impact in terms of their margins and profitability as well, because lower finance?
You know, the reason, look, simply, let's dissect it. Simple argument from a developer's camp would be that if I'm selling, for example, in Mumbai and NCR at least, an apartment for 100 crores, I will have to sell 100 apartments or more in affordable category to do just one transaction that equitable of upper end of the housing. And that is the reason why they all were not so keen to do affordable housing. But now, when they realize that the upper end is already saturated, they need to broad base their business and go back to affordable housing. This is where they have to land up. And that is where now the question is, with that improving the segment size. So this is actually affordable housing is more the FMCG of real estate. You need to be there. You can't just run away and only cater to the super luxury higher end. Even if it is sounding like FMCG, you have to be there, because for growth, you need that to be a part of your overall portfolio. The way it was, if about 4 years back, 2/3 of your entire real estate housing market was affordable housing, nothing has changed. You have to get your focus and attention back. And most of the listed players who are working in affordable housing very actively today have to revive their interest in that segment.
So that's an interesting one to watch out for. But thank you, Ghulam, so much for breaking this down for us and getting us those views. So that's the word coming in from Knight Frank as to how affordable housing will probably pick up from here on as well. But just very quickly, I want to address a few of the flashes that the RBI governor has spoken about with regards to where IndusInd Bank goes. If we can just bring that one up. Episodes like this don't bother us if they are far and few between. That's what is coming. So far, the stock, in fact, has spiked to the day's highest levels. That's the word coming in from the RBI governor. Let's see what are the other, lines that are coming in on that one. IndusInd Bank has taken enough steps to improve accounting practices. Now, that's what RBI is indicating right now. And no public timeline for approval for small banks. No, that's not on IndusInd Bank, but those were the two lines that we had right now with regards to where IndusInd Bank goes. We will try getting more details on this as Vishy is over there. In fact, we also spoke to Pranav Gunlapelle, Senior Research Analyst at Bernstein, to understand how the transmission will happen in terms of banks and on their financials. Let's first quickly listen into that.
The loan growth had started to drop. It dropped from 16 percentage points a year ago to 10. So I think both the actions, the CRR cut as well as the larger than expected rate cut, is a way of saying that we need loan growth today and we don't want to wait for 6 months or 12 months before the new LCR guidelines or anything else kicks in. So I think it's a statement that there is urgency to bring back credit growth, which is now dropped to sub 10%. So it is good for the banking sector, and the assurance of liquidity will hopefully let the lenders, lend a bit more aggressively.
Right, so that's with regards to the impact on banks. In fact, our colleague Vishwanath Nair also posed an important question to the governor during the press conference about how the rate cut will boost GDP growth. Let's first quickly listen into that.
GDP forecast, which has not changed, the estimates have not changed at all. What is the growth boost that you're expecting from this cumulative 100 basis point rate cut that you've afforded? and thereby would there be a revision for FY26? And the second part is on the stance itself. I'm asking you again, in the past there has been criticism that the stance is more or less becoming meaningless because we kept saying withdrawal of accommodation, but it was a prolonged pause. Is this a way to then bringing it back into relevance?
So your first question is what impact it has on growth. Obviously, it has a positive impact. It will be very difficult to assess as to how this transmission from monetary policy to the credit rates and then to the real economy, how that transmission happens. As you are aware, it takes minimum of, going by history, 6 to 9 months. We would like, of course, to expedite it, but we'll see impact of this only in the later half. So for this year, in terms of numbers, especially when there is so much of an uncertainty, we would not be in any position to give you how it will, to what extent it will impact the GDP numbers. Your second question is on, I can't actually speak about the past, what has happened, but our policy will be very, very clear. Whatever we are saying, we mean it, every bit of it, and you will continue to experience that.
Right. In fact, let's quickly understand what the RBI governor actually mentioned in terms of IndusInd Bank. Firstly, normally we don't comment on individual banks, is what he said. And he's saying that IndusInd Bank has taken enough steps to improve the accounting practices. In fact, episodes like these don't bother us if they are far and few between. Those are few of the key, that's the few of the commentary coming in. Apart from that, you had DG Swaminathan on RBI also. He said that there is no systemic impact arising from the IndusInd Bank issue currently. And the priority so far is that customers do not face any loss. In fact, IndusInd Bank issue should settle down very soon, and they will be monitoring the banking system as a whole. The governor has said that IndusInd Bank's MD CEO has resigned, and that should be good enough for the bank and the system. And the law will take its course on the IndusInd Bank fraud. They won't fail in their duty if they have to step in if required, and it should not be speculative on the IndusInd Bank fraud. Those are the key commentary, that is the key commentary that's coming in from the RBI on IndusInd Bank, and that's what probably is boosting the sentiment as well. But the stock has actually climbed up to the day's highest levels with gains of 4.5% coming in there. But let's quickly slip into a short break. Up next, we'll be talking about all the promoter stake sales that have happened in the month of May and analyzing as to why this is happening. Pranav Haldia will be joining us shortly. Please stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in?
RBI surprises the market with a double bonanza, cuts interest rates by 50 basis points and CRR by 100 basis points. However, changes stance to neutral. And the MPC outcome enthuses the Wall Street. Nifty touches 25,000 while Sensex trades above 82,000. Nifty Realty continues to build on gains, leads the sectoral winners. And all Nifty real estate constituents in the green. The rate-sensitive sector is up 4% for the day. Brokerages continue to be bullish. Bajaj Finserv makes some smart moves, gains over 3%, and this is after promoters Bajaj Holdings and Investments and Jamnalal Sons offers 1.94% stake in the lender worth 5,800 crores. Welcome back. You're watching Profit Buzzers. Now, another topic that we're discussing today, apart from the RBI bonanza, is what the promoters are doing. They have been absolute on a selling spree in the month of May. Let's quickly understand what's happened so far. If you can look at the quantum of sales that has happened, we've nearly seen promoters and insiders who've sold over 43,000 crores in the month of May itself. So that's the number we are talking about. It's promoters and insiders to be noted. 43,000 odd crores is what we've seen in the month of May. Now, what's interesting to look at over here is against the promoter selling of 43,000 crores, you have DIIs and FIs who've gone ahead and bought worth over 80,000 crores. So you can understand the math that comes in over there. Talking about the three biggest deals that have contributed over here, it's 86% that have contributed to this kind of a sell number of 43,000 crores. It's Bharti Airtel, Indigo and ITC. These are the ones which actually witnessed the largest insider trades. Now let's quickly understand what Nifty has done so far. Nifty in the month of April or in the month of May, from April lows is up almost 14%. So you can understand the kind of gains the promoters have made. Now, May also saw the largest DII buying since Jan 2025. In fact, if you talk about the FIs, a net number of 11,773 crores is what we saw. Whereas if you talk about DIIs, 67,000 odd crores was the kind of buy number coming in the month of May. So that's the split in terms of the FIs, DIIs as well. Now, let's quickly look at the large deals that have happened. We already mentioned about Bharti Airtel, Interglobe Aviation and ITC. But apart from that, names like K Fintech, JSW Infra was in that range of 1,200 to 1,800 odd crores. Apart from that, if you talk about the other large insider trades, if we can look at the next plate, PG Electroplast, Gravita, TD Power, Ami Organics, Paras Defense. These have been in that range of 200 to 1,100 odd crores. So these were the top ones that we are talking about. Lots more of after this as well that has happened. Now, just let's quickly look at the key deals in May. BAT has sold 2.5% stake in ITC at 413 rupees per share. Singtel actually went ahead and sold 1.2% stake in Bharti Airtel, and this was done at 1,814 rupees per share. And you had the Rakesh Gangwal family, which went ahead and sold 5.7% in Indigo. This was done at 5,301 per share. Talking about few of the key deals that have happened in the month of June as well, let's just quickly highlight that. Aptus Value Housing. This week, around Westbridge sold 12.5% stake. Apart from Aptus, let's look at the other ones as well. If we can just skim through these. Indigene, Karail sold 2.74. What's interesting with this one as well, the kind of names that have come in to purchase Indigene have been very interesting. Aditya Birla Fashion Retail is another one where Flipkart Investments has completely exited with a sell number of 5.99%. And you have a Tata Technologies as well, which was interesting, but TPG went ahead and sold around 2.09. Alchem Labs, let's pull up that one on the screens. Jayanti Sinha sold 1.42% stake as well in terms of where Alchem Laboratories go. So these have been few of the large names that we've been looking at. Let's see which is the other one. Keynes Technologies, your promoter Ramesh, who went ahead and sold this number 0.97% stake, and this was also a big number in terms of the sale that has happened. So these are the few large deals that we've been talking about. IEX, Dalmia Cement has sold 1.12% stake as well at 201 per piece. So let's understand now what is happening, why the promoter stake sale. In fact, we have Pranav Haldia also joining in. Pranav, good afternoon and welcome to the show, and a pleasure to speak to you as always. My first question coming to you is, all of this data, thanks to what we've got from Prime database as well as to very helpful in terms of understanding the entire scenario. What is your first takeaway in terms of why these kind of selling that we've seen from promoters?
Firstly, thank you for having me. I would like to start by saying that this is not a panic sign. A lot of times when promoters are selling, it is considered to be, a panic on the street. But I would urge investors to not look at it in that way. While promoter buying is always considered to be a positive sign, promoter exit can be for a whole wide variety of reasons. So when we know that promoters are buying, it signals confidence in the company. But when promoters are selling, you've seen even in the deals that you just mentioned, it can be for a whole wide variety of reasons. One of them, of course, can be to take advantage of valuations and to take money off the table. But you've seen in the past that in a lot of cases, promoters, sell in block deals to either reduce the debt or to invest in other businesses or for personal expenses also. It can also be due to strategic reasons and also to meet with regulatory requirements. So as we know that there's a minimum public shareholding requirement which requires all promoters to dilute down their shares to 75%. And in fact, what I would like to add to the data which you showed earlier, I think it's pertinent to add the OFS SE component to this as well, which is the offer for sale through the stock exchange mechanism, which was launched by SEBI in 2012 to essentially help promoters meet the minimum public shareholding requirement. Adding that, the calendar year 2025 figure already is at about 55,000 crores. Just to put this in perspective, in 2024, you had promoter exits of 1.4 lakh crores. That's including bulk and blocks and OFS SE. And 2023, you had 1.35 lakh crores. So this is a significant uptick that you're seeing over the last 2-3 years. And of course, what is required for all these exits to happen is a market where there's enough liquidity, which is available. And domestic investors, as we know, whether it's individual investors, but also the domestic institutional investors, largely, as a result of the SIP money that they are getting on a month-on-month basis. And recently you've also seen the foreign investors coming back to the market. So I think, there's been a confluence of there being enough liquidity from domestic and foreign investors and these promoters exiting as well.
Okay, so Pranav, that's an interesting point that you make. So from here on, a lot of these deals, as you mentioned as well, a lot of good names from an FIDI perspective have entered in terms of the buy number. If we're looking at the sell side of it, but if you have to look at the buy side of it, good names coming in. Would that mean there is confidence in those companies? And how would you expect an investor to read into it? Because what is important is what the retail investor understands in the end.
Well, absolutely. I think, over the last 3-4 months, you've, had a bit of an overhang going to the geopolitical situation. Also, ever since, you had a change in presidency in the United States, there have been a lot of announcements which have taken the markets by surprise. The tariff issues, of course, have been there. I think, easing of all of those issues has resulted in the foreign investor money coming in as well. Domestic investors, like I said, SIP flows have been strong, and irrespective of the volatility that you saw over the last 6 months, they, on a month-on-month basis, 25,000-30,000 crores is coming in with the mutual funds. So, these funds also need supply of paper to invest in. You saw this last year in the IPO market as well, wherein a lot of IPOs, you had tremendous subscriptions. You saw even from foreign investors, in fact, that while foreign investors were exiting from the secondary market, they invested heavily in the primary market. So, like I said, that, from the supply side, you've had, several of these promoters diluting their stake and, supplying the paper to the market. And from the demand side, both domestic and foreign institutional investors coming in. I think, to answer your question in terms of what retail investors should take away from this, I think, looking at some of the names which are coming in, just the overall institutionalization of the market that you're seeing, I think bodes extremely well for the Indian market going forward.
Okay. And taking into consideration what's happening even, like the larger deals. I mean, I don't want to know your comment in terms of individual companies, but you look at a BAT which has exited ITC. If you have to look at Bharti Airtel as well as Indigo, would you weigh them in the same fashion like the smaller ones where a lot of institutional holding has come in? How would you weigh both these kind of deals?
Well, I think, the large deals that you mentioned have, very own specific reasons for the exit. BAT really is not a promoter, but more of a, strategic investor in ITC. Even in Indigo, you've seen the exit because of, strategic reasons. So I think they should not be mixed with, some of the other action that you're seeing in the smaller companies.
Okay. And from here on, do you think this could be a trend which will continue for some time now? Because this is what is happening in the month of April, May. I think, if I'm not mistaken, if I have to look at 2025 as a year, I think little over 70,000 odd crores is the kind of selling that has happened by promoters. Month of May itself is little over 40,000 odd crores. So is this just because it's the end of the year and the beginning of a new year, or is this a trend that you think probably would continue?
No, I think this primarily got to do with the revival in the market that you've seen over the last couple of months. Like I said, because of political considerations easing, and also because of tariff concerns easing. Unless, of course, there is any negative event, I expect this to continue. In fact, what we've also seen in the past is that activity in bulk and block space is always a sign for activity in the primary market as well. And on that side, as we know, there's a huge pipeline of companies which are sitting with SEBI approval, or which are filed with SEBI for approval. And, we are expecting several of these issues to start hitting in the second half of this year. One additional point which I would like to make is, through these block deals, you've also seen a lot of private equity and venture capital investors exiting. And, sometimes a view is taken that, again, that's not a good sign in case PE investors are exiting through IPOs or even through blocks. What I would, urge here is that, private equity and venture capital investors exiting is a sign of a maturing capital market ecosystem. Like you see in the Western economies as well, the initial funding in companies is provided by angel investors and venture capital investors, followed by private equity. And, once the company grows to a certain stage is when it comes to the primary market. So that's a similar trend that you're seeing pan out here in India as well. And we have to realize that unless we provide an exit to these investors, they will not have the risk capital to again invest in the next set of companies.
Got it.
Cycle, which is very important for a developing capital market like it.
So absolutely crucial. Pranav, a quick answer in terms of the RBI rate cut, 50 basis points, CRR cut, cheaper capital. Any impact you see in terms of the IPO markets?
Well, IPO markets always follows the secondary market. And I think the announcement this morning, you can already see the impact on the secondary market. So I think it, further adds to the positive sentiment right now. And I see it as a good harbinger of primary market activity as well in the next few months.
So a lot more fundraisers that could happen now, which were on the back seat.
Yes, that is expected.
Absolutely. Okay. Thank you so much for joining us on the show and sharing your views. So that's Pranav Haldia, Managing Director at Prime Database Group, joining us to discuss about the promoter stake sales and what the RBI actually means with regards to the IPO market, a bonanza that could be in the offing for the investors there as well. But coming back to the top news, the RBI has gone ahead and cut 50 basis points, and that's a mega rate cut coming in there, and a cash reserve ratio cut of 100 basis points. My colleague Vishwanath Nair is at the RBI headquarters where the press meet with the RBI governor just got over. Vishy, before I come to you on anything else apart from the takeaways, my first question is, let's talk about IndusInd Bank, because that was one of the big announcements that has come in from the RBI on a story only we have tracked closely. What have been your key takeaways? Because the stock has at the day's highest levels.
Right. So as far as IndusInd Bank is concerned, the RBI's statements are very clear that a lot of events have taken place at the bank. The bank has taken certain action. Well, the CEO specifically has resigned, citing moral responsibility. Of course, the board is looking for a suitable successor to the CEO and the deputy CEO, so that position is going on. The RBI's message is clear. Their primary focus is to ensure that the customers of the bank do not face any losses, and the RBI believes that they have been successful as far as that is concerned. They have ensured that there is a lot of stability financially at the bank, even though leadership transition might be happening. In fact, some questions were asked of the RBI governor about this in this in-bank story, and of course NDTV Profit has been in the lead in reporting on this story. But I'll request my viewers to listen into some of the comments that the RBI governor has made.
The MD CEO, has resigned, and it says, for taking, moral responsibilities. So I thought, that should be good enough. You see, we do not comment on individual banks. As I said, system as a whole, banking system is very, very robust. And I also mentioned, that these events or episodes, I would call them, these will happen. They should not bother us too much, as long as, they are far and few between and limited. I think the bank has taken enough number of steps to put their to improve their accounting and other practices.
Of course, our priority is always to ensure that no customer is put to any loss or any inconvenience. That is something which has been ensured, and there is no systemic impact arising out of these kind of episodes.
So that was the word coming in there. Vishy, now let me come back to you in terms of the key takeaways we've already spoken about in terms of the commentary, but now from the press conference as well, if you could sum it up for us as to what are the highlights.
Right, so a bunch of questions were asked about, of course, the mega rate cut, the 50 bips rate cut, as well as the 100 basis point cut on the CRR front. And the RBI governor has pretty much repeated what he has already said. We at NDTV Profit asked him about the growth impact that is likely to come in because of these measures, and he's saying that at this point in time it's difficult to assess what exactly the growth impact is going to be, but overall you will see a net positive impact on growth. Currently the RBI is estimating a 6.5% growth for FY26. That, and alongside that, of course, the RBI governor has also said that our aspiration is between 7 and 8. So this will go in some way in supporting that. But alongside that, the RBI governor is making very, very clear that the room for further support to the economy from monetary policy side, that might be limited, and that's precisely why the stance for the Monetary Policy Committee has been revised to a neutral stance. This question was asked, of course, why neutral, and what is it? What does it indicate? And he's been very clear that our communication to the market has been clear from the get-go. We said that yes, there is room to cut rates. That's why we moved from neutral to accommodative back in April, and now we see that there is limited room to cut rates, so we are going back to neutral. We will take a call on future rate cuts depending on how data evolves, and we'll keep a close watch on that. Now, alongside the core monetary policy related questions, some of the other questions that he answered was specifically related to the gold loan norms. If you remember, just a week ago, the government put out its feedback for the RBI's draft norms on gold loans. There, the RBI governor is saying that we have taken into account all of the feedback, and the final guidelines should be out soon, later today or maybe on Monday. And likely, it is going to happen this way, that loans up to 2.5 lakh rupees will likely be exempt from any credit appraisal process. In fact, small loans will also get a higher loan to value ratio. That means corresponding to the value of the gold, you will get a higher loan. So currently for other loans, it's set at 75%. In case of the small value gold loans, which is loans below 2.5 lakh rupees, the LTV ratio is set at 85%. And this includes the principal, of the loan as well as the interest. So it will be 85% of all of this. And alongside that, of course, a couple of other regulatory measures that have been in the works for some time. In fact, he's responded to questions about foreign ownership. He said that a review is on and we can't really say much more than what has already been spoken, which is that we are looking into it and we have not really decided on what kind of action we want to take going ahead. So all of these things will become clearer as time goes on.
Thank you, Vishy, so much for getting us these details. So that's with regards to where the policy goes. But let me also get in Akshay Bhagwat. Akshay, taking the kind of strides that Bank Nifty and the banking names are making at this hour, what would your top picks be and what would your strategy be? Akshay, you're on mute.
Good afternoon. So, post the policy, the momentum has been pretty strong. RBI has given a booster shot, and the move is pretty evident by the way Bank Nifty has shot up or given a breakout from the trading range, which was pretty much prevalent since the entire month of May. Now, if I were to pick up two stocks which are the best technical setups in the current market scenario, one would be an HDFC Bank. HDFC Bank has been in a range for long, and from the private banking space, this stock has been pretty resilient in terms of the support base of 1920, which this stock has set up. So in all the way the stock is setting up, I think 2040 is where the stock should aim for from a momentum perspective. And the other bank you can look forward is State Bank of India, the PSU bank, which is again confined in a range. But the way the trading setup is, the way the bank components are moving, this bank is also setting up for a breakout above 825, post which 850, 860 targets are in the making. So SBI from the PSU space, HDFC Bank from the private space would be my two top picks from the banking sector.
Yes, that's interesting. Moving on, you've seen one of the biggest stake sales of the season that's coming in, where two promoter entities of financial services major Bajaj Finserv have sold nearly 2%. On the back of the block, you're seeing gains also on this stock. The stock was lower when we started off the trade, but I think the RBI commentary is what has given Bajaj Finserv a boost as well. What would you do, Akshay, with the Bajaj Finserv?
Yeah, definitely agree. The RBI commentary has been more of a booster shot for many of the financial services space, and especially if you look at Bajaj Finserv, technically it has recovered from its support zone. The immediate support was the swing high of 1940, 1950 zone. Although the day started lukewarm, but the recovery has been pretty significant. Supports have been respected, volumes have been strong, and the way the setup is, in all likelihood, 2150 is the all-time high levels, and that should be again be tested in the short-term scenario. So 2150 is a stop or resistance or a trading target, but the way the longer-term or the medium-term setup is, for bigger targets are can be looked forward to in Bajaj Finserv. With all probability, 2250 is in the making.
Okay. Another stock that I want to talk to you about is IRDA. Again, that stock is in focus on the back of the 4,500 crore QIP. Stock is down around 0.5%. How are you looking at IRDA in terms of charts?
Well, see, on IRDA, the longer term charts are still strong, but the problem is in the last 4 weeks, the stock has been completely stuck in a range around 170 odd mark. Volumes are thin, so clearly the trading action is not chasing this name. I think in the broader market perspective, I think there will be a time when IRDA too will perform well, but right now it's in a consolidation or a sideways phase. So I think with the support of 140, you can continue to hold this stock. Give this stock some more time, probably a couple of months more, and 225 would be the target you can look forward to.
Okay. Akshay, quick one. We are running out of time. Azad Engineering, 7% equity has changed hands. Stock down 7.5%. A good buy currently.